There's a flurry of signing FTAs with countries that you want to build an long-term economic relationship with, and where interests are complementary. And at the same time, there are geopolitical disruptions that you talked about that are happening. So from a business standpoint, there is a lot of uncertainty, and business and uncertainty are generally not good friends. So when you have that much of uncertainty, it does impact your ability to plan long-term investments. So a general sense in a lot of these things is, let's do 60-70%, but let's not go whole hog. Let's wait for 3 to 6 months. 3 से 6 महीने में क्या हो जाएगा? And then let's see what's going to happen. So I would say bullishness on India continues. The Indian resilience story is very clear. I think there is a tremendous sense of optimism, especially in the way macroeconomic factors have panned out, the way inflation, interest rates, some of the proactive moves made by the Reserve Bank of India. The corporate balance sheets are very strong, debt equity ratios are low. People are trying to see how they can leverage capital markets more actively, raising capital, demerging, disinvesting, acquisition. So there's a lot of that activity happening. So overall, and they know that eventually growth will be rewarded. And for achieving growth, there is capex, and there is healthy competitive tension on that. So when a lot of people say that private sector capex is not happening, in my view, last few years will bear this out. Private sector capex is happening. The posture is right. The only challenge is that because of these global uncertainties in the last 3 to 6 months, and hopefully we are towards the tail end of it. You know, as things settle down, people will get a clearer picture to when they were to model tariffs, rates and everything, they'll have a better perspective to say what it will be and where will it be. So I think that's the, if I look at it, that's the narrative that's playing out. Coming to the the first part of your question, but on the US FTA, I think India-US FTA is a strategically important FTA. I think what the Commerce Minister said doesn't come as a surprise to me at all. I must compliment him, his ministry, other ministries, other wings of government. I think they have spent inordinate amount of time to understand the issues, challenges, opportunities of each and every sector. Whosoever has wanted to engage with them, I think they've engaged with them. Whether it's a large company, whether it's an MSME, whether it's small sectors like even hand tools, or gems and jewelry, or bigger sectors, you know, auto, EV, chemicals. So I think they have had conversations, and through CII, I think a lot of these conversations have been facilitated, and we have seen the level and details that they have gone into. And it's very clear that they wanted to fully understand what are the opportunities, what are the challenges, and how Indian companies will see to it. And then on that basis, try and see what's the best trade deal that can happen. Now, they will not be all winners in this. They will not be all losers in this. But I think as long as in aggregate, India is benefiting from this transaction or from this trade deal, I think industry would be very happy if it happens, because industry doesn't want to be imposed with a tariff of 26%. And especially in, you know, because not so much of the tariff, but when you compare with relative competition with other countries that are competing to invest in the US, then I think it becomes a bit of a challenge. But industry would only be comfortable with it if it's in the broader interest of India. And I think the same, and I think what the Commerce Minister has said has been very reflective of the tone and tenor of the government, and I think the industry is fully with it.
But do you think that India Inc. is prepared for both both outcomes? First, of course, no deal, which could trigger 26% of retaliatory tariff. The second, of course, if an initial or first tranche, you can say, will happen, that may or may not advantageous to, you know, industry. You think the preparation is there?
Yeah, I think, listen, I think people do their own scenario planning. And some of the things are more shorter term things, tactical things that companies do. And I think I'm sure Quite a few of them are preparing for that. And some are more longer term structural changes that happen. And that I think people will want to find out what actually plays out. As far as the short term fixes are concerned, definitely people are involved. I think a lot of people have also understood what the opportunities are. They've also understood what the competitive landscape is. So to that extent, definitely there is work that's going on. And there's also a reverse side of it where, US companies would be looking at trading more with India, investing more in India. And there are some sectors where the competitiveness of Indian companies may not be as much because of some natural advantages as US. So to that extent also, those companies also, if the trade deal were to be signed, will have to be prepared for how they deal with a situation where tariffs suddenly come down by 15-20%.
But sir, some of the contentious point which has emerged so far in the ongoing talks is on the points like agri, on the points like dairy products, GM crops. So do you think that the government stand, which is quite firm on these aspects, you think it's a right stand and they should continue with that and of course in the national interest?
Yes. I mean, I think, agri sectors like dairy and some of the others that you mentioned are very sensitive. Large parts of Indian population are dependent on this. So to have a broad sweeping change is something that's not desirable and probably not implementable as well. So, and definitely government will not do anything which is not in the broader interest of people. Now, there could be some areas where through quota restrictions or some controls, you could open up some of the areas where the competition may not be that direct or there may not be that much of overlaps. But you ensure that the checks and balances are there and there are QCRs that are there because of which the total import doesn't exceed a certain quantity, doesn't exceed a certain value. Now that they may do to ensure that both the sides benefit.
Correct.
And there is no one who ends up losing in the process.
But at the same time, there are discussion around that the WTA stand which India has kind of proposed. Out of curiosity, I'm asking, when the deal is already ongoing, there is no conclusion so far. Of course, the stalemate continues. But then, why you think India has, saying WTA that we are also preparing for retaliatory tariff action?
And this is part of strategic negotiations. It's very difficult to comment on that. But I think whatever I would say, as I've told you, whatever interactions I have seen, I think they're thought through, very calibrated, and various senior members and officials of government are involved in this. So
But inferences could be drawn that there could be some changes in the earlier thought process as far as deal is concerned. Maybe it's not going the way it should be. So that's the inferences we can draw.
I'm not in the
Moving on.
business of speculating on this. When it happens, I think most important thing is when it happens, I think it should be something which I'm sure it will be beneficial to India, beneficial to both the countries, and in the interest of the overall economic growth in India.
So moving on the China story, we have seen a lot of tightening on the stand of China in terms of first putting export restrictions on rare earth and specialized fertilizer. Now we are seeing some recalling happening as far as Foxconn is concerned, which may have a very large impact on the manufacturing sector. How are you seeing these development and how this will impact the domestic industries?
I would say that there have also been moves where some positive moves on the India-China side also. There was some talk of the daily flight resumption, some visits by leaders of both countries. So I think there are moves that have happened on both sides. And why I'm saying this, Srini, is that India-China is a very complex relationship. And it has multiple layers to the relationship. Why something happens here, the reason may be somewhere else. The reason may be that there's some other negotiation happening somewhere. Reason maybe there's some other event happening. Something else happened somewhere. Or someone else. So it's like it's a bit like playing carom, where you hit and where it goes is a different game. So our only, as CII, our only feedback on this is we really follow what the government is saying, what the government is doing. They have a much better picture of what the multiple moving parts are, and as they advise and as they look at it, I think as CII we follow that. So yes, you're right that rare earth issue is a real issue which will impact some industries, particularly auto and EV. I'm not that much aware on the Foxconn issue. What's the gravity of that, and can that be done? Can it be replaced and everything else? I think I'm sure that should be probably resolvable. And again, as I said, that action may be because of some other action somewhere else. The rare earth kind of issues or other areas where supply chain resilience is something,
and also where we are very dependent
vulnerable on China, or could be any other country. Yeah, I think we have to be very clear that in this world, in the current world order, to have supply chain vulnerabilities is not exposes you to certain risk. And a lot of these issues are not short-term fixes. One needs to work very hard in a very structured way to eventually accomplish that. So I think government and industry need to work together in these areas to try and see how we ensure that future supply chain shocks are limited to the extent that they can be managed, and the investment in terms of capital, resources, policy changes, incentives, technology partnerships, PLI, other things, whatever needs to be done should be done at the earliest.
Well, we are, I'm sure government is focusing on the external headwinds, but in-house also some reforms seems to be, taking some shape here. So in terms of GST, everyone is now talking about the rate rationalization. In fact, Minister also said, Finance Minister, that this is the time to go for rate rationalization, and that could be perhaps one of the agenda in the upcoming GST Council meeting, as and when it happens. So one of the important aspects is to, eliminate the 12% GST rate, to move towards 3-tier structure from the current 4-tier structure. What's your take on that? And you think this is the right time to rationalize the rates to kind of, push consumption, which is showing some sort of drag?
Yeah. So I would say, at least my view is that GST has probably been one of the most successful reforms that the government has done. And also probably one of the most complex, because, you have states, center, everyone involved. The legislation has been there for 8 years. There has been a lot of changes that have happened. Technology has played a very critical role in the success of GST. And I think it's really helped in the formalization of the Indian economy. But as the GST matures, as we have more and more technology, as we learn more and more with the experiences, I think it's the right time for next version or GST 2.0. From CIS standpoint, we have recommended 4 sort of broad items under which the government should be looking at reforms. One is, of course, as you said, rate rationalization. I think that's important broadly in the structures that you talked about. Also, movement of products from one category to the other. May not necessarily, some products in the luxury segment may not necessarily be luxury and would be there. And at least the CI's view is that in the medium term to long term, economic activity will pick up so that the revenue neutral rate will not vary that much. And secondly, for strengthening of the Indian economy, the bottom 30% has to be really strengthened. And for that, at least products and services that are going into that, the rate should be as minimal as possible. So 5% or whatever that rate is, so that the consumption basket grows, as you rightly said. There is some fatigue in some parts from a consumption standpoint. So at least this gives that, like the government did on the income tax for middle class and everything. This will give them a good boost. The second area, of course, where apart from rate rationalization, which we think is important, is GST was formed to say that the credit is smooth. You get credit for everything that you do, and it's really tax on value addition. And the least, and as few breaks you can have, is better. So there are two areas where there are some parts of the taxes that were not subsumed in that. I think we have to see if some of them can be subsumed, not all of them, but some of them, particularly real estate. And the second is, the ITC, which is the input tax credit. I think that's really, in some industries, if you're doing capex and others, it's really ballooning up, and it creates a lot of cash flow constraints, especially if you're doing large capex. So and in some, because of inverted duty structures, others, ITC number is high. So I think those are some of the things that we have highlighted. Third is, very importantly, the entire audit process has become very cumbersome, especially if you're a company that's working and operating in 7 or 8 different states. Same assessments being done, same positions being challenged, dual views taken, no standardized SOP for doing audits. Information that's available digitally is not procured digitally, but you have to send large physical copies. So things like that, which we've got from our members, and we have requested, and I think there's been very engaging conversation that's happened with Ministry of Finance. And likewise on the fourth was, some proceduralities and areas of proceduralities that we can look at. I would say that a lot of this also, as we look at it, has to happen at states. So as CII, we are trying a lot through our state regional councils to also have ongoing discussions with the state finance ministers, sensitizing them of some of these issues, so that hopefully when the meetings happen, there is, because the states have an equally important role to play in making some of these changes happen. So I think, so I agree. I completely agree with you that on rates and others, it'll be a good time to simplify and also look at things which can create greater demand and therefore greater economic activity in the country. And hopefully that economic activity will more than make up for the loss in revenue because of lower rates.
And with GST being a very important, high frequency indicator for the entire economy. So on that front, I wanted to ask that we are doing well in terms of, revenues. So far, things are fine as far as high frequency indicators are concerned. Consumption is also picking up, not in a great pace. But going forward, if this situation continues, I'm talking about the external factors, external headwinds, do you see that it will impact the economic growth, the band which the government has given between 6.3 to 6.8%? Do we see ending up in the lower band? I
feel very confident. The high frequency indicators that CII has been analyzing, 34 of the high frequency indicators across demand, production, monetary supply, fiscal, and also global, and also sort of correlating that with global uncertainty and global uncertainty indexes. We feel pretty confident that the growth should be in the 6.4 to 6.7% range. Also, as I said earlier, I think the balance sheet of the country is very strong, economic resilience is very strong. And I think if we reform at a good pace, I see no reason why incremental opportunities will not come. So I feel reasonably confident that we should be able to achieve the numbers that have been stated.
Okay. Not clearly whether it's on the lower side or the upper side of the band, because we have
very hard to
wide range.
No, but at least the way we looked at it, we had suggested 6.4 to 6.7%.
Okay.
But in a country like India with global uncertainty, I think to get down to the last decimal point is difficult.
It's difficult.
Yeah.
So, quickly on the point, sir, that India is working to build its own AI ecosystem in line with DeepSeek. Then we have, talks are ongoing on having its own consultancy giant as well, like in the line of Big Four. What's your view? What's your assessment on that?
Yeah. So I would say that the work that India has done on AI is truly remarkable. I think setting up the framework for India doing their own LLMs, government supporting them, getting some very good leaders to be involved in that, building the AI infrastructure, providing that at subsidized rates to some of these companies and organizations has been very good. I think there is a lot of work happening on skilling. I think that's something that we need to accelerate. We are also seeing early adoption of AI to make India more competitive in the usage of AI. And we are seeing that in technology industry, in financial services, and other areas. And I think the GCC part of the world, where India can be the use case capital of the world, I think that is also something that is very achievable. And we are seeing that GCCs are playing a very active role, including when I look at the EY, other professional services firms, consulting firms, they're also using the GCCs, leveraging them to be the pillar or the platform where a lot of AI usage that's happening globally is being done.
So my last question on the point, which is slightly different from the external headwinds or the in-house reforms which we are looking at, on managing these Gen Z's culture, the young talent to manage that is a growing challenge for corporates, for industries, etc. What's your advice to India Inc. in at this scenario to manage these young talent, especially when there are a lot of talks around work-life balance?
Yeah. See, as CIS president, and this interview is in my capacity as CII president, that's something that I generally don't want to comment on. I think there is a, by and large, I would say, getting talent and getting high quality right talent is a source of massive competitive advantage. And I would say most companies spend a lot of time, good companies spend a lot of time in trying to ensure that they're able to hire, retain, train, engage, motivate their talent. Every industry is different. Challenges are different. I'm sure in journalism, you're not the right model for work-life balance, is my guess. So every industry, every universe, everything has its own challenge. And in whatever engagement I have had, I found companies now more and more conscious and viewing HR as more and more of their competitive advantage.
Thank you, Mr. Memani, for taking out time for us. It's always been a pleasure to talk to you, and your insights. It's always valuable to us.
Thank you very much. Thank you so much. Thank you. Pleasure.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
जनता के पास सवाल ही सवाल है। जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed.
Choppy day of trade on Dalal Street. Nifty hovers below the 25,450 mark. Sensex meanwhile trades flat around 83,360. And Godrej Consumer expects EBITDA margin to improve and Dabur sees recovery in urban demand. Beverages though take a hit due to unseasonal rains and an early summer. And it's the aroma of airport coffee and quick bite counters heading to Dalal Street. Travel Food Services 2,000 crore IPO opens for subscription today. How does copper get extracted? NDTV Profit's exclusive peek into India's largest copper mine. Stay tuned for more on Hindustan Copper's Malanjkhand mine in Madhya Pradesh. Deal or no deal, the India-US trade deal hits a rough patch. Commerce Minister Piyush Goyal says that an FTA is a two-sided trade and India stands firm on red lines. A very good afternoon to you. You're watching Markets at 12. And I'm your host, Shreyansi. Let's take a look at some of the key counters that are buzzing away in trade. So it's a choppy day of trade Whether you take a look at the Nifty or the Sensex, quite a similar picture coming in for both of these benchmark indices. Let's quickly take a look at some of the sectoral losers, because there's a longer list there of sectoral losers. So it's media, defense, metal. Those are some of your sectors that are lagging behind in trade, along with IT, pharma, finance, also on the back foot. What's doing well, holding on to some amount of resilience at this point in time, is FMCG, oil and gas, as well as rural and consumption sectors. But with that in mind, let's take a very quick look at some of the losers from within the Nifty 50 pack. So you're looking at a Tech Mahindra down about 2% there, Eternal as well, BEL, Hindalco, Ultratech Cement. Those are some of your top losers from within the Nifty 50 pack. And on the flip side, when you take a look at the gainers from this pack, it's consumption pack, in fact, that's doing pretty well. So whether you look at HUL, Tata Consumer, some of those counters buzzing away up anywhere between 1 to about 3% thereabout. In trade, Eicher Motors, Geo Financial Services, as well as ITC also doing well. But tell you what, let's take a look at Eternal, because that's the one to look at. The company, in fact, also announced a CEO change for its food delivery business. How's the street taking all of this? Mahima joins in with the answer and more on the new CEO.
It's a part of their business strategy as to appoint CEO only for 2 years. So the past CEO, that is Rakesh Rajna, stepped down because his 2-year tenure ended on 6th of July, and Aditya Mangla is now appointed as the new CEO for the food and delivery business for 2 odd years. But to your question, basically Aditya Mangla has been working with this company since March 2021. So I think 2 years, he already knows the business well, and maybe 2 years he can bring change in the entire food delivery space. Now, why the churn? The announcement follows earlier reports of Ranjan's planned exit, and plus the tenure got ended on 6th of July. And Aditya Mangla, just a brief about him, he's currently the head of product of food ordering and delivering already. So it's a step up for him, and he's been with Eternal since 2021. So before Eternal, he also has had multiple product and marketing roles across startups and tech-driven companies. Now, just to give you as a perspective of food delivery business, that's almost 45% of the total revenue for food for Zomato. The 3-year CAGR has been around 30% growth, and food delivery business currently generates around 1,700 crore of adjusted EBITDA on an annualized basis as well. In terms of what brokerages are saying about this leadership change, interesting note by Morgan Stanley. They say they've of course maintained overweight with a target price of 320 for Eternal. They're saying that leadership changes at senior level could have a mixed effect on sentiment. Zomato has continued to gain market share despite of multiple changes in their top management and leadership roles, and management changes at senior levels are usually met with mixed emotions. Pessimists may raise concern around multiple leadership changes, but optimists may look at it as a change of strong culture, and of course high performers will get a chance to grow the business as well. And lastly, they've also said that there has been stability at the founder level, and that's what counts actually. So this is the overall view of what's happening with Eternal.
Alright, then thanks Mahima for getting us a lowdown on that. So that's the overall view. Brokerages are quite bullish, especially Morgan Stanley, because they're maintaining an overweight, but the stock is taking it on the chin, down about 1.9% thereabout. From stocks to watch to, in fact, from that particular stock to some stock-specific news, then let's move on. Let's take a look at Chennai Petroleum, because that's the one that's in the spotlight as the company shows its dominance in the sector with a year-to-date change of 22%. We have Somi joining in with some more updates when it comes to this one.
Chennai Petroleum in the last 1 month has outperformed its peers. If you look at the gains that we have seen in the last 1 month, it's around 19%, while for other oil marketing and oil refining companies, it's anywhere between 7 to 9%. And we are talking about MRPL, HPCL, IOCL and BPCL. So why Chennai Petro has outperformed in the last 1 month is because of higher gross refining margins. Gross refining margins, if you look at the Singapore gross refining margin, which is the Asian benchmark, in the first quarter has averaged at around $5 per barrel, which is the highest that we have seen in the last 7 quarters, that is since Q3 FY24, when it was around $6.7 per barrel. And so far in the second quarter, it's averaging around $5.1 per barrel. Now, what is this gross refining margin? This is what an oil refining company earns from processing every barrel of crude into usable products like diesel, petrol, ATF and other products. Now, why Chennai Petro has outperformed in the last 1 month? Because Chennai Petroleum is a pure play oil refiner, unlike other oil marketing companies like Indian Oil Corporation, BPCL and HPCL, which also have have the marketing segment in their unit. Along with this, Chennai Petroleum produces more of high margin products like diesel. Now, if you look at the production slate for Chennai Petroleum, the average diesel production from Chennai Petroleum is around 50%, while the average of other oil marketing and oil refining companies stands at around 45%, which is clearly 5 percentage points more for Chennai Petro. Also, ATF, which is again a high margin product, Chennai Petroleum's average production is around 10.3% of the total production, while for other oil marketing and oil refining companies, it stands at around 8%. So because of this also, Chennai Petroleum must have been one of the most preferred in the oil marketing and the oil refining space. Now, why diesel margins are higher? Because the impact of EV adoption is less when it comes to diesel specifically, and also there are supply constraints in the market which have kept the margins for diesel on the higher side. Now, why investors are not preferring oil marketing companies here? Now, one of the reasons is because the marketing business. Now, because of the volatility in the crude oil prices, the marketing business also sees a lot of volatility in its earnings, and that could be one of the reasons. And second is the LPG subsidy losses which have been looming over the oil marketing companies, but not Chennai Petro, given the fact that it is a pure play refiner. Now, MRPL is also largely a pure play refiner, but why MRPL is also not among the preferred? Because it has few retail outlets, which brings in the marketing exposure. Then apart from that, it is relatively higher debt and capital expenditure plans as compared to Chennai Petro, and also the dividend payout for MRPL is lower compared to Chennai Petroleum. And if you look at the GRM sensitivity as well, Chennai Petro clearly stands out. With every $1 per barrel rise in the gross refining margin, Chennai Petro's EBITDA increases by nearly 26%, while that of MRPL, IOCL, BPCL and HPCL increases anywhere between 8 to 24%. But given the sharp rally that we have seen in the share prices of Chennai Petro, if you look at the consensus target price, it is largely at par. 773 was the consensus target price, while Friday's closing price was also at around 774, 772, which means the return potential is not much, but that is the case with every other oil refiner and oil refining companies. For IOCL also, the return potential is just 4.5%, BPCL 3.2%, for HPCL it's flat, and for MRPL it's negative 10%. And if you look at the valuations, yes, valuations are expensive. In fact, Chennai Petro is one of the most expensive oil refining and oil marketing company. 12.9 is the 12-month forward PE for Chennai Petro, whereas the 5-year average valuation stood at around 9.8 times, and that is the case with all the oil refining and the oil marketing companies. But Chennai Petro stands out as it is the most expensive oil refining company currently.
All right, and thanks, Amit, for that very detailed analysis. So it does look like the stock is a little bit on the back foot, at least on a daily basis, 2.5% downtick thereabout coming in for Chennai Petro. But a year-to-date gain is what you're looking at. Those are some of the key triggers when it comes to this counter. But let's move on. Let's take a look at some of the other counters that are buzzing away in trade. So you're looking at an HUL, Tata Consumer also, that are doing quite well for themselves at this point in time. Even Godrej Consumer, that one is up over 5%. As we speak, Dabur as well, that's also buzzing away. And you do have updates coming in, Q1 updates coming in that have already started trickling in from some of these FMCG companies. Let's take a look at Dabur and Godrej. In fact, Mahima is standing by with a detailed analysis.
So I'll start with Dabur first. In fact, I think the reason why Dabur is buzzing today is because of the commentary that is coming from the management. That is that they've seen sequential recovery in demand with an uptick in volume in the urban areas. And this is not something that any of the FMCG companies so far have come out and said. Secondly, consolidated revenue is expected to grow in low single digits. So that's a slight disappointment. Profit growth is expected to be marginally lagging the revenue growth, and beverage portfolio was overall impacted because of unseasonal rain. Otherwise, home and personal care division is expected to perform well, driven by oral, home care as well as skincare categories. Healthcare and juices are expected to see a good double-digit growth. Dabur Honitus is expected to see a 40% growth, so that's a big positive. And international business is expected to post a positive double-digit constant currency growth, is what the management has said. Now, in terms of Godrej Consumer, good set of business update here. Standalone business to deliver high single-digit value growth is what they're saying, so that's a big positive. Standalone business will see mid-single digit underlying volume growth. Standalone EBITDA, however, in Q1 is likely to be below company's normative range, but is expected to improve going ahead, is what the management has said. Home care business likely to see double-digit growth, so that's a positive because home care has been under pressure. Personal care business is expected to grow in value, but in low single-digit terms, is what the management is saying. But in terms of guidance, they've maintained their guidance of FY26 delivering mid-high single digits underlying volume growth and high single-digit consolidated revenue growth as well. So this is with regards regards to where Godrej Consumer stands, but with respect to where Jubilant Foodworks stands, consolidated revenue growth of 17%. I think what I liked was same-store sales growth, which came at 11%. But yes, revenue growth has been slowest in the past 6 quarters. So I think that's something that the street is not liking. Turkey, like-for-like growth stood at 2%, which is a positive, and that's a good thing. Company expanded its network to 73 new stores this quarter. So that's with regards to where Jubilant stands.
Alright, and that's where Jubilant Foodworks also stands. But take a look at Senco Gold and Nykaa as well, Mahima, because even those counters are buzzing away in trade, especially Senco Gold.
So I'll start with Senco. In fact, Senco has had a good set of numbers. And of course, this is on the back of rising gold prices as well. Overall retail revenue growth at 24% and total revenue growth at 28%. Gold prices, however, increased 5% on QOQ basis and 32% YOY basis. So most of it is because of the kind of rise in gold prices that we see. But same-store sales growth at 19%. Company has launched 9 new stores this particular quarter, and diamond jewelry has registered a growth of 35% in terms of volume, and this is on account of a higher base as well. Although diamond jewelry is not more than 10 to 11% of the total portfolio, old gold exchange stood at almost 40% of total revenue, and they're seeing consumer demand for 14 karat and 18 karat more because of the rising gold prices. In terms of Nykaa, as they had guided, Q1 overall net revenue growth has been at lower end of mid-20s. Gross merchandise value is expected to be even higher in terms of over that mid-20s mark. And the beauty vertical is projected to have higher mid-20s growth overall. Net revenue growth of fashion vertical is expected to improve sequentially, is what the management has said. So this is with regards to where Nykaa stands. One more update from the retail gold space came out, that is Kalyan Jewellers. That's also an interesting one. Overall good revenue growth of around 31% and same-store sales growth at around 18%. Middle East revenue up almost 26%, and Candor has also seen a good revenue growth of 67%, of course on the back of lower base as well. So this is the entire pack of consumption on the back of their business updates.
Well, absolutely, Mahima. That just about sums it up. The entire pack is buzzing away in trade, and we got you just the reason. But moving on, then NDTV Profit got an exclusive peek into Hindustan Copper's Malanchkhand mine in Madhya Pradesh. In fact, our correspondent Aishwarya Patil went 450 meters underground to bring you the inner workings of a copper mine and how copper is extracted. Let's take a look.
We're in the heart of the Kanha National Forest in Madhya Pradesh, and NDTV Profit is headed to India's largest copper mine. Here's a sneak peek. I think it's about time my copper bottle finds its origin. The ore extracted from the Malanchkhand copper mine is brought to the crushing unit, where of course over 7,500 tons is processed per day, from that coarse ore to fine copper concentrate. We've reached about 410 meters inside the mine. It's now time to get off and take a look at what's happening here as well. We're over 400 meters inside the Malanchkhand copper mines. So you were showing us something which is very interesting, and how everything is excavated. So if you could identify.
I just wanted to mention you, see how the copper is shining and this shine makes it called as a fool's gold. And this comes in these white rocks which you are seeing is quartz. It's very hard and it consumes lot of energy in crushing, milling and beneficiation to segregate this thin seams, very thin veins of copper from this hard rock, and that's why we call it as a hard rock mining also. So these operations are very difficult. As you have rightly mentioned, we are below more than 400 meters, around 450 meters from the surface. So the extraction mining operations are one of the most difficult. With these geomining conditions, you are seeing the water seepage, you are seeing this, and with these geomining conditions, my people, SCL team is mining copper from this mine.
talk about this open pit, and it's a great view from here, but tell us a little bit about Malanj Khand. It's your flagship pit here, and among the properties that Hindustan Copper owns, this one is the flagship and the largest copper mine that India has also.
Thank you, ma'am. In fact, I'm thankful to you that you have visited the mine, and you were down 400 meters below the surface just now, and just now we have come up. This mine was started in 1982, and now this has produced roughly more than 82 million tons of copper ore, and now this open cast has been stopped, and we have converted this into an underground mine. And the underground production last year was about 2.73 million tons, which was the largest from a mine. And we have got 3 mining sites: Khetri in Rajasthan, Malanj Khand in district Balaghat in Madhya Pradesh, then Ghatshila mines in Jharkhand. The best thing of this Malanj Khand is, although it is remotely located, but the engineers, the mining, the team at Malanj Khand has done a wonderful job in converting this. They call it as a seamless transition from open cast to underground. That is a big achievement for Team HCL, basically the team Malanj Khand, I should say. And copper, as I always say that it is a divine metal, and the metal which you use in EVs, artificial intelligence, cables, wires, it comes from a depth of more than 400 meters down the earth, which we have just witnessed.
What is the life of Malanj Khand? Because it's your flagship, we would like to know how many more years do we have until you can fully mine at full capacity?
The reserves and resource which we have will have, as of now, gives us a life of more than 50 years. With this rate of production, say 5 million tons, more than 50 years. And we are continuously drilling. There are 2 types of drilling operations. One is depth drilling, another is definition drilling, which we do inside. That also adds to our resource and reserves. So Malanj Khand mine has got a life of more than 50 years.
So we did have an opportunity to look at your 2030 target and milestone as well. If you could talk about, along with that target that you have for Malanj Khand, which is about 5 MTPA, right?
5 million tons.
Yes. So if that is your target in terms of revenue, capex, what are you aiming at until 2030? Where do you think you will stand at? And how are you looking at funding this capex also across the board for HCL?
See, the capex which we have planned for coming 5 years is 2,000 crores for overall HCL. And majority of that 70-75% will come down to Malanj Khand, roughly. And as far as production targets, as I mentioned, it will be roughly about 5 million tons, say for 30-31.
Only for Malanj Khand?
Only from Malanj Khand.
And overall HCL would be?
It will be about 12 million tons, because we are going to start our closed mines in Ghatshila. That will add to our kitty. Then Malanj Khand itself is expanding. Khetri is also expanding. So if you, in totality, if you join all these 3, capacity expansion as well as reopening of closed mines, will be about 12 million tons in 30-31.
So, in terms of revenue, do you have a target for 2030 overall for HCL?
No, that's difficult to take
because
because see, my revenues, they depend on the copper prices, which are quite volatile in nature, and that I will not comment on that.
Right, but we are looking at the Maharatna status, which is why I asked that question.
We are going to vie for Navaratna first of all. My all team members who are here, whom you have met, have got only one thing in focus. We have to become Navaratna as early as possible. Next year, most probably, we'll be applying for that, and we qualify for all parameters. The only one parameter, that is the salary and wages part, is slightly alarming. We'll take, because if we enhance the production with the same manpower, your cost per tonne comes down. So we are focusing on that.
In terms of expansion, sir, any contracts that you have signed with any other companies that you have already partnered with? 2030 expansion ke liye, what kind of partnerships have you made?
All my contracts as far as running a mine is concerned, they are in place. They are already, and even if they expire within this, say between 5 to 6 years, within the period, we'll plan it accordingly. Normally, we plan 1 year in advance when our contract is going to finish.
as far as the deal pipeline or say not deal pipeline per se, but bid pipeline is concerned, Rajasthan, you're looking at few of the bids as well. So if you could talk a little bit about that.
We are not looking only at Rajasthan. Any blocks which are coming from Ministry of Mines also and respective states, Rajasthan, MP or Odisha, not only copper but even of critical minerals, we are going to vouch for them. We'll participate in the auctions.
So you're looking at beyond producing beyond copper also?
Yes, ma'am. It's copper and critical minerals.
Since you're speaking of critical minerals, considering what's happening with China and the rare earth mineral situation, how do you look at this whole situation, and how is India poised to benefit from this?
In fact, our government is taking sufficient actions on this. The roadmap is being prepared. All the companies are in search of this rare earth and critical minerals. We are even searching in new proposals also. GSI is drilling quite fast, bringing up some blocks of rare earth and all that. So we are moving ahead. The government is taking good actions on this.
Sir, just on timelines for Navratna status, when do you expect to achieve that?
See, exact timeline I can't mention, but now we are ready for that. That's a big thing. Na? See, if you are ready for applying that itself is the first step. The second step is that you have to maintain the continuity of what you are doing, isn't it? You have to maintain your status, excellent or very good at least, and then all the parameters which are there in the revenue operations and all that, whatever parameters have been assigned by the government of India, you have to maintain. Then automatically things will move in a positive direction. So at least we should start that. Rather, we have started. If you ask any employee of Hindustan Copper, they will say now we are trying for Navratna.
Wishing the team all the best for that. Moving on, if you could talk a little bit about India's import dependence on copper. Although we are sourcing about 70 to 80% from Hindustan Copper itself, and Malanjkhand being the flagship one, there are certain gaps. How do you aim to address that and ramp up further from here?
See, as you might be aware, we have got only 2% of the global reserves in India. Obviously, Malanjkhand produces 70% of our production, but thing is that we are able to fulfill only 5% of the country's need. Rest is being imported. So the only option left with us is to ramp up the production as fast as possible so that this 5% can enhance to 6%, can become 7%. And we are moving in that direction. You have seen it with your own eyes. You have seen the things are in places, and we are moving ahead in that direction.
So by 2030, import dependence should come down to how much?
See how much it can come, because your demand will also increase. It's not that the demand remains constant. Maybe that we are still 5%, or maybe we become 4% also if your demand increases sharply. It all depends on the demand of the country's need.
So partnerships, recent ones if we speak about, and the MOU that you've signed with Codelco, if you could talk a little bit about that. We did have the opportunity, thanks to you, to meet the leadership team as well yesterday. Knowledge sharing and manpower is what you have spoken of. Talk to us a little bit about what's happening there.
In fact, I'll just like to explain more on that. This MOU with Codelco has happened with the full support of my ministry, particularly my secretary, my Ministry of Mines. They have backed Hindustan Copper like anything. In fact, in reopening of all the mines, the support which we need from the government we are getting. So I'm thankful to the government of India. They're pushing it up, and these MOUs, in the morning I said, they are divine alliances for Hindustan Copper, because copper is a divine metal, number one. With this, we will explore more and more copper within our leases beyond a depth of 1 kilometer. Codelco is going to help us in that depth exploration. Secondly, they are going to train our people, bring in global practices. That will start within a month or so. And then the third one, which I mentioned about the MOU part, will form a joint venture company and all that. That is a little bit not very clear. That will be clear only when we have further discussions with Codelco.
But our teams from India will also be visiting Codelco in the future, and there are few more mines that you will review. So what's the expectation through?
Presently, we have visited there only one mine, that is El Tenete, about 100 kilometers down of Santiago. They have got many mines in Chile. So yesterday evening they had already made a request that people, they will send it, we'll chalk the program, we'll discuss with the ministry also, we'll prepare a roadmap for that.
So you spoke about the demand picture. If you could, at this point and at this juncture, manufacturing, EVs, semiconductors, a whole lot of things, and you also mentioned AI, that copper will play a critical role in this kind of development that India is looking at, especially making in India. What's the demand picture looking like?
See, exact demand, I won't be able to say, but you see, whatever the demand is of the country, we are able to fulfill only that 4-5% which I mentioned earlier also. But this AI, the enhancement of AI, coming up of data centers, they have suddenly increased the demand of copper to a greater extent.
So when you mean we will look at other rare earth expanding in other areas beyond copper, what other rare earth or minerals are we talking about?
See, rare earth minerals are a group of minerals which have already been classified. It can be...
but specific?
No, nothing specific. Whatever we may get, we'll mine it out. Because that is a strategic mineral, na? So it doesn't depend on the return or anything. We have to mine it out at any cost. In fact, I would like to tell you, these OB dumps which you are seeing here, we have tested them also, whether there is anything in that also. In fact, we tested them, and whether there is any other mineral other than copper also. Right. My unit did it last year itself, and now every quarterly we are testing these OB dumps and my places of working, my tailings. We are continuously testing if we get anything else apart from copper.
So since NDTV Profit is a market-driven channel, one question that most investors want to know also is that HCL has been kind of delaying its target over the years, last couple of years. That's been a concern for shareholders and those who have invested in the market. What's your response to that?
See, the reason was that we could not reopen the mines. Now the clearances are coming. You know very well, Jharkhand government is supporting us. They have given the lease deed extension for those two mines. The second step to get the clearance from Forest Department. Third one is EC. And the fourth one is lease deed. These are all moving in. Right. Earlier, we could not get the statutory clearances. Now we are on the path of getting these statutory clearances. This you know from the media also, from my statements also. Government, the Ministry of Mines is helping us like anything. They are pursuing it at MOEF level, state level, everywhere the Ministry of Mines is with us. So things are now moving. That's why I can say, see, if these mines could have been reopened in time, we could have added. Because opening up of a new copper mine takes 10 to 12 years. But if you reopen a closed mine, immediately you can get the production from that. That's why we are betting big on the Jharkhand mines.
Hope the message reaches the shareholders. So one final question. Private players for a very long time have been eyeing HCL, even Vedanta for that matter. A lot of times they have hinted at looking at HCL as probably a stake or an acquisition as well. What has been your view on that, and have there been such talks in the past for private players to step in, such as Vedanta?
Ma'am, as I said, copper is a divine metal. Government is supporting us at all steps, I should say, from statutory clearances till start of mining operations. And as far as those things, I'm not fully aware of that.
Is what brings home the big money for Hindustan Copper. Copper concentrate of 27% is the star ingredient that goes into the final product, the illustrious metal of copper. This is Aishwarya Patil from the Malanchkhand copper mines in Madhya Pradesh with our VJ Vishal.
All right, and thanks Aishwarya for getting us that very interesting conversation. So ready for Navratra status, that's the word coming in from the management of Hindustan Copper, who are also outlining their plans when it comes to the 2031 capacity expansion. But with that in mind, we're all wrapped up on this edition of Markets at 12. As we wrap up on the show though, let's go across and listen in to the word coming in from SEBI Chief Tuhin Kantapande talking about reducing weekly expiries. Also says that they would take any proper action only after proper data analysis. Let's go across and listen in.
उसके बारे में भी मैंने बोला है कि हम लोग वॉचफुल हैं और जैसे ही डेटा आगे वर्कआउट होगा, डेटा को देखेंगे, उसके हिसाब से हम आगे के निर्णय करेंगे। इस समय इस तरह की कोई मंशा नहीं है, लेकिन अभी शायद अब हमारा डेटा आज हम शायद वो डेटा भी निकालें जो हमारा 3 महीने का क्या रहा है, जो एनालिसिस हमने वाइट पेपर बोला था वो भी आज हम जारी करेंगे।
That's huge. That is a biggie. It's out of
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की
Hello and welcome to NDTV Profit. You're watching Profit Buzzers. This is Hira Latia. Let's quickly take a look at what markets are doing at this hour. A somber day of trade because clearly it was about India-US trade deal, and now that the deadline has been delayed, I think there is some bit of nervousness that is coming in. You can see that kind of volatility, but we're trading absolutely flat right now. We've hit a high of around 25,489. What's going to be interesting is if we see a close above that 25,600 basis on a sustainable basis during the week, then there is a probability of some bit of an upside that could be coming in there. Let's quickly pull up Bank Nifty on the screens as well and see what that is doing, because last week there were divergent trends between the private banking space as well as the PSU banking space. There you go. You did see some bit of a recovery, and again, it's gone down as we speak. If you can have the PSU bank index as well as the private bank index to see the trends on either of them, there you go. PSU bank still trading in the positive with gains of around 0.2% coming in there, and the private banking space drooling under pressure, so the divergence does continue. Let's quickly look at the sectoral heat map, and then we'll look at the broader markets as well very quickly. FMCG, the top gainer, that's only because of the business updates that have come in, and what's interesting is it is giving you a trend that there is that positive number that could be expected in the first quarter. Oil and gas also trading in the positive. That's because on the way OPEC has gone ahead and increased output, and that will put pressure in terms of crude prices. The band that everyone is looking at is $60 to $65 per barrel going ahead. Apart from that, consumption, you have rural, MNCs, PSU bank index are the ones which are in the positive. What's ruling under pressure is media. Defense, again, starting to see profit booking. IT is under pressure as well. In fact, you'll have all the IT numbers that will start trickling in towards the end of the week week as well. So TCS, Infosys, Wipro, all of them, that will be in the limelight. Metals as well is down around 0.6%. Let's look at the mid-cap and the small-cap index, and then we'll quickly run through a few of the counters because HUL is in the limelight. Both of them mirroring a similar trend. You have the mid-cap index, which is down around 0.2%, and the small-cap index, which is down around 0.4%. In terms of individual stocks, if we can have the heat map of Nifty 50, and then we'll see a couple of individual names because that will give you an idea. There you go. HUL, I think 3% up move. Mahima is also with us. Mahima, interesting. HUL, a 3% up move, first time in a couple of months. And I don't know if this was a warranted move as well, right?
Absolutely, and I think it was a warranted move because it's been very long since any particular brokerage has upgraded this particular counter and has come out with a positive note about HUL. So for me, it was a clearly brokerage of the day for sure, because the interesting part what I found about was the valuations part that the note was talking about, that there's compelling risk to reward right now in the making, and that's something that that intrigued me. And with that, a lot of consumption names buzzing along with that HUL name. There's Bajaj Consumer doing well in trade today.
Tata Consumer,
there's Tata
Nifty
Consumer,
50.
There's Godrej,
ITC,
there's Dabur, ITC
all of
doing
them.
well. And in fact, Dabur was interesting one because they said they're seeing recovery in volumes in terms of urban markets, which is unheard of since the past 4 odd quarters. So,
and to add to this, if you see in terms of broader markets, two stocks that come to my radar right now, if you look at a Relaxo footwear, that stock is seeing some great moves. JP Power, that's another one as well, which is seeing some interesting moves in terms of today's session. Let's just pull up that one. There you go, 8 to 9% kind of an upside there. You have Balaji Mines, Godrej we already mentioned, Equitas ruling under pressure, Deepak Fertilizers under pressure, Endurance and Aparis Defense. All of these are down and about. But let's talk to one company which is now going to enter the secondary market from Monday, and the IPO has just opened today. We're talking about Travel Food Services. Joining us in the studio, we have Varun Kapoor, CEO and MD, and Vikas Kapoor, CFO at TFS. Welcome to the show, gentlemen, and always a pleasure to speak to you at NDTV Profit. When we talk about TFS, we're talking about a proxy to the Indian aviation growth story as one. And two, I think TFS has not been a household name because people didn't really know about what a TFS does. But now, just on the verge of becoming a household name with retailers coming in and participating in the IPO. A quick one in terms of the initial response that you've got from the anchors. And secondly, a quick answer to what does the company do for the benefit of the viewers?
Right, no, I'd love to know. Thank you for having us on the show at NDTV Profit. It's our pleasure to be here. So yes, no doubt, a big step for us, going for a listing. We've been actually as a business for the last 16 years. But yes, going for the public markets is a big step for us as a business. So TFS, what we do very simply is we operate in the aviation sector. So we have two areas, travel QSR, which are your restaurants and airports, and lounges. These are two key areas that we operate in as a business. Our business has grown quite well since we've been there, even the last few years. And we're in an industry, no doubt, that is seeing a lot of growth. And I think part of this has been, some of the levels, both of these sectors with the passenger growths that you're seeing in India and expected over the next 10 years as well. And in terms of the way, we spoke about, you asking Hiral, and if you look at I think the faith that we hope that investors have in it. We had our anchor book close. We rightfully asked on Friday. We had some great names join us part of that journey, which we are embarking on. Some of the leading sovereign funds globally, including leading FIs and some of the best and top mutual fund houses in India. So I think we, as a business, at the start of this journey, are very excited to go down it, no doubt.
Right. Taking into consideration now in terms of the way business is, the kind of names that have come in as well. What is the vision that you have in terms of TFS? Because growth has been good. The kind of, from financial perspective as well, if you see from FY23 to now, is that something that you will be able to maintain from here on? Or how is the trajectory looking like?
So in terms of growth, we have seen the last 2 years, coming out even out of COVID during a challenging period. No doubt the aviation industry has truly, even before that, and now more so, embarked on real growth. See actually consumers, the way passenger growth is very strong. So our numbers, as you'd seen, been around last 2 years, approximately a bit over 25% growth in terms of revenue. And just probably while, talking a bit about our numbers, but just maybe the industry as a whole, looking at that, we see the growth over the next 10 years of passenger growth as an underlying element expected to be about 9 to 10% over the next few years. Coupled with that, the airport travel, QSR and lounge industry particularly is expected to go about 20%, just the industry itself. And that's the opportunity ahead of us, aside from obviously gaining market share in those areas which we would focus on business. I think the industry itself over the next 10 years is expected to have a 20% CAGR. So I think we're in very fast-growing industry and in a superb country, as we all believe very aggressively that it's the right place to be in, no doubt. So I think all of that coming together surely puts us, hopefully, a great runway ahead.
In a sweet spot, probably.
A sweet spot, hopefully.
Yeah, absolutely. So you said 20% growth in the industry is the CAGR that you're seeing, right? Just want to get a sense. There's this entire new debate that has come up that now what banks are doing is they're trying to remove the middleman when it comes to lounge services, right? And they're directly partnering with the lounges itself. So a middleman is completely eliminated going forward, maybe after a given point of time. Just want to get a sense as to whether you've actually seen that happening in your business, and if yes, how do you think that will aid your overall top line as well as going ahead your profitability as well?
Yeah. So maybe talking a bit, and Vikas can as well jump in terms of numbers as well. And where we've seen what's happened very much in our industry is, we work with multiple partners, the lounge business particularly, I think which you're referring to. While we have the travel QSR, we run restaurants and airports. On the lounge side, we work with multiple different lounge access partners. These could be airlines, these could be credit cards, card networks, banks as well, and other lounge access programs that are there in the market. So a wide variety of partners we tie up for the consumers coming to our lounges. And what we see is that we ultimately are the players who build the lounges. We operate these lounges, we manage it, we construct that entire piece is done by us as a team. So the consumers come to us through these various different partners and they avail the lounge services. And we see that being, those tie-ups being long-term, many cases actually going direct and tying up with us directly, many of the banks and credit card networks as well. And only that, what we see is consumers who come to lounges. At the same time, we have the offering of the travel QSR as well. So able to actually cater to consumers depending on time of day. You want to access a lounge, we have that offering, constantly upgrading. You have spas, you have other value-added services, part of that experience. Hopefully, your viewers would have been at one place that had some of the buffets, which we constantly look at changing and creating excitement around. But equally, you go to the restaurants in the airport. Constantly new brands coming in. Some of the ways the airport operators today, I think, truly are probably the best in the world, in terms of what they're doing. So, that's where it plays, and that's how we see this opportunity play out as well.
So Vikas, if I come to you, let's talk a few things in terms of numbers. We are talking about travel QSR, we are talking about the lounge business as well. Between the two, when you talk about this business, it's usually labor intensive to some extent. And that's the major expense that you have to think of, taking into consideration the partnerships that you already have in place with airports. Where are you seeing the juice coming in between the two businesses? And where do you think you would be focusing your energies from a business perspective?
So, thanks. As a business, our concentration is on improving our financial metrics, but at the same time ensuring customer delight. Okay, so it's never at the cost of the customer per se. Now, when you look at our unit economics as well as the way we operate is because we operate a large real estate, we get economies of scale in the back of the house. Our kitchens are common, both for the travel QSR and the lounge spaces. We have stores, central commissaries at the airports, which allow us to cater to any customer demand at any given point of time. Means something as simple as a delayed flight. The demand for food, the water being there is something which is not known to anybody who would not be operating in this space. But we know that the moment a flight delay has happened, you are suddenly going to see a 6x demand at your unit. So how do you capture that demand? How do you ensure customer satisfaction? Because it's a very touch and feel business. If you look from that angle, it's the emotional part of the business. You don't have water at an airport, it suddenly raises all kinds of decibels within the ecosystem. So that's what we tend to focus on. We always ensure that whenever we are bringing in new brands or new concepts into the lounge, that is what the customer enjoys, and that's what gives us the stickiness in our business from that perspective.
Okay, so what percentage of the revenues will keep coming in from travel QSR and how much will come in from lounge? And will that help you maintain your margins? Because there was a point in time where margins have actually improved from 29% to a 32% in FY25, right? And we've also seen that TFS deliver a 35% in FY23. So what will take you back to that 35%?
So our margins tend to be a range-bound margins predominantly, because what happens is as you bring in new units as well as this, there is a time when they kind of start purring at the same level as the rest of the business. So yes, your margins move within the range-bound, but that's what we have now built as a science within the business in terms of ensuring that yes, how do we go about hitting those thresholds, and I believe going forward also we should be able to replicate our past historical performance from that perspective.
Okay, and is it seasonality as a factor that comes in, because now is the time where you know, I mean, when you're an unlisted company, you're talking about all of this from a yearly perspective, right? Now a seasonality factor will come in where retailers will want to know as to what's happening on a quarterly basis, and if the expectations are set right, then there is no surprise that comes in. So how do you factor in that aspect in terms of business?
So there is a bit of seasonality in our business, but the seasonality is something which can be normalized when you look at it on an annualized basis, in the sense because there are certain periods wherein people would be going back to home during the festive seasons. There are times when there are vacations. Now with so many avenues in terms of business travelers traveling, so there is a broad normalization which does tend to happen, but there is a small factor of seasonality which tends to happen also at the same time.
Got it.
Interesting. What are your expansion plans with respect to where your domestic and international expansion plans are? Just want to get a sense of breakup right now as to how much of your revenue comes from domestic and how much comes from international, and do you think that margins in the international business are better than that of domestic business?
Right. So in terms of our focus from a growth point of view, you know, we see no doubt the story for us, I think in the near future will continue to be India as a story, and it will continue to be the Indian aviation, because just in terms of the industry growth expected at 20%, I think it's up to us to be able to cater to that. You know, itself that takes the effort. So the industry is growing great, and at the same time we are focused on gaining market share at all points in time. You know, that would be. So I think a combination of like-for-like sales growth is there, just our existing contracts, as more consumers, more passengers are traveling, but also new markets. So you're entering a new airport, a new terminal, creating new outlets. That's very much part of the journey. But in addition to that, the international piece, you mentioned, you know, there's a lot of opportunity there as well. We've gone recently to Malaysia and Hong Kong over the last few years. It's been a very positive journey for us. So therefore, we will look at the APAC and the Middle East as market. So APAC, a small example, you know, APAC is currently a 1.5 billion market for lounges. We see that, for example, expected to be about a 3.6 billion market in the next 10 years, a 12% CAGR there itself as well. So APAC and Middle East as well are markets we see as an immediate primary focus for the lounge opportunity to grow globally. And in addition to that, we have SSP, who are strategic partners in the business. We're leveraging those relationships. You know, they're present globally. You know, those type of areas we believe put wings under the opportunity of the international as well. So we've been successful in these two, but much more we believe in a growth opportunity as well there.
And where does your net debt stand right now? Because right now the IPO proceeds will be completely offered for sale. So where does that stand, and what are the plans with respect to debt reduction?
So we as a company are cash positive. We are having more than 600 crores of cash in our books. So obviously we are a zero debt company. Our business is such that because of a negative working capital cycle, we generate enough cash from our EBITDA levels as such, and that's what will continue to trade forward. So we have enough cash on the books to take care of our expansion plans as well as any other opportunity that comes.
So that will be through internal accruals?
Accruals as such, yeah.
The other one I want to ask you is in terms of valuations. I know you will not be the right person to tell me whether the valuation is fair or not, but a conversation with a lot of brokers and investors tell us that the best way they are pegging a TFS right now in terms of peers is listed QSRs, okay? And now if I have to look at that aspect, TFS is trading at a discount in terms of QSRs. Would that be a right way to look at a TFS?
So I think from a peer set, you know, part of the journey is, so while we run our business and that's what we do, I think, yes, the understanding we've got probably is that most similar nature of business would be the QSRs. But yes, different drivers behind it, because yes, we do have the drivers of passenger growth. We do have this story of aviation growth in India being wings, as you can say, the wind beneath our wings, you know, in terms of growth opportunities. So I think no doubt, I think from a nature of business very similar, but there are structural benefits that are there in our business. And I would be right to probably comment on the valuation. You know, we've been through an exercise, we had great bankers, you know, talking with anchors and getting that right sense. But I do believe, you know, the idea is we're in a business, we see a lot of opportunity in that business, and we're focused on delivering in that business.
Yeah, I think even I think a listed peer is a SSP Asia Pacific Holdings, I think, and that's where it's taking a discount as well. well, because people are looking at the margin profile, investors are looking at the valuation, and people are talking about the return ratios, right? Where if compared the aspect that we've got from brokerages also, that yes, there is strength here, because the clear play with an IPO becomes whether are you looking at listing day gains or are you investing in a company from a longer term perspective. Very lastly, with all of this said and done, now that you're into the business, which is the QSR that you would vouch for, that all the viewers should go to, which is the best one?
All your questions now, are, I appreciate a great session. This is the most difficult one. So, as you love all your kids equally, and very much same. But I would say when you go there,
your personal favorite.
My personal favorite. So I love, a bit heavier food. So you'd always see me at a Delhi street. But sometimes in the morning you see me at idli.com, which is one of my favorites, having a nice dosa over there. But I think it depends. But all kids are favorites. So do try all our brands when you travel to airports every single time.
And Vikas, for you, which one would you prefer? I'm sure it's not going to be the same one.
No. So for me, it's more of an idli.com at times, but I equally love KFC at any given point of time.
And if you have to replicate, a lounge which is not here, which is not operated by you, some other peer who maybe globally must be looking at, which lounge would you ask a traveler to go visit?
Outside of our network?
Yes, outside of your network.
Wow. So I think in terms of lounges, you have some beautiful lounges globally, but there are, I truly believe, and we should say so, I do believe we operate both from a point of view, some of the best lounges, and from a hospitality point of view, I think the Indian culture does deliver the experience, not only from a build-out, but actually service point of view. I think you have some beautiful lounges. I think India's well ahead of the journey. So whatever I'm telling you is probably after India in terms of the offering, but you see some beautiful lounges. You've seen something happen recently in the UK with the Virgin Club Lounge. That's a lounge which is a nice place to go. Got experience. I still believe, our country is well ahead, so I'm always believe fly the Indian flag high.
I'm catching at this point, but it's just a lot of times smaller cities, but there is that one experience that you think, okay, this is something I would replicate in my business as well.
Sure.
It's like that.
It's very true, and it's about food is the key thing as well. You get the space right, which many times there, but I think the food is what many times gets missed. I think that's a key integral part of the lounge, because ultimately you're going in there, you want tasty food as well. So that's
I think all of us are hungry. It's 12:50 and it's lunch hour for all of us as well. But thank you so much, Vikas. Thank you, Varun, as well, for coming to the studio, speaking to us. And we will look forward to speak to you on Monday when TFS lists as well. So that's the management of TFS joining us in the studio. But moving on, you have the auto sector, which is in focus as well. You have retail, which has clocked almost around 4.5-5% year-on-year growth in July. And what has powered this kind of growth is the two-wheeler and the CV sales. What's interesting is that passenger vehicles has not come into this aspect. Why and what's happened from here on? My colleague Puneet actually caught up with FADA President CS Vigneshwar. Let's quickly listen into that bite.
Yeah, I want to probably bring in a point which a lot of data comes out in the first few days of the month. And when you look at the first few days of the month, it looked as if every sector in the automotive landscape in India did badly last month. So perhaps we need to wait for a couple of days, because after a couple of days, 2-3 days, the data sets are still being populated. And then, so there's some delays from certain RTOs for this data to reach us. So we get the right data only after a few days in the month. So when you look at the data right now, it's looking quite okay. I mean, 4 days ago when we saw some news articles, it was talking about a degrowth. So it is not a degrowth. The overall sector has grown about 4.84%. You are right, there are certain sectors which have done better. The PV did about 2.45%. The two-wheelers grew at about 4.73%. The tractors, which you mentioned, grew at about 8%, which is good. This also shows the confidence in the rural economy. The monsoons have done well. The kharif crops, the sowing season will be starting, and it is also going on well. The minimum support prices, there's been an increase. The governments have given an increase, and that's also going to support. So the rural demand is strong. For tractors, it is only going to get better. Another thing we've also seen is because of impending government cap expenditure, which is going to happen happened this quarter. We've also seen the construction equipment industry do quite well. Year on year, there's been a 54% growth in the industry. So this augurs well. Usually the construction equipment does well for capex after the capex are announced. Then the commercial vehicles do well. And then there is going to be a rub-off effect on the passenger vehicle and the two-wheeler segment. The capex expenditures have been not happening in the last many quarters. And this indeed is a good sign for the economy the automotive economy to again reach bigger heights.
And fair point, Mr. Vigneshwar, you mentioned on commercial, construction equipment that's up 54% on a YOY basis, but also on a month-on-month basis, upwards of 40% growth. Now, the key aspect about across the segment growth has been that on a YOY basis, we've still shown some kind of growth across segments of roughly about 2 to 6%, but the month-on-month has been disappointing, and that's reflective in the wholesale data as well, what the companies are sharing with the dealers. You mentioned, in your press release that, the inquiries have actually been very tepid on the ground for both two-wheelers, just about 21%, passenger vehicles is 38%. So specifically on the ground, are you seeing lesser footfall come in despite having a larger number of wedding dates in May? So for the quarter as well, have you seen limited number of people showing up to dealerships, and is that largely because of not many new launches that have come in this particular time frame?
Launches do affect the walk-ins. The more launches, people want to come in, and they may not end up buying the same car which is being launched. They'll probably end up also buying, most of them end up buying cars which are there in the showroom, which suits their needs better. So when you look at it, it's really not been an awful month for inquiries because we've been having rain, we've been having quite hot weather in certain places. It's expected to happen, and month on month is a figure which we publish, but it need not be. It needs to be taken with a pinch of salt because our industry has seasonalities. Certain seasons, certain months do well, and it may not continue. And there would be a slightly lower month, and then things will improve again. July usually is a decent month for most of us. We're expecting the weather also to soften up a bit in terms of more moderate rain and shine. This way, people are in the mood to shop. So we're expecting a lot of walk-ins happen this month. There are also great offers which are being given in terms of for customers. So it's a good time to shop, and we expect good walk-ins to come and translate that into retails.
And what is the current scenario for discounting as well? Because you've seen lower footfalls, but we are anticipating a better scenario going forward. Discountings for the passenger vehicle cars specifically had seen an increase. Is that still currently on the ground?
Passenger vehicles, the stocks are quite high. We are at about 55 days. We recommend a stock of 21 days. That's the industry norm. But we are quite high on stocks. When we are high on stocks, it also means that we are high on discounts. So I did mention that it's a great time to shop because of the weather and the offers. So, and I don't see these offers running forever. At some point of time, the stock levels will come down. We are working with the manufacturers. Some of them have responded. Others are yet to respond. But we are seeing that if the discounts are high right now, it may not last forever. So it's a good time for the customer to go and buy her or his car, which suits their needs.
Interesting. You have your passenger vehicle inventory, which is at a 53-day high, and that's an interesting point. We need to take a note as well from what Vigneshwar was indicating. But let's quickly slip into a short break. Lots more lined up on the other side. We have Neeraj Chadavar talking about Axis Securities stock market picks and what's the outlook going ahead. Please stay tuned to NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Choppy day of trade on the Lal Street. Nifty hovers below the 25,450 mark. Sensex trades flat around 83,360.
Godrej Consumer expects EBITDA margin to improve and Dabur sees recovery in urban demand. Beverages, though, take a hit due to unseasonal rains and an early summer.
Aroma of airport coffee and quick bite counters heading to the Lal Street. You have travel food services. The 2,000 crore IPO opens for subscription today.
Deal or no deal, the India-US trade deal hits a rough patch. Commerce Minister Piyush Goyal says that an FTA is a two-sided trade and India stands firm on red lines.
Hello and welcome back to NDTV Profit. You're watching Profit Buzzers. Interesting, Anushi, where we have, the markets where the sentiment right now is slightly subdued, taking into consideration what's happening with the US-India trade deal. But what's important is as to what can be expected going ahead, because you have the earnings season that will kick in shortly. And, there are global events that could have a bearing as well. To discuss more on this, we have Neeraj Chadawar, Head Fundamental and Quant Research at Axis Securities, joining in. Neeraj, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit. My first question coming to you is, you have released a report in terms of the way you're looking at Indian markets going ahead. Taking growth into consideration, the economic policies, if you have to look at what RBI has done so far, and the inflation and GDP expectation with earnings, if you have to sum up all of this along with the global headwinds, your one statement that you would have for Indian markets?
Thank you for having me here on the show. As you rightly pointed out that there are a lot of positive which has been built up in last 3-4 months. What we believe that at this juncture, the growth prospect for FY26 in terms of economy are better as compared to FY25. So the government and the RBI is building the pro-growth narrative. in which the RBI is supporting in terms of CRR cut and 100 bips of front loading the rate cut. Along with that, the consumption boost given by the government. So what we believe that there are better days for FY26 as compared to FY25. Most of the earnings related concerns are already in price. Going forward, slowly and gradually, we could see earnings revival, and second half of FY26 likely to be very better. So here, very important parameter to look at is that the upcoming earnings season is a very critical at this juncture. So in that regard, management commentary and the guidance are very vigilant. On top of that, the ongoing scenario of US-India trade deal remain vigilant. If these two events materialize as per the market expectation, we could see in next 1 or 2 quarter market is heading towards the newer high.
Hi Neeraj, this is Anushi joining in as well. Now, we have seen the geopolitical tensions subsiding, or what was the scenario in the April month that we've seen. Considering that factor, now, while that has eased out, it's the small caps and the mid caps which continue to remain in focus. They have gained significantly this last 3 to 4 months. Just want to understand from a stock specific side scenario as well, what is the kind of growth picture that you expect as compared to FY25?
So in total for Nifty 50, I am expecting almost 10.5% of EPS growth for FY26. So what we believe that at this juncture, the chances of EPS surprises on a positive sides are very higher because growth could surprise from the external sector. So at this moment, our focus remains on the domestic economy, focus remains on the large cap private banks, consumption, certain plays in consumption, hospital, interest rate proxies. What we believe that these counter will continue to deliver solid number. On top of that, the capex oriented theme is slowly and gradually emerging because in Q1 it will set the stage for further growth in FY26 because last year, exactly 1 year back, it was the election year. The base is very low. So this year, all those capex oriented theme could surprise on a positive side, and slowly and gradually right now 50% of the sectors are contributing to the Nifty rally and mid and small cap rally. Remaining 50%, we could see there could be a wait and watch mode in terms of how the export demand picks up, as you rightly pointed out, that more towards the how the macroeconomic situation pans out. So for at least for 1 or 2 quarter, all the export oriented theme will be in a wait and watch mode. More orientation will be towards the domestic economy, and that is showing the resilience. And on top of that, guidance is very critical because the consumption theme has not seen a good amount of pickup in last couple of years. And right now the recipe is right. It need to be converted into the numbers. So slowly and gradually, 1 or 2 quarter later, it likely to be converted into numbers. So that is the reason the retail, the selected FMCG, the travel and tourism remain vigilant for the remaining part of FY26.
So Neeraj, taking into consideration the way markets have rebounded since March 2025, strong up move, and you clearly have the broader markets which have outperformed your Nifty. Where are you seeing risk reward favorable between mid caps, small caps versus your large caps?
So I would point it out in terms of themes. So interest rate sensitive is the right theme. We need to identify the pockets. So we continue to believe in the NBFC universe where the interest rate, the NIM expansion story is very, very important, and it will remain vigilant in next couple of quarters. On top of that, the real estate proxies are very, very important, and at this moment the recipe is right for real estate. On top of that, the rural economy is slowly and gradually reviving, and monsoon till now is good. We need to see the special distribution, but this year there could be a strong chances rural oriented theme could outperform the market. That is the reason we continue to bet on the two-wheeler space, and Hero MotoCorp is our top picks in the rural space. In interest rate proxies, we continue to like Bajaj Finance, Shriram Finance, and the real estate space, we continue to like Prestige State. On top of that, one theme is very important to look at is the telecom theme, which is very negative, very small impact due to the trade tariffs. It is a very, very solid theme. One need to look at that right now. The entire telecom industry is in a very solid space. We continue to see the ARPU improvement story, and the top 2 player will continue to focus on the conversion of 2G player to a 4G player. And we continue to see, and that's the reason we are betting on Bharti Airtel, which is our top picks. And that will continue to hold performance going forward based on the ARPU improvement story.
Okay, Neeraj, so that's the some of the pockets that we should be focusing on. But want to get your sense on the Nifty 50 also, your targets for that. You've outlined a bull case scenario as well as a bear case scenario. Just want to get your sense on either of this direction moving in towards that, since you've considered that the market breadth has been on a positive side. So just want to understand both of these case scenarios that you've pointed out.
So in base case, we are targeting 26,300. We are valuing Nifty at 20x. What we believe that in next 1 or 2 quarter, the re-rating chances are very limited. Rather, it will be a bottom-up stock picking with the opportunity of earnings growth. Market will continue to follow the earnings growth. In the bull case scenario, we are awarding 21x multiple, in which we believe, we target Nifty March 26 target at 27,600. In bull case scenario, there will be a soft landing in the US market, and all the export oriented theme will come back with and start showcasing the earning growth in the later half of FY26. So what we believe that most of the negatives are already in price. Most of the uncertainty related to trade is already behind us. Going forward, slowly and gradually, we could see the recovery in the market. But for the next 1 or 2 quarter, it will be a bottom-up stock picking market. But once we gradually enter into Q3 FY26, it will be a broad-based rally possible, and mid and small cap could deliver a double-digit return from here onwards. But till time, it will be a stock-specific rally.
Interesting to watch out for in terms of the March 2026 target that you have. But thank you so much, Neeraj, for joining us on the show and sharing your views. So that's what Axis is looking at in terms of FY26 and why they are bullish. But let's also welcome in Dinesh Sani, Senior Research Analyst at Invest for Edu, and Amit Buptani from Nirmal Bang. Welcome to the show, gentlemen. Few of the stocks that I want to start the discussion with right now is the companies which are buzzing in trade. You have a Metropolis Healthcare, a strong business update that they have come up with. DCX Systems was also up in trade on the back of the 15-year defense license that they've got, and this is from Karnataka SEZ office. This will be for production, assembly and testing of radar as well as EW systems, 3.5% up move there. And a Hazur Multi Projects, they've bagged an order worth almost 913 crores, which is a solar order. That stock also seeing some smart moves. Hariom Pipes, again on the back of a strong business update, is up in trade today. In fact, if you talk about the sales volumes, a 35% year-on-year up move. InfoEdge, again, their standalone billing is up around 11%. Recruitment Solutions, single-digit uptick. And you have a 99 acres billing, which is up 16%, which seems that the street is not happy with, and the stock has been trading under pressure. Amit, from these 4 names, any buy or sell recommendations that you would have?
Currently, 2 counter looks positive. One will be Hariom Pipes. If you look at the overall setup on the weekly basis, the formation is quite strong, and I'm expecting it to shoot up strongly between the range of 460 to 470 mark. The rate is also at the stable rate. Currently, the support for the counter is at 403 level. So with the support of 400 level, we can recreate new long positions for the target upside 460-70 level. And DCX India also looks positive. Currently, the stock is ready to show some rounding formation pattern. As per the current scenario, the upside breakout is at 305 level. Once the counter gives a breakout about 305 of the DCX systems, then the fresh breakout will be approached in this counter, which will take counter directly towards the 350-360 levels.
Update that we are seeing for some of these stocks which are buzzing in trade currently, but let's also look at real estate names now. These are also buzzing in the back of business updates other than the other project launches. Firstly, we have Keystone Developers in focus. Now here we are seeing that the company has exceeded its guidance in terms of pre-sales in the first quarter itself. So strong start to the year is what we are looking at. Mahindra Lifespace, another stock in focus after the company launched a new tower at Mahindra Citadel in Pune. The GDV, that's the gross development value of this, being over 2,500 crore. Even Puravankara is in focus on the back of redevelopment plans of 8 societies in Chembur, Mumbai, which roughly adds a potential of over 1.2 million square feet and a GDV target of 2,100 crore. So Dinesh, let me come to you on these couple of these real estate names as well. Any of these counters particularly which interests you?
All right. So see, we are seeing trends which are very, very aggressive. So in the moment of launches, every flat which they are making, especially in Gurgaon area, Delhi, and now in Mumbai, we are seeing so aggressive buying is seeing. So people are just waiting outside their launches and keep on buying their flats like this is like just a small thing. So of course, since we are a growing nation and our GDP is also growing, per capita income is also growing. So of course, the trend will be the same, and we can expect it to grow because till now we are at a fourth position in terms of GDP, and in overall in next 5 years we are expecting to reach at $7 trillion of GDP. So with that, we are expecting that the trend could follow. However, at this moment, what I would suggest is it would be a cautious stance in terms of valuations. So keep an eye on a quarterly basis. So of course, these numbers are very strong from small companies to huge companies. But my view is that it is right to keep a check in evaluations at this moment. Maybe from next 2 to 3 quarters down the line, if this growth consistency is making, then maybe market is able to give a higher valuations and higher multiples, you can say. But for now, I would be cautious in terms of valuation. Otherwise, in terms of business, I'm very strong.
That's with regards to real estate players, but let's quickly look at the banking ones which have come up with their business updates as well. IndusInd Bank, Utkarsh Small Finance Bank, you have Equitas, ESAF, as well as IDBI and Bank of India. In fact, IDBI did see a strong spike as the numbers came in as well. My colleague Harsh is standing by. Harsh, what are the key trends that you're picking up on these names?
Well, so I want to first start off with an IndusInd 3% degrowth, both advances, deposits, not looking good, right? It is slightly off expectations. Of course, a flattish kind of expectation was what analysts were really penciling in, but that's not translated. So that's with regard to where IndusInd is concerned. The other one I want to really mark out is a Dhanlaxmi. Good growth numbers. You're looking at 2% advances growth, 6% QOQ growth on gold loans, 3.5% deposit growth. So all of those looking good where a Dhanlaxmi is concerned. I want to also point out to an Utkarsh degrowth across the board, 2% degrowth on the gross loan portfolio, flattish on the deposit growth, and I'm talking all QOQ numbers. The joint liability group, which is the largest chunk of the loans that they give out, is down 7% on a QOQ basis. So that's the other one. Equitas, flat on advances, just 3% on deposits on a sequential basis. So deposit growth was decent, but advances growth clearly flat and disappointing the street as well. The annual net slippage is continuing to creep higher. Q1 FY26 was at 4.35%, higher by 1% QOQ on absolute terms. So and a lot of that is microfinance. The microfinance net slippages continue to remain elevated. ESAF as well, the growth is absent, and therefore that one also under some bit of pressure. So all of those more negatives than positives. Dhanlaxmi the only likely positive among all of those counters.
Thank you so much, Harsh, for that. In fact, Dinesh, let me come to you. From all the names that, Harsh has taken us through, how are you looking at them, and anything that comes to your radar that you would recommend?
See, only this is the reason why we always recommend all the people to just stick with the large private banks like HDFC, ICICI Bank, right? So, and also Axis Bank, of course. So the thing is that specifically in terms of IndusInd Bank, we know what happened in previous months. But at the same time, what do I think is that everything could be priced in the price as of now. So in case if one wants to check for the investment purpose, maybe wait for at least one more quarter, I think. For now, I think it should be a price in, but still for the safer side, maybe wait for 1 quarter. Otherwise, if you want to play on all the banks, maybe HDFC, ICICI, all the large private banks are very safe. And as we are growing in terms of GDP, I think these large private banks are better positioned.
That's the view for some of these banking names that we are taking. But let's also focus on something like Siemens Energy, which just came out with their Q2 results. Now, what we are looking at here is a strong growth in terms of where the revenue is concerned. 57% of an uptick is what we are looking at. Net profit up over 36%, but it's the margins in which we are seeing some bit of that pressure playing in, 19% as compared to 22%. So more than a 300 basis points of an contraction is what we are looking at in terms of Siemens Energy. Do note that the company just got listed on 19th of June, and it is the largest player in the T&D space that we are looking at. The other peers being something like a Hitachi Energy as well as and GTD Power is what we are looking at. So let me take this across to Dinesh. Dinesh, your first read on the Siemens Energy's Q2 numbers, and of the three, if you are looking at its peers and Siemens Energy, what is your pick?
I think for me it is very too early to comment, because I think I have to see at least 4 to 5 quarters of trend and what exactly the management is saying. Of course, we don't know what multiples should be given for Siemens Energy. So I think I would be better not commenting what exactly is happening. So I will pass this question to maybe technicals.
Siemens Energy, but a strong move that you're seeing in terms of the earnings. But moving on, the ripple effects of SEBI's crackdown on US trading giant Jane Street are now being assessed, with brokerage firm Jefferies out with a detailed note on the potential impact on Indian exchanges and brokerages. And on the back of this, if you talk about Nuvama, that's a stock that has been in focus, did feel the heat in terms of Friday's session. Angel One did feel the heat on Friday's session. BSE was another one that did feel the heat on Friday's session. But today, both these counters are seeing some bit of an uptick. BSE has also seen some bit of a recovery. Amit, let me come to you. Three names from the broking side. How are you looking at them on the charts?
Currently in today's session, we are seeing some stability in all these counters. In Friday's session, there was a lot of selling being carried out, but in today's session, both these counters like BSE and Nuvama both are taking the 50 DMS support on the downside. So there is not much of selling on the downside, and I'm expecting the base to be created on the downside. For the Nuvama will be around 7,000 level, and for the BSE will be around 2580 level. So currently both are at the buy on dips strategy zone at this point of time. The upside breakout for BSE will be 2700. Once the 2700 is up on the mark, then we will see the fresh buying opportunity in this counter. And in Nuvama, 7540 will be the initial breakout for this counter. Once the Nuvama again goes above 7540 level on the closing basis, then the buying will be carried forward towards 8200 to 8300.
Okay, so that's the view that we are seeing for BSE in Nuvama Wealth. Let's focus on something like a Dixon Tech, which is in focus as brokerage firm B&K Securities has initiated the coverage on the stock, and this is the buy rating that we're looking at, calling it a key beneficiary of India's electronics manufacturing push. We have Puneet joining us with more details on this one.
Well, thank you for that. So the BNK is seeing a 24% upside on something like a Dixon Tech, a stock that's not cheap by any means, but the earnings growth trajectory is very strong from this point onwards, and that's one of the key aspects of this particular report. Apart from that, they've also mentioned that Dixon stands at the forefront of India's electronic manufacturing space, and also mentioned that it's moving from being a traditional EMS player and getting into backward integration via components, also looking at export as a key theme, and then is now looking at roughly 1,000 crores in terms of revenue from the export market, and also expanding its original design manufacturing, or ODM, which essentially provides design services for its clients as well, which is a high margin business. Those are the three key important aspects that they've mentioned. They've also said that the company has seen a 54% CAGR in terms of revenue, as well as almost an 86% CAGR in terms of profits between FY22 as well as FY25, and they are anticipating more than 40% CAGR still in terms of revenue accretion over the next 3 years as well. Finally, they've gone on to say that the company continues to scale its mobile vertical as well as its IT space, but is also looking at industrial electric vehicles as one of the key aspects, amongst other things, and the component scheme will be a big benefit to someone like a Dixon Tech.
Okay, so that's the overall positive stance that we are seeing for Dixon Tech, but there's some of these hurdles also which we are seeing in the EMS sector. Now, the government has imposed import restrictions on gold compounds. That's a key raw material that is essential for the manufacturing of these critical electronic components like semiconductors and motherboards. Puneet, talk to us about that as well. So we have a contrary view as well in terms of there being some bit of these obstacles in terms of these raw material prices that we are looking at.
Well, definitely, and apart from this, we've also seen, the rare earth magnet crisis amongst others, which has impacted all the raw materials that are exported from China and imported in India. And we're now seeing an impact on a specific product, the gold compound, and that's actually because of one of the regulatory bodies in India, the DGFT, has gone ahead and put restrictions on the import of the same. So when you look at the key raw material, that's gold compounds is what we're talking about. They've now been facing import restrictions, which is a critical component within electronics as well as semiconductors, as you rightly mentioned. This is used in motherboards and semiconductors as well. And the key aspect is that earlier this was essentially had a tag of free import in the country. It has now been shifted to a restrictive import list, and hence will cause concerns for the EMS players. The order is dated June 17, which reclassified these imports as restrictive and hence have an impact on these companies. The ICEA, which is the regulatory body for electronics in India, have also mentioned that they are aiming to localize some of the key aspects via the new 22,000 crore scheme, but this could have some cascading effects on players like Dixon Tech as well as something like a Keynes Tech and Amber Enterprises and Sirma, who are into manufacturing of electronics via laptops as well as televisions among others, which would see the bigger impact from this particular aspect. So it will be something to watch out for going forward, because there are multiple moving parts impacting companies across the sectors, and gold compounds is one of them.
Okay, thank you for that, Puneet. That's definitely something that we should be continuously tracking. But Dinesh, coming to you on this latest development that we are looking at in terms of restrictions of gold compounds on counter like Dixon, Keynes as well. So that's on the negative side that we are looking at. But the other positive, we are seeing the brokerage note continuing to being positive about the stock's performance in terms of revenue, CAGR growth as well for the next 2 to 3 years. What's your outlook here?
It's very clear. Dixon, if I'll talk about in 2022, if you'll see the numbers, they were doing a top line of almost 10,000 crores. But if you see the recent 2 quarters, they itself in last 2 quarters, they have done 10,000 crores of sales in each of the quarters gone by. And the margins, if I'll talk about, it's maintained at almost 4% level. So my view is that until and unless these guys are growing at this current pace and the margins are intact at almost 4%, 4.5%, I think market will provide a good valuations, and based on the median valuations of almost 100 times. So I think one should, that's okay to hold the company. And in terms of the overall negative things which we are looking at, yes, this can be overall sentimental negative, but my view would remain the same, that if until and unless these companies are maintaining the margins, especially Dixon, if I talk about, so 4% margins are intact, then market will be able to provide a good 100 times multiples.
Sure. Thanks, Nidesh, for that. 2 quick counters, Relaxo Footwear and Tega Industries that I want to pull up. Strong volumes today that we are seeing in both these counters. Amit, 30 seconds. Any calls on these 2 names?
On Relaxo, because on the weekly chart we are seeing the fresh breakout has been created in this counter with the volume breakout also had taken place. So currently I'm expecting on the upside towards the 560 levels.
So downside in terms of Relaxo is what you're watching out for. In fact, even your recommendation is showing you, I mean, that's a wrong number there. Instead of the upside, it should be downside of 14% is what is on the cards. But completely out of time. Thank you, Amit. Thank you, Dinesh, for joining us on the show. Or thank you from Anushi, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these 2 countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज, और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today
Hello and welcome to NDTV Profit. You are watching Top Trades. I am Puneet Zaveri. With me it's Somit, who's just going to be joining in just a bit. But first, let's take a quick look at how the markets are doing. It's been an interesting session to say the least. We mentioned yesterday that we saw a stellar recovery from roughly about 25,340 odd levels to almost the current level where we are maintaining, and that's why we're seeing that flattish, kind of on the performance of the the Nifty 50, just about 12 to 14 points on a downtick. But it's been a day which has largely been trading in a very, very narrow range, to say the least, of roughly about 80 to 90 points on the Nifty. Let's quickly look at the key constituents of the Nifty 50. We'll see the big gainers as well as the losers today. We are seeing Reliance being one of the biggest gainers, while on the losing side, we're seeing some pressure on something like ICICI Bank, Infosys, as well as Reliance as well. We're seeing some positive move on something like an HUL. Now, that could be post, what we saw, a positive move on from brokerage from UBS actually, putting out a positive note on HUL. So, seeing some of the key aspects, let's bring up the Nifty heat map as well. HUL as being one of the biggest gainers in trade today. We are seeing some of that continue today as well, up almost 3%. While something like a Tata Motors is the other one of the biggest losers in the Nifty today, down almost 2.19%. Amongst others, we have seen some kind of gains on Jio Financial, and that's been one of the key themes, continuing its bullish momentum over the last week or so, continuing to do that, while something like a BEL has been essentially ping-ponging between the gains as well as the losses. So currently down almost 2%. The second biggest losers in terms of the Nifty. Let's look at the sectoral indices for the Nifty as well. We might see defense as one of the key ones, and we're seeing that as one of the biggest losers, and that's largely also led by the underperformance by BL. Nifty Media is down, while the FMCG index has been boosted as well, similar and visible on the Nifty. The mid cap and the small cap has largely been in the news flow because it's been outperforming the benchmark indices. Today, it is mirroring that kind of performance, down 64 points on the mid cap 150. And finally, let's quickly pull up the BSE 500 as well. In terms of individual movers, we are getting into the result season very soon, so we are seeing that kind of reactions coming in on a lot of business updates. So we're seeing that on something like an Equitas, Small Finance Bank, Jubilant Foodworks is the other one which has been buzzing. Despite decent set of numbers in terms of quarterly update, but on the downside, on the positive though, Relaxo almost 9%, a very strong move, and Ratnamani Metals is the other one. But there's also another stock. Let's pull up Signpost real quickly, because that's been a key stock that's been in focus today, and that's because the company has secured an exclusive 5-year deal with one of the companies for ad rights on City Flow buses. Now, at the same time, a favorable court ruling from the Karnataka High Court allows Signpost to resume its halted operations in Bengaluru as well. Let's get my colleague Vansh to give us more perspective on this. Vansh.
Right, so the stock is up 20% this week. So the company has been granted exclusive rights for advertising and promotional activities and exclusive rights for the City Flyer premium bus networks. So this is a strategic move by the company to strengthen its presence in transit media segment, and the agreement is effective immediately, with the phase 1 commencing deployment of over 350 buses across the key urban markets. So the key urban markets for the company include Thane, Hyderabad, Delhi and the Mumbai metropolitan region. And secondly, the company has received a High Court order to resume its operations in Bengaluru. Earlier, they received a notice from Bruhat Bengaluru Mahanagar Palika to restrict its operations in Bengaluru. However, they have received the notice to continue their operations. So this will enable the company to recover its capital investment and assist in its ongoing business operations. So this is what is looking for signpost.
Right. Let's also welcome in the guest to explain more on this, Shripad Ashtekar, the MD of Signpost India. So firstly, starting with this new tie-up that you have done with the company, what's any monetary value for this deal you could share with us? What are the synergies? What is the outlook here on this deal?
Thank you for having me. So Signpost more precisely work into the three major segment, which is transit and digital and convening the commuter convenience. Here comes the advertising business, which more focused towards the work, entertainment, shopping, and travel or transit, which is the hovering area for the any consumer. But the recent acquisition with the City Flow fleet and the other fleet what we have in hand, which includes the BST and the other parts of the country which we are operating. So we are the single largest fleet operational advertising company as far as the domain is concerned. And backed with a lot of digital ad tech advantage. And this will definitely bring in the more measurability in terms of the City Flow operations because they have the latest data tech advantage. And similarly, the contract which we backed in Bangalore a long back, which is a PPP model, but it got stuck because of the bylaws issues between the regular conventional advertising and public participation projects. So the High Court has given the public participant project as a green signal to go ahead and nothing to do with the conventional hoarding business, which is there in,
right,
which is restricted. Yeah.
Right. But this City Flow deal, if you could give us a number of what is the kind of upside you're seeing, at least in percentage wise, post this deal has signed up, what could be the revenue uptick that you can expect over the next 1 year or say couple of years?
So as we have a switch buses, which is a part of Ashok Leyland Group, which we operate in Mumbai, for the double-decker buses. Similarly, the pattern of this City Flow, which will add at least 2 or 2.5, 3% of the percentage of volume in terms of top line is concerned, and it's a long-term deal.
Right. And what specific brands do you think would be interested here in advertising when it comes to City Flow Premium Bus Network? Any insights on that?
So basically, City Flow caters to the professionals, and definitely it will add value towards the BFSI segment, which is currently we started with SBI because of their 70th celebration. Apart from that, the FMCG and OTT will be the more keen to advertise for the professional in the segment.
Right. This could be a significant deal is what the management is suggesting. Apart from that, we would also want to know what is the revenue target coming in for FY26, FY27, how could the net profit grow for the company going forward, and how much of financial impact could the Bengaluru operations come in. So firstly, coming on the Bengaluru operations, what is the estimated financial impact that has impacted the company because of the halted operations currently so far?
So the investment we did, which is operating around 150 plus locations to render the service to the traffic department for the surveillance, and we added a lot of features around that, which is finally operating. But the revenue in terms of this project will be beyond 60-70 crores per annually, and which will grow eventually because in our case, when we invest into a long-term project, which is for 15-20 years, it is like a test match. It grows very little slow initially, but once we set up our operations, and then the revenue comes at a larger pace.
Sir, it's Puneet joining this side as well. A very good afternoon to you. In terms of the overall aspect, you've spoken about this deal as well. In terms of the growth prospects for FY26, you are competing amongst others in terms of advertising. What's the kind of growth that you're anticipating on the overall business? And do you anticipate to have this 20% margin profile that you have for the company currently to sustain despite the current competition that we're seeing?
So OH is definitely a clutter market, but it is all about the billboard part. But we focus and take a very niche market, which is around the street furniture, which includes the bus queue shelters, skywalks, then the setting of these kind of public services through kiosks or even public libraries. So our part, which as far as the top line or the growth is concerned, definitely last year was the reorientation part for us, but we will compensate that backlog this year, and we'll be moving with the 30% of growth year on year, definitely.
% growth, can we say that comfortably the company can achieve this growth for the next 4 years?
Definitely, sir. The massive lineup what we have, because of the advantage which we have as an experience to deploy the large scale projects. We have signed up with the BPCL of the world to install digital across the country in 60 cities, and that is definitely the growth part will be there by 30% year on year.
Right, and as of FY25, I could see that there is some debt of around 170 odd crore rupees on the book. By any plans of retiring the same, repaying the same?
So debt reduction will be there, definitely. Our team is working on that, and will be around 15% year on year. But our business is fully focused around the investment for the large scale projects. And from the 170, I think we have already taken the leap of around 290 crores. And CRISIL has given us, reaffirmed our long-term rating to BBB+, and enhanced our short-term rating to A2. And that is the balance which we made for the better hygiene and growth.
Right, sir. Thank you. Thank you for joining us and explaining more about your company and the growth plans going forward. Well, that was the management of Signpost, confident of growing 30% for the next 4 years. Well, another stock that has been in focus is ISMO. The stock is up more than 7% in trade. What has been buzzing in trade? In fact, it's had hit an upper circuit of 5%. Let's get in Vansh with more details on why the stock has been hitting an upper circuit.
Right, so the stock is up 70% in the last 5 days and 40% up over the last month. So the company is engaged in the business of interactive marketing solutions, and it is a world leader of automotive interact solutions. So let's also understand the geographical split of the other company. India operations account only for 11% of the revenue. Other major revenue accounts from North America, that is at 72%, and from Europe, that is at 17%. And their top customers include Hertz Europe and Stellantis and Eurofrance. And their business mix includes automotive solutions, interactive media solutions, and AI platforms. So the stock is up already 40% over the last month and is showing strong gains.
Well, let's also ask our market expert for the day, Mahesh Ojha, on ISMO. Mahesh, have you tracked this counter ISMO? It's up around 40% in the last 1 month. Anything that you're aware of that could be leading to such an up move in the share prices?
Definitely, the counter is very good. We are taking from very low level. So from last 1 to 2 years, if you're looking from the counter, that is gained significantly. And if you're looking on the company's books, there is a very low debt and debt-free type of company and low P in segment. So I think some more upside potential is there, and could be a 475-500 range could be a come in near term also. So we are optimistic for some more upside. But yes, any downside, if anyone getting from these levels, that is I think a buying opportunity. There is upside potential of at least 475 to 500 level in near term also.
Got that, Mahesh. But let's also pull up Bajaj Consumer, a stock that's been actually been flying over the last month or so. Today it's up almost 5%. Let's pull up the 1 month chart for the company as well, Bajaj Consumer. It has seen a management gain, and there you go, 33% in just the past month itself. It's in focus after the company appointed Naveen Pandey as the MD for 5 years. But let's get Mahima to give us more context of what's happened in this particular time frame, because the stock's been flying, Mahima, right?
Right, absolutely. And as you rightly mentioned, the stock has been flying since the appointment of new managing director, that is Naveen Pandey, and he's had 2 decades of experience across leadership roles. So I think that's going to be a big positive, because we've seen in the past few odd years, top line growth has not been much, even in terms of profit growth. It's been a negative growth of around 9% for Bajaj Consumer. So probably things will turn around from now on going forward, and that's something that the street has been liking. In terms of the stock performance, it's just now 18% away from its 52-week high, 5 days up 14%, and 37% upside since the past 1 month. With respect to that, if we see 1 year performance, the stock is still down around 12%. In terms of volumes, the stock is trading at 1.4 times its 30-day average today. In terms of valuations as well, trading 12 months valuation stand at 22 times, and going forward 2026 estimates suggest a 14 times of PE, which is the cheapest amongst the entire FMCG pack. So So that is also one of the reasons, could be one of the reasons as to why the stock is flying in trade today. Lastly, in terms of the guidance that the management has given, the management expects margin improvement going ahead. They're looking to add more than 1 lakh retailers, and management is highly optimistic about the demand recovery as well. Lastly, in terms of how analyst recommendations fare, there are 8 buys, 1 hold and 1 sell, and a return potential of around 8% as per where Bloomberg consensus stands. So this is with respect to why and how Bajaj Consumer is buzzing in trade.
Thanks so much for that, Mahima. Mahesh, Bajaj Consumer, while the stock has been flying in terms of since the appointment of a new management, how do you view this particular stock? Valuations are inexpensive, but the margin profile is quite lower compared to the other FMCG makers. Any specific view that you have on Bajaj Consumers?
See, we are tracking from last 4 to 5 quarters from Bajaj Consumer. They are reducing high cost products and focusing on high margin products. So they are slowly improving their margin also. So it's not impact of MD, particular we can say that MD appointment, but yes, they are focusing on business for improvement from last 4 to 5 quarters. So I think it's a good opportunity to add if any kind of downside we are getting near 220, 210 level. But yes, some kind of upside potential is there that could be a 275 to 285 range could be there. So low debt to company, almost debt free, I think so. So I think it's a potential for some more upside.
Well, another stock that has been buzzing of late is Keval Kiran Clothing, and the stock is up more than 10% in the last 5 trading sessions. To give us more details on the same, Jasmith is joining us.
Well, right. The Keval Kiran stock is up 10% in trade in last 5 days, by 15% over last month. Let's understand more about the company. The company's market capital stands at 3,500 odd crores, and what does the company do? Is basically into manufacturing, marketing and detailing of ready-made garments and finished goods. While the consumer base is spread across Asia, Middle East and CIS, while they have brands like Lakman Page 3, Killer Jeans, Killer Junior and so on. While they have experience of over 3 decades when it comes to retailing experience, and as per financial performance, the FY25 revenue stands at 840 odd crores, while the margins remain at 19%. With regards to operational performance, the FY25 had a split where the largest sector belongs to the jeans, accounting to almost 46%, while the t-shirt holds the smallest percent of 6% of the overall revenue. While as per the sales quantity, which has seen a 25% jump on YY basis, and the retail non-retail category holds a 50% share. And as for FY25, the net additions for the stores are at 121, while EBOs stands for exclusive brand outlets. Now, what's company's outlook is, for FY28, company aims to reach 1,500 crore of revenue, and also for FY25, they're aiming to close up to 609 EBOs, while currently they have 609, and for FY28 they want to close up to 900 EBOs. While company also expects to scale the retail network of Kors brand, which is the recently acquired entity, up to 50 stores in next 3 years. Talking about the brokerages, there is Sunidhi, which has recently initiated a buy rating on the company with a price of 715 rupees. What does the brokerage feel is a stock to catch high valuation among the listed companies in the given time, while they also expect the compounded growth of revenue to be at 14% for FY25 and 28 estimates. And they also see the transition from denim-centric to colorful, vibrant lifestyle clothing a big plus for the company. And the retail sector is currently growing at 5%, where they expect for the sector to grow overly at 9 to 10% in the coming time. So this is all about the stock and to watch out in the trade today.
Let's, Mahesh, any views on Keval Kiran Clothing? Do you expect the management could comfortably reach their FY28 target of 1,500 crore revenue with margins of around 17 to 18%?
I think much more competition is there, and if you're looking from a past data, that's not more encouraging. But yes, it's a quite low P, so we can expect some more upside in a 6 to 9 month horizon. That could be 660, 675 zone. But we are seeing some competition in market, so I can't say that management can achieve or not. But yes, some kind of potential upside is there. That could be a 670, 675 range. That could be a capital from a current view.
Mahesh, but the other stock that's in focus is DCX System. Now, the company has actually gotten an industrial license from Karnataka's Special Economic Zone Office. Let's get in my colleague Anushi. who gives us more details on this. Anushi.
Hi Puneet, it's a big update that we are seeing for DCX system, which is in focus on the back of this industrial license from the Karnataka SEC office. Now what they'll be responsible is for the production, assembly and testing of the radar system and electronic warfare systems. Some other key players in this field being the likes of Bharat Electronics or even data patterns that we are looking at. So DCX, a part of this is what we are seeing now. Also they'll be into the integration and manufacturing of avionics along with defense electronic equipment as well. Now this will enable the company to manufacture items categorized under the category A that is there as per Ministry of Defense, and this license period also that we are looking at is for 15 years. Now what would be interesting to understand from here is the kind of growth opportunity that these two segments present for the company and the order pipeline accordingly that is there, because if you consider the current order book positioning, they have an order book of 2,855 crore as of March 25, which is about 2.63 times of a book-to-bill ratio that we are looking at. So it's on a healthy revenue-to-bill ratio that we order book ratio number that we are looking at. So interesting numbers over here. The stock, if you see the performance in the last 6 months, it's not done as well as its other defense peers which are there. In 6 months, the stock was down 22%, while in the last 1 year it has seen a 31% of a downtick. So let's see how DCX system, how this development is for the company and the kind of order book opportunity that we can expect from this.
Well, thanks so much for that, Anushi. But Mahesh, the stock actually listed back in 2022, but since then it's been around a similar range, very, very highly valued, over 80 times price to earnings on a trailing basis. Any specific view that you have on DCX?
Yes, definitely. It's a very positive news for DCX system. We are tracking from long back the DCX. So some kind of upside. After that, we have seen some kind of consolidation, and from this news, I'm expecting much more upside. That could be a 375-400 range. This is, I think, a good positive news for DCX system. Yes, quite a high P, but this news is very highly positive, I think. So the 375-400 range could become near term. That could be a 6 to 9 month horizon.
Right, another stock in focus is Veranda Learning. The stock has surged 16% in the last 5 trading sessions after acquiring BB Publication, boosting its edtech footprint with this strategic move. Jasmith is joining us with more details on what could be the outlook going forward.
Well, right. The stock is up 16% in last 5 trading sessions. Let's understand more about the recent updates that the company has caused. While firstly, the company has approved allocation of 11.8 lakh share. While this is on a preferential issue basis, at a total issue value of 26 odd crores at a share per price of 221 rupees. While this is a non-cash consideration, the company is paying in return for 1,059 shares of BB Publications. With this transaction, company currently holds 51% equity shares in BB Publications. Now let's understand what does the company do. Company is into edtech, where they deal in developing and managing integrated offline to online solution system and edtech platform, where it offers a range of learning programs for learners preparing for competitive examinations as well as professional examinations. There are 4 key verticals spread across when it comes to their business. Firstly, it's commerce test prep, then they have government test prep, academia and vocational. While in the financial metric, the FY25 revenue stands at 471 crores, while the margin stands at 8%. In regards to operational metric, we see that the company has over 200 offline centers, and at present they have 2.5 lakh students on yearly basis as of FY25, compared to 91,000 students compared to FY23. The market cap of the company stands at 1,700 odd crores. Well, the company has been loyal to acquisition, and there's a huge acquisition history of the company starting from 2020, where we can see they have acquired brands like Race, Educera, JK Shah Classes, and Navarka, and rest others. So it'll be interesting to watch out how does the BB Publication acquisition turns out for the company in the coming trade sessions.
Right, Mahesh, any views on Veranda Learning? How are you looking the growth chart for the company going forward?
I think there is many acquisitions, so we are not optimistic currently for more upside. But yes, upside potential is 260 to 75 range could be there. But I'm not much more positive on Veranda Learning, because there is a lot of acquisition that could be can give high competition, and upside as for books, I think a limited upside potential is there. So not positive, but yes, 260 to 75 range could be the curve.
Well, another stock that's in focus, and it's a very interesting one, Globe Civil. Now, that's because the company is a very recent listing. Let's look at the 1 week chart, because I think it listed on the 1st of July. And since then, the stock has been actually in lower circuit. So we've seen that kind of up move of 8%, and that's because it listed on a premium. But it's a very interesting case, and Anushi is still with us. Anushi, can you just break us down what's happening with the company, as well as a little bit more detail on its financials as well?
Right, so it's a very recent listing, as you pointed out, Puneet. The stock just got listed on 1st of July itself. Since that, what we've seen is now in the last 4 sessions, the stock has hit the lower circuit of 5% on each of the sessions is what we are seeing. This is in contrast with the kind of debut it made on the 1st of July, where the stock had seen about a 28% of a listing day gain. Currently, if we take the issue price in context, then we are still seeing about a 9% of an uptick over its issue price of 71 per share. But taking the high, that's 94.5 per share, which had touched. Since then, the stock is down about 18% over its highest trading price is what we are looking at. Since in the last 4 sessions, as we've seen, the stock has been hitting lower circuits as well. Just a little bit about the company. It was incorporated in 2002, and it is a Delhi-based infrastructure development company which is engaged in EPC, that's engineering, procurement and construction contracts, which involves roads, flyovers, bridges and more. This was a total fresh issue that we had seen of about 119 crore. They had come up with this issue for funding their working capital requirements along with capex towards purchase of construction equipment. Some bit about picture about their financials as well. If you are looking at the revenue growth, they've posted a 42% of growth in terms of revenue. EBITDA margins from FY23 levels have moved from 8.9% to 15.4% as of the 9-month picture that we are looking at, while net profit has seen more than 200% of a jump. But this is the overall picture that we're seeing in terms of how the stock price has been for the company in this last few sessions that we are seeing.
Thanks so much for that, Anushi. Mahesh, I know it's a very recent listing, so we still have to wait for the company's results, but the margin profile improvement has been very steady over the last 2 years. Any view that you have on Globe Civil, as well as if you've covered Ellen Berry as well, because that was also a recent listing, but a completely opposite reaction by the market. Any specific view that you have on these two?
See, we have already suggested our client to neutral view, and if they are applying if they are applying, then they should book on listing day itself. So I think it's a quite fairly valued, and I think if any downside below IPO price, then we can look on the same. So I think profit booking is good, but yes, some competition in the market also from the other perspective. I think we should wait and watch for the another quarter for the same. And from American Gas perspective, I think the company has a good perspective. I think if anyone looking for a longer term perspective, if anyone getting nearby 500, 510 zone, that could be an attractive level for longer term buying zone. So I think we are bullish on Ellen Berry Industrial Gases instead of Globe Civil.
Right, Mahesh. But when it comes to Globe Civil, if you look at it's a clear sign of trapping those investors who bought the shares on the listing day, given the fact that we had seen a good 10-15% up move on the IPO price on opening. There are a lot of investors who bought these shares and the stock had hit an upper circuit. But since then, it has been continuously hitting lower circuits and a couple of more sessions, and then the stock could be below its IPO price as well of 71 rupees. So what should a retail investor do at this point of time?
No, I think those who have bought on higher level, they can hold. But yes, quite if you're looking from a market perspective, many brokers have a neutral view on the same, and they already suggested for listing gain specific. The issue was subscribed handsomely, and so that issue was listed on higher price of the market expectation. So that is the time that where investors are booking the same. So I think where the market, all market participants are neutral view. So I think some kind of profit booking are visible on this counter. So wait and watch, and I think in nearby issue price or lower by issue price, then we may see some kind of consolidation. After that, we can see some market will see the results and their updates. So from current view, on the listing day, whoever bought, they can hold further.
Right, sir. Thank you for joining us and giving us your perspective over the stocks that we discussed. With that, it's a wrap on this edition of Top Trades. Keep watching NDTV Profit.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. Hello and welcome. You're watching India Market Close here on NDTV Profit. Let me start off with how the Nifty is doing today. We're having a flat day, at least on the Nifty, just about 12 odd points lower versus Friday's close. Let's look at it intraday as well. 25,400 is what we're fortunately holding on to. But look at this, just an 80-point band in which the Nifty is trading in. So it's a very tight band that we're trading in. Don't go by the gyrations on your screen. It's just a very, very tight band that we're playing, which we've zoomed in, and therefore you're seeing that. But broadly, otherwise, you're seeing the highest point, and we're just off probably the lows of the day is the way we're looking at this, but just about 40 points higher. So very, very tight band. Let's look at the heat map of the Nifty, see which stocks are moving. And HUL, Tata Consumer, Nestle, that just shows the strength that FMCG and the resilience that FMCG is showing today. It's a rotational play, mind you, and FMCG has come to the forefront in trade today. 0.5% higher on Trent as well, so that one also kind of adding tailwind to consumer. What's not doing well? Some bit of a cool off in a BEL. Tech Mahindra also down around 2% Eternal, there's been a change of guard there, and that one is also down 1.5% nearly on the back of that news. So some movers over there. But again, what we're seeing is no big movers either on the upside or on the downside, at least on the Nifty 50 counters today. Let's look at the contributors, and I'm curious to know that because I want to see where the heavyweights are moving. Reliance is one, okay. But outside of that, no major movers on either side that you're seeing. Now, I want to look at sectors as well before I go to broader markets and try and break that down. FMCG is doing, of course, no surprise, but the top sectoral gainer in trade today, 1.5% higher, doing extremely well for itself. Media, defense, metals are places where there is some bit of a cool off that we're seeing. Metals, defense in particular. I want to talk about the advanced decline and thereafter how broader markets are doing. There you go. The advanced decline has just gotten more and more pronounced, as you can see, as the day has gone by. I'm curious to know whether it worsens from here? Can we taper out from here? How does it play? Let's look at the Nifty mid cap and the small cap indices, and 1/3% lower on the Nifty mid cap, so we're at the day's low. No surprise there either, and very similar kind of a texture on the Nifty small cap as well. Again, 1/3% lower. So that's where some bit of underperformance is. But mind you, these broader market indices have outperformed the index last week. So that's something on the back of which we're seeing the kind of move that we're seeing today. It's a small move nonetheless, but let me bring on board Akshay Bhagwat to get us better perspective. Good afternoon, Akshay. How are you seeing both the Nifty, the Bank Nifty, and the markets? It's a continued consolidation of sorts on the back of last week. How long do you expect this to last for?
Good afternoon. So, well, yes, it's been a lackluster session, and the last few trading sessions have been a bit dull, and there has been some bit of a pressure on the indices, but still we cannot call it any reversal or signs of any major fall, because the level of 25,250 to 300 basis spot Nifty is one of the most crucial levels here to watch from a broader perspective. In all sense, if you look at the prior trading session, that's Friday, we recovered from around 27,350 400 zone. So that defines the immediate support. And just although it's lackluster, my sense is that Nifty has a probability of recovering back, pulling up again, and you might see it heading for levels of 25,600 to 650 zone. Even if you look at the Bank Nifty, although there is no trade setup here, clearly it's in a range, but somewhere there was some strength which we saw on Friday, and there can be a follow-up move which can see the Bank Nifty heading for 57,300 on a short-term perspective. So still positive on the indices, expecting a recovery from the current levels.
So recovery likely at play, at least on the Nifty Bank. Akshay, give us your take with regard to, or just let's take a step back. Give us your top picks for this afternoon.
Yeah. So, well, both the stocks I have selected are on the buy side of trade. Now, the first one is from the real estate pack, that's DLF. Again, if you look at the last few trading sessions, it's been lackluster and quiet, but my sense is that a strong support has been set around the levels of 835, and technically this stock is again setting up for a strong upside momentum where 857, 871 can be the possible upside targets. You can keep a stop loss of 818 on this buy trade. The second trade is in Petronet LNG, where if you look at the chart structure today, there is some momentum pickup, and the way the setup is 315, 321 can be the possible upside short-term trading targets. You can buy this with a stop loss of 298. So yes, I'm still hoping that although the market bred this trading off, these two stocks should do well in the short-term time frame.
Akshay, what changes in FMCG? Because you're seeing that very strong move in FMCG counters. Are you seeing something structural here in terms of a change? Because FMCG is one of those laggards, right? So is that apparently going to change in your opinion now?
Yes, if you were to see from an entire July perspective, yes, FMCG has been a laggard. If you look at the index per se in the last couple of months, it's been sideways. There has been no major correction though. It's just that many of the stocks from the FMCG pack have been trading on low volumes. They have been sideways, but there is no intent of any fall. It's just that the money flow has shifted lately into the FMCG and the pharma space. That is evident. Pharma was the sector which kicked off a few days back, and in the last couple of sessions, FMCG is making a comeback. So if you look at the index where 55,550 is where the FMCG index trade, there is a good trade or a good setup where you can see stocks like 59,000 on the index, with stocks like an HUL, a Dabur and a Marico all supporting this index, and where this index can easily go till around 59,000. So yes, betting on FMCG space for the month of July makes a lot of sense. Risk reward is extremely favorable if you buy them at the current levels.
Okay, thank you, Rajat. Thank you so much for that, Akshay. Thanks for joining us this afternoon. We'll let you go on that note because we're going to be joined in corporate conversation. We have Rajat Rastogi with us, CEO West and Commercial Assets at Puravankara. Welcome. Good afternoon, Rajat. I want to first start off with that big win that you've had. Yes, that big win that you've had in Mumbai, 2,100 crore GDV potential project. Talk to us a little bit about that. It's a large win in relative terms for you. How quickly do you execute this, and how quickly do approvals come in place, more importantly?
Good afternoon to all of you, and thank you so much for having me on your show. So yes, it is indeed a big win for us with a GDV value of almost 2,100 crores. I think the total cost of the project is approximately 1,600 odd crores, and we intend to launch this project in a period of around 9 to 12 months from today. Chembur is indeed an important market for us. We already have a project in Chembur wherein we are obviously one of the best products available in the market, and this product in Deonar Bagh adds to the portfolio over there.
In 9 to 12 months, Rajat, how quickly do you estimate completion in another maybe 2.5 years thereafter?
Yeah, no, I think the completion takes time. It's a large project. It's maybe 1.2 million square feet that we're developing over there. The overall timelines is going to be between 48 to 54 months.
Got it. And does the sale also happen in staggered fashion? So your 2,100 crore of GDV realization is likely going to happen in staggered fashion. Just give us context on how it will happen over maybe, because it's a large period of time. Just give us that broad level understanding. Roughly 500 crores a year?
Yeah, exactly. I think that you're right. So it's going to be around 500 crores a year. And as I said, Chembur is performing very, very well as a market. And I told you that our project itself is one of the top leaders in that micro market. So we see the sales happening directly from day of start of the project. And depending upon the market demand and how the pricing moves, we look at least selling of most of the inventory in a period of at least 3.5 to 4 years.
100 crore out of the way, Rajat. What next? What's the FY26 pipeline looking like in terms of new development that you're looking at in terms of GDV? Just give us a number broadly.
So this year looks very, very positive for us. We've obviously started in a very positive way with securing this right. Just to give you a perspective about what we're doing in our West region portfolio, we today have a GDP value of already crossing 18,000 crores in the West market. We have a portfolio of close to 14 million odd square feet between Bombay and Pune, where we are predominantly present in the West. And bulk of this is a substantial portion of it is also on the redevelopment portfolio, which contributes around 7,500 or approximately of the overall GDP value. So we have a very, very strong pipeline for the balance of the year. We as a company strategy, we are focusing only on strategic marquee assets, and that's where the company's focus is going to be. And we're going to be focusing primarily on all the three segments, which is land buys, JDAs, and also in redevelopment. So our strategy is very much aligned, and I think, as I said, that the year looks very, very positive for us.
This one has roughly a 20% margin. Do pretty much all your projects have that kind of number under the JDA model as well? Do you have that kind of number?
So we have established margins for us internally, which we follow with regards to every asset class and every product type that we do. But yes, one of the key focus areas for the company is on the healthy margin side, and that's we enabling it. So yes, to answer it, most of the projects have better, equal. I mean, depending on the product life cycle of the product, we decide on that. But it's all about in the near range of what you spoke.
Is there a preference as to which model you prefer within the three?
No, frankly, we're agnostic. We're looking at market opportunities. We're not stuck on any particular model, but I'm very, very glad to share with you that we are doing a lot of marquee redevelopments in Mumbai. We are doing a lot of developments in Pune as well, not on the JDS on the redevelopment side, but normal development that we are doing. So we kind of, as a strategy, as I said, that it's more to depend upon what product and where do we create and where it lies in the overall strategy of the company is what we acquire. But right now, as I said, that redevelopment, yes, Breach Candy, Andheri Lokhandwala, Pali Hill, and now this one, I think adds a strong portfolio for us.
Now, Rajat, you've done a top line of around 2,000 crore last year. So as the focus shifts towards execution, you have a large pipeline, of course. As it shifts towards execution, how is that playing out? What's the FY26 execution guidance looking like?
No, I think as a company, we are obviously very much focused on our execution capabilities. We obviously are delivering our required numbers of inventory in terms of position across all the markets, especially in Bombay and Pune. So execution is going to be key for our success in primarily in the West region is what I can speak. And also, I think on the overall numbers side, our execution in terms of the burn rate that we speak about, we are going to be growing a burn rate by at least 2x in the West region in this financial year.
And what's the thought process with regard to balance sheet borrowing that you have, Rajat? Is there a plan to repay that? Are you in a first off, are you in a position to answer that? And if so, can you give us the kind of thought process with regard to repayment of debt?
So I'll give you a broad semantics on this.
Sure.
Our borrowing levels are very much in the established limit that we have defined for ourselves. Bulk of the investment that we have done in last couple of years has gone for acquiring huge land parcels across various centers that we operate from, and much of this debt is going to get reduced in the coming years, in the coming period, over from the sales that is going to happen from these projects. So we are very much comfortable with the debt positions. We don't see any pressure on that, but we are very hopeful that once these projects, 7-8 of them, get launched over a period of time, our debt position will fall further substantially.
Okay. Rajat, any guidance that you can give us on the top line number for FY26, or that won't be possible?
That won't be possible. We are obviously looking, the first quarter just ended and the first quarter has gone well for us, is what I can say.
Sure.
We have a very strong pipeline for the launches in the quarter 3 and quarter 4, where the bulk of the sales is happening. And we're definitely looking at a very strong financial year in terms of the top line this year.
Do you execute your entire GDV, if not for the entire company, even for the West Zone, if you can give us that perspective?
Sorry, can you please pardon the question?
How quickly do you execute the entire GDV that you currently sit on, Rajat?
So our current GDV is going to be executed over a period of between 4.5 to 5 years. Some of these projects are really large scale projects, especially the one that we're doing in Thane, for example, is a 3.2 million square feet project that we're doing in Thane. Couple of them are projects which are really marking in terms of the areas that we're doing in Pali Hill, which have to be done in a period of around 4.5 years. So from a overall perspective, you're saying my entire 18,000 crores worth of inventory should be executed in a period of around 4.5 to 5 years.
And Rajat, what's the internal IRR metric that you all look for when you all pick up projects?
Yeah, we have established numbers that we have. We have a committee which approves our investment positions that we do in various assets. And from the IRR perspective, we are comfortable in anything which is upwards of between 20 to 25% is where I think we look at assets. Of course, depends upon which life cycle, which strategy, which micro market that we're entering into. That is what we look into. But overall, I think our internal guidelines are something that we keep in mind before acquiring any project.
And on the commercial side of things, how are things moving along, and what's the growth and the project pipeline like?
Brilliant. I think the commercial portfolio is doing very well.
Sure.
This year, we're looking at delivering close to 2 million square feet of commercial projects. We are currently focused on Bangalore right now, where we have 2 projects, and we'll be starting the 3rd project very soon. We're obviously looking at strategic growth parts in other CBD areas of Mumbai and Pune, and that's where I think we are looking at more acquisitions. But the market overall is doing very well, and we are very buoyant about this portfolio. I think from what we have also spoken about in our investor deck is the fact that by 2030 we're looking at least 400 crores from our current inventory to come as annuity rental income.
Okay. Rajat, if I were to push you to give us a guidance with regard to how quickly does debt come down, or what's the target debt number that you have over the medium term, what would that number be?
So we have our internal target, which we're going to subsequently speak about in our quarterly results that will be announced very soon. We're going to give you a detail. But what I can assure you is the fact that our launch pipeline is very strong this year. And because of the collections that we're going to get from the sales, our debt numbers are going to be going down reasonably this year.
Okay. All right. Rajat, thank you so much for joining us. We'll let you go on that note. Thanks so much for coming and speaking with us.
Thank you so much for having me online. Thank you.
Yeah, no, completely our pleasure. But just a couple of stocks flying around. We have an Equitas Small Finance Bank. Those numbers not impressing the street. The stock is down 6% in trade. Jubilant Food has been down since the start of the day and now has slipped further a little bit more. And we'll talk about some of these names, frankly, because we weren't able to talk about specific names at the start of this show. But those are some names that should be on your radar. 2% low on an ESAF and Utkar Small Finance Bank. Some of those names also in the thick of things. Shyam Metallics is down nearly 1%. Again, quarterly update on Shyam Metallics. But of course, stock of the day is going to be Godrej Consumer, and we're going to talk about that in just a bit. But let's switch tack. If you want to invest in India, invest in large cap quality stocks is the word coming in from Saurabh Mukherjee, founder and CIO at Marcellus Investment Managers. Listen in as he explains the reason why.
Most Indian fund managers have rung the alarm bell on small caps over the last year, right? Every Indian fund manager I speak to has rung the alarm bell on Indian small caps a long time ago, right? And honestly, you don't have to be an institutional investor or a fund manager to see the risks in Indian small caps. As I said, valuations are rich in Indian small caps, some of the highest valuations ever seen in small cap in our country. The economic slowdown is in front of everybody. The earnings slowdown, more importantly, the earnings slowdown is in front of everybody. Therefore, the risks are elevated, right? You've got rich valuations and you've got a small cap earnings slowdown. So I think several fund managers have rung the alarm bell. If someone's insistent that I want to invest in the Indian market, then look at large cap quality. Large cap quality is at an awful 5 years. I know because I invest in large cap quality. Large cap quality is an awful 5 years. But as the economy is slowing down in our country, large cap quality is resurfacing, right? An example being HDFC Bank. So I must have spent many years on your programs justifying our investment in HDFC Bank. We hardly made any money on it through 2021, 22, 23. It's only in the last 12 months that our HDFC Bank investment has borne fruit. And that's exactly as you'd expect. As the economy slows down, investors are migrating from lower quality financials, lower quality banks towards the champion play in the sector.
Okay, so that full conversation with Saurabh Mukherjee, of course, is something that you can see on our YouTube and our other socials. But Harsh, I just want to point out where that conversation started with.
Yes.
We finally asked him, what will you buy in India? And he said, large caps. But he started by saying, this is the time to diversify beyond India. Go to your brokerage app. There are enough options there. Look at buying European small caps.
Yeah, small and mid caps.
Yeah,
yes.
Small and mid caps. So he's very clear that he is not bullish about buying in India right now.
Yeah, and that was fascinating. US, he's been bullish since a while, actually. Yeah. So, and they've launched their US fund, etc. But this was new. This Europe mid cap, small cap was something which was new.
Maybe it's a new leg of things that, you know, when we talk to our European guests, when we look at the European markets, maybe we need to start looking at what small and mid caps are working there. He also talked about how Dixon was a missed opportunity for his fund, but it still looks very strong. And on Jane Street, the comments on Jane Street were interesting because he said there are many others who are on Dalal Street who are doing what Jane Street was doing. Regulators going to go after them, and that party is over, especially in small cap stocks which are illiquid but were moving on one or two news items in a great quantum. So very interesting insights there from Saurabh Mukherjee. We'll take a very short break, but we'll come back with much more, tell you about what's buzzing this hour and what your last hour trade should be. Stay tuned.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense force.
Welcome back. You're watching India Market Close. Markets right now are in a freeze frame, if that's one way to describe it. I mean, just pull up the Nifty, completely flat on the Nifty, completely flat on the Sensex. IT stocks are those that are feeling some pain, but that too, I mean, just about 0.5% down on the Nifty IT. Banking stocks not showing any movement. I mean, it's a glacial pace. One of the reasons could be twofold actually. One could be we don't know what's happening with the India-US trade deal yet, and the second is this Jane Street spillover. In fact, Deepak Shenoy joining in to talk on this and much more. He's the CEO of Capital Mine Mutual Fund. Deepak, unfortunately, we couldn't get that line up. We've been trying for a bit, but I think technology has got the better of us today. But great to chat with you on the phone, as always. I just want to start by saying what your sense is of the reaction to Jane Street in terms of large investors. Are we going to see muted volumes on the derivative side for a bit and in the cash markets as well as a result?
The volumes in general will likely come down if these, so the way they seem to have described a lot of these positions is that a lot of positions were created on index expiry day in order to, gain a disproportionate benefit using their options positions. So some of the cash positions were created, some of the futures positions were created to benefit from options. So in that context, during expiry, I would expect, and the first expiry actually happens now tomorrow, because now weekly expiries are only between Tuesdays and Thursdays. So the difference, we will only know tomorrow whether this creates a reasonable difference. And as we seem to be hearing, there's another hedge fund that seems to be in the crosshairs. So there might be multiple people employing some technologies like this, and given that it takes only a few thousand crores to be able to manipulate stocks during trading day, that might result in relatively lower volumes if these volumes were not artificially created just to, move stocks during expiry day. So,
I'm very curious. I'm very curious about what you're hearing, Deepak, on this other hedge fund which is in the crosshairs. Is it a domestic hedge fund? Is it a global hedge fund that's going to be the next Jane Street? Because clearly this was not a secret sauce that only Jane Street knew about.
Yes, in fact, the thing came about because Jane Street sued Millennium. Because Millennium hired, I think, a bunch of people from Jane Street, or Jane Street hired from Millennium. I don't know which one it was, but essentially there was a court case in which they said, your people, you hired people who stole our very profitable index options trading strategy in India. And that's when SEBI also kind of said, wait a second, what are you talking about? And are you guys manipulating the markets? We need to check. They've checked just 3 days. there have been a lot more expiry days since, that they can check. And presumably what they've found right now is a few thousand crores. They might find tens of thousands of crores. But the other hedge fund which was named in that court case was Millennium. And Millennium also has a large trading position in India. So, and I saw an article today that said they're also in the crosshairs, but it makes sense because if SEBI went after X, they'll also go after Y because they were both named there.
Yeah,
so, yeah.
Okay, so correct. So it could be Millennium, it could be Jane Street, it could be others. Deepak, I'm just wondering how much of a mover do you think this India-US trade deal is going to be? Already expectations are being managed that if at all it will be a mini deal. It's fairly clear. I don't think we will be one of the recipients in the letters that will go out tonight India time. Hopefully not. But whatever form and function that deal comes in, it's quite safe to say it won't be at the 26%. Anyway, the deadline's also moved. Do you think that that's the next trigger the market's waiting for?
Well, to be honest, at this point, it is fairly clear that Mr. Trump is not in any way predictable or dependable, because he might say 26% today and wake up tomorrow and say 50%. So it is better for us to start expecting that the U.S. in the near future and perhaps in the coming few years is not going to be a dependable partner. They are a waste of time from us to keep thinking about. Although it may have short-term repercussions, we should just start thinking that they are applying a lot more tariffs on us and we don't care. And we should start looking at the rest of the world if you're looking at exports, or just domestically focus on increasing Indian market shares of Indian companies, because there is no trustworthiness left in the US. So what happens today and tomorrow and all that stuff will be newsworthy. But I don't think it will last more than a couple of days, because there will be more statements. Now made another statement saying BRICS something 10%. Now we don't know what that means, but it means nothing, because if they give you a trade deal and tomorrow they say no, you're parts of BRICS, so we'll charge you another 20%. It's just news making for the sake of it.
Yeah.
But I think we're in better shape than that. We don't have to, think of the US as the only partner that we have.
Yeah, I mean, it is become the big move, sort of a reason for the markets to hold their breath. Meanwhile, those dual factors may be weighing in. Thank you so much, Deepak. We always enjoy our conversations with you. All right, that time of the afternoon where we get Samit Sarkar in with all the chatter from the dealing room. Samit, what's the buzz today?
Well, the stock that has been buzzing is Bharat Electronics. If you see, the stock is down around 2.5%. Now, dealers are indicating that there are sell flows on the DI desk in trade today when it comes to Bharat Electronics. And one of the concerns that dealers are indicating here is that the company's valuation is at a lifetime high, and that is one of the reasons why there are sell flows on the DI desk when it comes to BL. Second stock on the list is ICICI Lombard. Dealers indicate that large HNIs have started to accumulate this countdown expectations of a potential price hike announcement that could come in. Now everyone knows that there will be a price hike that will come in, but dealers are expecting that to happen in the next 1 week or so, and hence there are buy flows on the large HNI desk. When it comes to Shriram Finance, dealers are indicating that there are buy flows on FI desk at lower levels in trade today, so keep an eye out for Shriram Finance as well. When it comes to Ganesha Housing, that stock has hit an upper circuit of 5%. The stock had been under pressure for the last 1 month or so. However, dealers are indicating now that the sell flows are largely over and there could be a bounce back that we can see in the share prices of Ganesha Housing. Another stock on the list is Orient Pro Solution. Now that stock is up around 12% in trade, or at least it was up 12% at one point of time, and dealers are indicating that HNIs have been buying this counter in anticipation of a large order win announcement that could come in anytime soon, and hence the stock has been buzzing and gaining, and at one point of time it was up around 12%.
Okay, thank you for that, Somit. Plenty to look out for, and we'll quiz our guests as well on some of the observations that you're making on some of those counters. Let's bring in Hemen Kapadia, DR Choksey FinServ, joining us live. Hemen, quickly give us your take with regard to the index. We've seen a bit of a consolidation move over the last maybe 6 odd trading sessions, maybe more than that actually. But what's the sense like? How long is this going to go on for, in your opinion?
A very good afternoon to you. Thank you for having me on the show. So it's a pleasure. Well, after a breakout from the 700-point range in the 7th week, one would have expected more, but well, yeah, market is taking its own sweet time. I'm not sure how long it's going to take for this to end, but one, the bias remains positive. The undercurrent remains a bit, but we need to take out a few levels. And one thing in the bull's favor is, despite we not doing anything and we've been down for 5-7 trading sessions in a row, the VIX refuses to go up. That is a small positive. Bank Nifty hasn't done much, but it needs to do a lot to go up. So frankly speaking, I'm not sure why it's taking such a long breather, but just one point to note, as long as we are about 25,212 in terms of closing, everything is hunky-dory. If we slip down and close below that, that would be a point to ponder and a point of worry also, Harsh.
Okay, Himen, give us your take. So if this were to last, which way do you expect it to break out? On the upside, I suppose.
Yeah, I think, and I would expect it to break out on the upside. Okay. 25,550, 25,800, 26,277. I like to digress a bit. Nasdaq is at its all-time high. I think S&P 500 is at an all-time high, and the Dow Jones is threatening to do something unprecedented. So, I mean, I believe there's always a spillover effect. Though the dollar index is down, our rupee hasn't appreciated much. Crude is down. Everything seems to suggest that, yeah. But on the other hand, silver is looking good. I think we are poised. I'm not sure what we are waiting for, but I would be more positive than negative, Harsh.
Okay, more positive than negative. What are you picking in that positive sentiment, Himen?
Okay, firstly, a buy call on Bajaj Auto, Tamanna. Bajaj Auto hasn't done much. This is, I think, the 1, 2, 3, 4, 5, 6, 7th week where it's virtually hatching eggs, doing nothing. Things are now beginning to turn positive. Oscillators on the daily chart have given crossover buys. It's also expected to close up at the 55-day exponential moving average today. It's made a base, it's forming a rounding bottom. Everything is looking nice. So buy on Bajaj Auto at 84.50. Stop loss 83.50, target of 86.50. The other stock is Titagarh Rail Wagons. Looks very interesting. I'm not sure why it has not done anything for the last half a dozen weeks, but seems poised for a breakout, straining at the leash, so to speak. Yeah, for this to have unfold, we need a close about 955, but I have a feeling it looks great. One can buy Titagarh at 945, stop loss 925, target 995. 995 is a very modest target. I believe we should be heading towards 1,050 and 1,200 over the next few months, Tavanna.
Okay, Titagarh Rail and Bajaj Auto on the radar, but it feels like it's a pause. Everything is in a bit of a freeze frame. Till you have one of these news developments out of the way, and that is the US-India trade deal. Now, is it a rough patch? Is it a speed bump? Where do we stand? My colleague Rishabh joining in with the latest. Rishabh, what are you hearing?
What's confirmed, Tamanna, is the fact that there will be no more rounds of negotiations. The ball is very much in Washington's court now in terms of whether to accept this interim trade deal or a mini trade deal. What we've also picked up over the last 4 or 5 days is the fact that this will be a limited deal. It will only cover goods for now. All the other sticking points, all the other discussion points like agriculture, dairy, things that will take a lot more time to negotiate on and to achieve any sort of middle ground or consensus on, all of that will be kept out of this current interim trade deal that is on the cards. That will be postponed for further tranches that we'll see. We'll see one perhaps in September or October of this year, and then the full final FTA coming in about a year later. So that is the sort of timelines we have. In terms of scenarios, of course, if India is able to grab a deal before the July 9 deadline, that means India will be able to get some sort of broad tariff reductions on the reciprocal tariffs that were imposed by the Trump administration. We can expect a mini deal on that front. Another scenario is that if India is not able to get any sort of a deal, tariffs may revert back to April levels, that is the 26% tariff level. And additionally, today morning we heard the BRICS announcement coming in that Trump believes that BRICS is anti-American in its policies, and an additional 10% tariff could be levied on India. So that takes the total to about 46% if we add everything up, and that is perhaps the worst case scenario for India. That is something that might happen only post-August 1st. So some sort of a delay also in the implementation of this tariff pause deadline that was initially set to end on July 9th. So those are some of the scenarios that we are seeing brewing currently. Also, what's very important, 9:30 p.m. tonight, tariff letters will be sent out by the Trump administration to about 12 to 15 countries, and that is something we have our eyes peeled on so far.
Okay, all right. Thank you for that, Rishabh. That's the update coming in, valuable one with regard to trade talks, because that will be the big focal point with regard to where markets are concerned. Was going to happen this, or rather in this week, but clearly not happening now. That seems to be the consensus. But I'm going to quickly go across to Mahima, because we are going to talk about the stock of the day, which is Godrej Consumer. The stock is buzzing on the back of course, a decently strong Q1 business update. I'll hand it over to Mahima to take us through that. Mahima.
Right, so it's been a day for consumption for sure today, and Godrej Consumer is one of the stocks that is definitely doing well in trade today from the entire consumption pack. Now, with regards to where the business update stands, overall standalone business is set to deliver a high single-digit growth in terms of value and a mid-single-digit growth in terms of its volume. They've said that the overall standalone EBITDA margin in Q1 is likely to be below the company's normative range, but it is likely to improve in second half of FY26. Now, with regards to the segment-wise performance, home care business is likely to deliver a double-digit growth, which is a good thing for Godrej Consumer, and personal care business is expected to grow in low single digits in terms of volumes. Now, this is largely because of the soap not doing well for the company in this particular quarter. In terms of guidance, FY26, they'll deliver mid-high single digits in terms of the underlying volume growth. Overall, high single digit consolidated revenue growth is what they're penciling in. And palm oil prices have moderated, so that will have an overall impact in the second half of FY26, because that is when the entire price hikes and plus the mileage reduction cycle will be completed, and then we'll see some kind of uptick in the margins going ahead. Now, in terms of what brokerages are penciling in for Godrej Consumer, Macquarie is maintained neutral with a target price of 1200. They're saying Q1 release points to healthy domestic volume performance, expects a 5% volume growth, and consolidated sales up around 10% is their expectations. EBITDA should rise 7% as margins remain under pressure is what they're saying. Morgan Stanley, on the other hand, has maintained overweight with a target price of 1431, and what they're saying is that Q1 business update is a strong beat. Double-digit growth seen for home care is a big surprise for them. So this is the overall view as to why the stock is buzzing in trade today.
And buzzing and how. And I think last few quarters has been good for Godrej Consumer relative to the rest of the pack under the current management as well. Siddharth Khemka joins in on the conversation this Monday afternoon. Siddharth, great to speak with you. Let's talk about the big theme today, which is consumption buzz, and start with Godrej Consumer that we've marked as stock of the day.
Yeah. Hi, good morning. Good afternoon. Thanks for having me on the show. Yeah, I think if you look at the overall consumer space, some of the business updates that have come out have been encouraging, and that is what I think was expected this year, where with the start of the budget, we thought that this year the pivot could be towards consumption theme, right from capex theme, and with the monsoon coming out to be stronger and much ahead of time, I think that is also supporting the overall growth trends. So if you look at even a Godrej Consumer, there has been a good growth in the domestic market right after Marico, where also we saw good growth in the domestic market. International business, especially for Godrej Consumer Indonesia, I think they are facing a significant increase in competition across categories. And the other regions are also, so except for Indonesia, I think the other international regions, they are likely to deliver strong double-digit value growth. So overall, at a consolidated level, revenue growth is back on the high single digit compared to the decline that we saw. So last year, Q1 was a decline of -3%. Q4 was a growth of 6%. So on back of that, I think consistently, even last quarter, they have been providing good business updates. And the segments that they are present in, that is also looking pretty interesting in terms of growth. Some of the newer segments that they have got in, and especially some of the personal care, home care has seen a strong broad-based growth trajectory and is likely to deliver double-digit both value as well as volume growth. So we remain positive on Godrej Consumer. We currently have a buy rating and a target price of 1450.
Okay, so Godrej Consumer looking fabulous, but so is Dabur, Jubilant. Let's pull up Jubilant and see what's happening there. Jubilant had started off pretty slow today, but it's continued to suffer going forward because their growth is just, seen a really painful situation. Jubilant is what I'm talking about, Dabur as well. As we look at the consumer space overall, Siddharth, apart from a Godrej Consumer that you spoke in detail of, anything that you like here? Do you think that this is sort of a defensive play that we're seeing for the day, or do you see more legs to it?
Yeah, I think definitely it looks like more of a defensive play in the current environment. Domestic-driven factors are definitely positive. If you look at segment-wise, paint adhesives expected to remain weak in Q1. Liquor, or you can say beverages, that is expected to see some volume growth in Q1. And if you look at in terms of staples, not much material uptick in demand is expected again in Q1 because of is this a recent trend that continues, and we expect post monsoon once the festive season comes up. So H2 is where bulk of growth will happen. For our overall coverage under staples companies, we are expecting a sales growth of about 6%. So a mid-single digit kind of a growth. What we like overall, I think QSR, especially some of the selected ones, for example, Jubilant, that came out with a good business update. Jewelry, again, with the pricing, gold pricing surging above 30-35%, the retail market, I think that has led to some volume that is not that strong. So overall, I would say that better to stick with some of the staple names in this environment. So Dabur, Godrej Consumer, Tata Consumer, which has a mix of food, beverages, as well as staples. These would be some of our preferred picks within the FMCG space.
Okay, Siddharth, firstly, good afternoon. Keen to understand what your key takeaways from the numbers that have come out and some of the commentary also that's come out, because it's interesting. Rural, urban, give us your take. How best would you play FMCG given all the commentary that's coming out? How best would you play that?
Yeah, I think definitely. I think urban, we are seeing a kind of a muted volume growth, but I think rural is where things are picking up. As I said, overall, staples volume growth is likely to remain in the low to mid single digit. Price hikes there has been taken in Q1 that should aid overall revenue growth, and even on the margins front, we are expecting the gross margin contraction of about 170 basis points on gross margin front. EBITDA margin for the entire staples coverage universe should contract by about 130 basis points. This is largely due to high inventory cost in terms of palm oil, edible oil, tea, wheat, as well as negative operating leverage. As I said, in this environment, some of the sub-segments which are directly related to the crude derivatives, I think that is something which is looking better in terms of margins. So soaps, detergents, hence you will see numbers coming out better for a Godrej Consumer. So again, a little bit diversification from the core staples, food, beverages, that is also looking pretty much steady, and hence Godrej Consumer which is largely a soap story, plus a Tata Consumer which is a mix of food, staples, as well as beverages. So those kind of stocks are something that we are looking better in this environment.
Okay, Siddharth, point taken, and I'll come back to you because I'm curious to know your view on a Senco and a Nykaa as well. But Himen, within FMCG, it's buzzing today 1.5% higher. The top performing sectoral index in trade today. Is there something structurally different? And I posed this question earlier to Akshay as well. Is there something structurally different that you're seeing, given this slight bit of rally of sorts, if I can call it, in FMCG from a technical perspective?
If you look at the Nifty FMCG index, it's almost been 11, 12 weeks, and now things are suddenly starting to look up. Marico posted an all-time high. Dabur gave a move at resistance. Godrej Consumer has turned good. So frankly speaking, we haven't done much as far as the FMCG index. It's been down multi-months, and now things are looking better. So the way I see it, okay, Dabur above 514 could do something positive. There has been a technical turnaround. Traditionally, normally the markets go down and FMCG goes up. Markets don't look like going down and FMCG looks like going up. So one of the other should happen. The way I see it, there are positives very clearly on the shorter term charts. This normally percolates onto the weekly charts. That's what I've seen. So as our fingers crossed, things are beginning to look better as far as FMCG is concerned, Harsh.
Okay, when we're talking about FMCG, how can we not talk about Dabur? Dabur has been in focus all day today. I mean, you would argue that the business updates were middling. The stock is about 3.5% up. What is the bull case and what is the bear case for Dabur? Mahima is joining us with more.
Right, so I think what the street liked today about Dabur was that one statement that the management has made, and that is that they've come out and said that they are seeing an uptick in demand in terms of volume from the urban markets, which has not been the case since the past 4-5 odd quarters for any FMCG companies. So I think that is a big positive in the entire business update that came in for Dabur. But overall revenue is expected to grow in low single digits, so that's something that the street might not see positively. Now, in terms of the overall performance of how Dabur has been so far, it's been a company that has had a significant amount of dividend payout. In fact, in FY25, there was a dividend payout of almost 80%, the ratio. But overall, in terms of, if we talk about the working capital days that have significantly gone up for this particular counter, and it's gone up to 60 days in FY25. So that's something that's alarming. In terms of the overall performance of different categories, Dabur Honitus is expected to clock a growth of 40% in Q1 FY26. So that's a big deal. And in as far as my reading goes, this is because Dabur Honitus is very easily available on the quick commerce platforms, and people have been ordering Honitus through those platforms. But on the other hand, beverage as a segment has been impacted because of unseasonal rains and short summers as well. So that part of the portfolio, your real juices, might not do well this particular quarter. In terms of the international business, it's expected to post a double-digit growth in Q1 FY26. But there has been, when I was seeing the charts of investors pulling out of the counter, there are FIs which have been cutting stake in the counter. If we see March 2023, there was a 20% stake that FIs held in the counter, which has come down to around 12% in March 2025. So that's one thing that an investor should definitely keep an eye out for. Lastly, in terms of where the analyst recommendations stand, well, in terms of Bloomberg consensus estimates, there are 15 buys, 19 holds, and 8 sells. But the return potential is absolutely flat where the overall target prices go. So this is with regards to the bull versus bear case of Dabur.
Okay, well, the street is very bullish on Dabur today. Himen, on the charts, how do you like Dabur compared to the others?
Looks interesting. It's playing catch up, Tamanna. So I believe it's made a medium term base, and things should start looking up. Like I said, it's just at the resistance of 514. Above that, I think it should start looking even better. A turnaround is in the offing, Tamanna.
Turnaround is in the offing. Siddharth, we were in, the business updates didn't seem that great on the face of it. But I wonder what you thought of the Dabur business updates?
Yeah, I think it was in line with expectations. The good part is that on a sequential basis, things are looking up. And especially if you look at for Dabur, the urban volume recovery, that is something that has been a key. Definitely in their so with the refreshed strategic vision and favorable conditions such as the above average monsoon, good agricultural output, easing of inflation, I think now going forward, Dabur is expected to regain growth momentum in the coming quarters, and that is what is the street is excited about. I think that looks like. Plus, the entry point opportunity at the current level stock has been consolidative, or you can say has been underperforming the overall market. And at this price point, with the earnings growth recovery, I think Dabur is more of an urban play, and with the tax benefit, with the monsoon, and with the inflation at low, the expectation going forward is definitely improving for Dabur much better than some of the other FMCG players.
Okay. So, one public interest story now, and I think this is important. There's a last opportunity to relaunch old physical share transfers that SEBI has offered. They've opened a 6-month special window. Mahima is with us for all of those details.
It's as you rightly mentioned, this is a one-time special window that SEBI has opened, and this is for physical share transfer. So anybody who is holding a physical share in terms of paper share on or before 1st of April 2019 can go ahead and submit that that particular piece of paper and get it dematerialized. But of course, this request is only for share transfers that were rejected because of any discrepancies or were returned because of any discrepancies. The window will be open from 7th of July, that is today, and end on 6th of January 2026. So it's a 6 months period. Now, why is this move happening, and why has SEBI actually opened this special window? Firstly, this is to facilitate ease of investing for investors, of course, to secure their rights in terms of what they've inherited from their ancestors. During the window, share transfer requests will only be processed and will be dematerialized following the transfer process. Lastly, in terms of how SEBI will be tackling this entire thing, they're putting up a special team to handle this entire 6 months period. The team will be furnishing monthly reports to SEBI as to which all share transfers have been received, processed and approved, and why were they rejected earlier. So all of this is happening. So anybody who is holding share in non-materialized form or non-dematerialized form, and it's inherited from their ancestors, they can go ahead and dematerialize them right now in this 6 months period.
Okay, thank you so much for that, Mahima. Of course, that is in investor interest that we've taken that one up. But 3 stocks on our radar today, and we have Jasmeet here with all of those 3 which are buzzing in trade. Jasmeet.
Right, D6 system is in focus and the stock is up 3% in trade today while it gets industrial licensing approval from Karnataka. Now let's understand what is this license for. This will give them the right to produce, assemble and testing of radar system and electronic warfare system. This will also give an integration for manufacturing of aviation electronics and defense electronics system. While this is licensed, it's a 15-year tenure, and this will enable them to manufacture under category A as per Ministry of Defense. While as per the order book positions, as of FY25, the order book stands at 2,800 odd crores and book to bill ratios are 2.63. While next is Info Edge, companies out with the quarterly updates. The Q1 standing building is up 11%, while the recruitment business is up 9% in trade today. And the 99acre business, the real estate business, is up 16.5% in trade. While the last one on the list is Borosil Renewables, while the stock is up 4% in trade today as the German subsidiary GMP glass manufacturer files for insolvency in Europe. The insolvency with regards to the lesser market share and reducing the solar electronic market space. While what led to this deterioration and erosion would be Chinese dumping solar manufacturers at a very underrated price. While as per FY25, the German subsidiary and step-down subsidiary accounted for roughly euro 35.30 million, and this financial loss amounting to rupees 9 crore per month will be gone from their accounting. So it's a positive for the company. That's the reason why the stock is up 4% in trade today, while now company to focus on Indian market for expansion and development. So this is all for today in stocks to watch.
Okay. So, yeah, these are some of the buzzers today. Himen, just, your technical view on some of those stocks that we're tracking right here.
Okay, as far as Borosil is concerned, Tamanna, one gets the feeling that it's been rainbound for quite some time. A lot of hope, but maybe it's flattered to deceive up till now. It spent 3 years moving sideways. It's not bearish, but somehow the breakout has been elusive. But the way I see it, if the breakout comes in, I think it could set off like a rocket. The other stock you mentioned was DCX Systems, I believe. Downside appears limited, short-term bottom in place, volume price volume action positive. Worst is almost over. A recovery is underway, Tamanna. Borosil looks extremely positive, but somehow after 3 years, we actually need for the breakout to come in, Tamanna.
On either of those counters? Remain? Is there a buy on either of the counters?
Yeah, if you have a short-term view, there's a buy on DCX. If you have the patience, and a lot of patience, Tamanna, after 3 years, we are still not sure. But yeah, looking at the price movement, I think the breakout will be on upside. So if you have a view of a year or more, I think Borosil can be a calculated risk. Yeah.
What about you, Siddharth? How do you feel about both DCX and Borosil?
So unfortunately, Tamanna, we don't have coverage or view on these two stocks.
Okay.
InfoEdge is the only one that we cover.
And anything to add on InfoEdge?
Yeah, so if you look at, I think things are looking up, especially due to the momentum in recruiting, pace picking up. And even if you look at the IT companies, tech companies, the start of the year, we were a little bit unclear about the uncertainty about how things will pan out. But things have now started improving, and we are looking up in terms of recruitment, and hence that is looking up well. Plus, the management continues to invest strategically in high growth areas, positioning the business to gain from medium to long term value creation. So we believe that a decent revenue growth of about 12 to 15% over the next 2 years, plus some of the investments getting listed that could drive value. So it's a kind of an accumulation zone one can look at taking the stock on a gradual basis.
Okay, what we're going to do, gentlemen, thanks so much. Stay with us. What we're going to do is slip into a very short break. On the other side, top buy today, sell tomorrow recommendations, and along with some other buzzers, we focused a bit on FMCG, but we'll go outside of that on the other side of this very short break. Stay tuned.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Welcome back. You're watching India Market Open. Now, the newly listed Siemens Energy India has come out with the second quarter earnings. What stood out for the T&D player in the second quarter? Anushi is joining in for more details.
So it's a strong set of numbers that we are looking for Siemens Energy in terms of where the revenue growth is concerned. We are looking at a 57% of an uptick in terms of the revenue. Is that the company has clocked in 1,879 crore of revenue, and this is with a net profit growth of 36% is what we are seeing. However, it's also the margins which are in focus, which have shrunk to 19% as compared to 22.5% that they had seen in the last year quarter. Do note that the company follows the October to September calendar calendar year. Hence, we are looking at the Q2 results of these company. But what led to this margin downtick is, if you look at cost of raw materials were up over 98%. Along with that, even the purchase of stock and trade were up almost 3 times, and higher employee benefits along with the other expenses also weighed down on the margins is what we are seeing. But brokerages, if we had seen the earlier notes in terms of where the company just got listed a few weeks ago, they continue to remain bullish in this space, especially the power T&Ds in space is what we are seeing. The company is India's largest pure power play T&D equipment player. This outshines the likes of Hitachi Energy as well, GTD as well in terms of where the market size is considered. Jefferies expects around a 40% of our EPS CAGR between FY24 to 27, and this is on the back of the industrial play, along with the operational leverage that the company will have. Even Antique had a view on this, that the T&D capex continues to remain on a stronger footing, and Siemens Energy is to be a likely key beneficiary of this. Company also has an order backlog of 15,000 crore, providing strong medium-term revenue visibility going forward. Now, Antique over years forecast a 35% of our earnings CAGR between the FY24 to 27 period. Whereas if we look at Motilal Oswal's view, they say that the expected revenue to PAT CAGR is 25 to 31% over FY25 to 27, and margins are expected to increase to 21.4%, but this is by FY27 that they are looking at. So overall, it's a good set of numbers that we are seeing is the margins wherein most of these contraction has taken place, but brokerages have continued to remain bullish on the counter.
Okay, thank you for that, Anushi. That's on Siemens Energy in terms of the numbers itself. But I want to quickly pull up on your screen the general insurance data that has come through. You have gross direct premium, which is equivalent to top line, which has grown by around 5% odd. Bajaj Allianz is the strongest growing player within that space, at least for the month of June. 17% growth is what they've clocked. Go Digit is the other one, 12% higher. And the third listed player, ICICI Lombard, has actually de-grown by 10%. Let's pull up those stocks, see if there's a reaction on any of those. Bajaj Allianz or Bajaj Finserv, Go Digit and Lombard. But my reckoning is, there you go, you see a bit of a spike on Go Digit for sure with that 12% odd growth. Lombard, can we pull up Lombard please? Nothing much, frankly, on any of those.
Nothing much anyway. I think 0.5% down on ICICI Lombard is still more movement than you're seeing across the markets. Apart from a few outliers here and there, I mean, Jayaprakash Power up nearly 20%, Godrej Consumer moving smartly today. You have some of those kind of moves, but otherwise, very, very dull day in the markets today. Siddharth, is this a market waiting with bated breath for what comes next on the India-US trade deal? Is it some fear about what's cooking with Jane Street? What do you think is behind this very muted mood?
Yeah, I think, Tamanna, the biggest overhang on the market is the 9 July overhang of the US tariff deadline. And the entire street is waiting for the mini interim or whatever nomenclature we give, but a deal with US in terms of tariff that could provide a kind of a relief in the near term. Apart from that, I think the Q1 result season is just about to kickstart this week. That could be another trigger for the markets in the near term. And I think apart from that, not much of factors that market is looking for. We are already very close to all-time highs. US markets have already reached the new highs, but as we are seeing across segments, the business updates have been started coming in. So mixed kind of views, not much in terms of Q1. Definitely Q1, the overall expectation is that the quarter will be, as we step into Q1, would be one of the first quarters where we start seeing the improvement in the earnings. Last 4 quarters, we have seen low single-digit earnings growth, and this is the quarter where you can say the crossover has to happen for the markets to gain strength from here.
Siddharth, just a quick word on insurance. You've seen not too much move in all. Go Digit, I think, is showing some signs of reaction to its numbers. Just still about 0.25% down, but still slightly on the up move. Now, insurance has been a sector which has been in the spotlight after a lull. Do you think ahead of their quarterly numbers, we can expect some good results or good numbers from the insurance pack? Anything that you're liking, or you would stay away for now?
Sure, I think life insurance is something which are showing much higher growth, and even the overall margins are improving for life insurance companies because of the changing mix. If you look at general insurance, I think there is some recovery seen in the motor segment. Healthcare segment is something that is being weighed down by the transition in terms of accounting plus elevated claims. So overall, what we see is that life insurance that continues to do well is likely to report strong numbers. So an HDFC Life, SBI Life, then can do well. Within the general insurance space, I think motor insurance is something that is doing well. I would like to have a positive view on a health insurance space, but more from a long-term perspective. So you have some of the pure play healthcare, health insurance companies likes of Niva Bupa Healthcare. But again, as I said, the quarter numbers are not expected to be that great, especially as the sector transitions in terms of the accounting norms. So some of that effect will come into play, and that kind of lead into a subdued earnings for the quarter. But from a long-term perspective, I think healthcare, health insurance as a pure play, that could be a good long-term interesting play. And Niva Bupa is something that we have been liking for some time now.
Okay, thank you so much, Siddharth, for speaking with us today. Great to have you on as always. Siddharth Khemka there, on his view on the insurance space. I think another interesting and important story there is Eternal. I want to see what's happening with the Eternal stock right now, because Morgan Stanley today saw this as a mixed bag. Now, here's what's happened. There's been a leadership change in the food business. Rakesh Ranjan has stepped down as CEO after a 2-year tenure, and that's actually the end of his tenure. Aditya Mangla has stepped in as the new CEO again for 2 years. So the announcement follows earlier reports of his planned exit. That's Rakesh Ranjan. His tenure ended on the 6th of July. And Aditya Mangla, the new food delivery CEO, is currently head of product for food ordering and delivery. He's been with Eternal since 2021. Now, as far as food delivery is concerned, it accounts for 45% of the total business. So it's a sizable chunk of Eternal. Its 3-year growth CAGR has been 30%. Currently generates 1,700 crores of annualized adjusted EBITDA. Here's how Morgan Stanley sees it. They've maintained an overweight on the stock with a target price of 320 rupees, but have gone on to say that leadership changes could have a mixed effect on sentiment. Zomato's continue to gain market share despite multiple changes. Pessimists may raise concerns around multiple changes in leadership. Optimists may look upon the change as a strong culture. Think both aspects have their merits. There has been stability at the founder level where ultimate accountability lies. I thought it was an interesting way to see it. As long as Dipinder Goyal is there, it doesn't matter who manages the rest. Having said that, the food business is a very, very important vertical. Dharmesh Khan joins in now on the conversation. He's head equity research, Chola Securities. Very good afternoon, Dharmesh. In fact, let me pose this question on Eternal to you first. A 2-year tenure for a CEO, does that sit right with you? Or do you think that it's a different way of doing business?
Good afternoon, Tamanna. I mean, 2-year tenure is a too short term for a CEO position. At least 5 years should have been there. And these people are there in the business for a long period of time. So, I mean, why this trial and error kind of concept has been adopted? So, to my mind, rather than sentiments, this can also have an impact on the earnings potential and revenue potential of this company, because too frequent changes in strategy can lead to, drawdowns on the profitability as well. So stability of trajectory is what is being desired for any upcoming business, and there I think the business itself is very disruptive in nature, and then if you are getting disruptive through the frequent changes in management, doesn't sit or augurs well with the business. Having said that, I mean, in this space, if you want to stick to a concept play on the food delivery business, this company offers you the best option. So Eternal remains a long-term buy pick from our end. We are not recommending Swiggy to that extent, but one has to see this frequent changes and how this is going to pan out. So in the short term, it's a difficult situation for them.
What do you think about it, Harsh? A 2-year tenure for a CEO's position, and to be fair, they can say it's not like we moved anyone out. This is the way we function. 2 years and then you mix things up.
Well, it's worked for them, at least up until now. So it seems like a formula which is working for them, and therefore they're implementing it.
Yeah, so you see no issue with it at all. Hemant, I mean, obviously the technical view on Eternal, if you have one, but also, your view on this management style, why not?
I don't think I'm the right person to comment, but even I think so. 2 years is albeit a bit short, so I'm not sure if things can be implemented and turned around. So I would also feel that a longer tenure makes more sense. Eternal 266, 256. Things have turned a bit positive for Eternal after what I thought things were not very fine. But yeah, thing is, it's gone up for 3 months from the bottom, Tamanna. So I think it's walked into a small correction. If it closes below 256, it slips down. It's a consolidation phase in an up move, I believe. About 266, things should start looking up again.
Okay, Hemant, curious to know your view on what's happening with regard to some of these amine counters. Balaji, Alkyl, both of them buzzing in trade today.
Well, frankly speaking, Harsh, if we start with alkylamines, it peaked in July 21, and it's been correctives from there till a few months back. So, frankly speaking, it's 4 years of a down move. It looks fabulous on technical parameters. Thing is, it has moved up for 6 months from the bottom. 1, 2, 3, 4, 5. Sorry, 5 months, and you're walking into a virtual roadblock at 2,500. But the way I see it, 4 years on a decline, I think it looks very compelling. Once again, on technical parameters. As far as Balaji is concerned, I believe alkylamines is more like a Rolls-Royce. Balaji is more like a Maruti. So looks good. Alkyl looks very good.
Got it. Dharmesh, do you have a view?
I mean, Harsh, this is more of a trading pop to my mind because even after such a strong correction, the stocks are trading at quite high P multiples, and these are specialty chemicals used in various derivative kind of formulations. So it's a B2B kind of a play. And when the concept newly came, it did have a strong buying attraction, but end of the day, it's a commodity play, and that too, volume-wise, a very minuscule kind of a commodity play. So I would rather avoid this from a fundamental buy kind of a perspective for a year or so. Trading pops can always be there.
Okay, so that's a trading pop. Stay on, hold that thought. We're going to a very interesting development today, and I think this has been a matter of chatter all through the day, which is the UAE launching a new golden visa program, making it significantly cheaper and more affordable for all, including Indians, to gain lifetime residency in the country. My colleague Malika has all the details on the new golden visa. Malika, how much is it for? How much cheaper than before? And for how long does it give you the right to stay in the UAE?
Definitely. Thank you so much for that, Tamanna. Let me give you all the details that is. But first of all, what is the UAE Golden Visa? The UAE Golden Visa, as you can see on your screen, is a long-term residency visa that allows individuals to live and work in UAE for 5 to 10 years. But under the new scheme, under the nomination-based scheme, this could be a lifetime of a chance, and it is renewable under certain conditions. What's the purpose, if you ask, of this UAE Golden Visa? There are 4 main points. It encourages foreign investment, it strengthens the skilled workforce, it supports sectors like real estate, business, culture and innovation. Now, going to the point about the differences between the traditional golden UAE visa and the new nomination-based UAE visa. The first is the cost difference. Now, the old property-based golden visa required you to obtain a property worth 4.5 crore roughly. That was the amount that you had to invest in a real estate in UAE. But now that sum falls down to 23.3 lakh. So you do not necessarily need to buy a property. You can just buy the visa with this much amount. And the second difference is that the previous one was mostly focused on high net worth individuals and real estate investors. But this one is open to professionals like you and me, educators, YouTubers, and other skilled individuals. So it just opens, the
number of professions and professionals that can apply for this visa. The third difference is the fact that while the old base property golden visa had only a 5 to 10 year validity, which could open on some certain options and conditions applied, this one has a lifetime worth of residency. So you buy the visa and you can live there forever. Also, the visa ends if property is sold or divided, and this was the condition applied to the old one, the traditional one. But in the new one, you do not necessarily have to maintain an asset in order to have your visa and have your, maintain the validity of your current visa. Let me take you quickly through the selection process. There are 4 key steps. The first one is that Indians can file their applications remotely through one Vasco Centers or registered Rayad Group. This is the consultancy that will be handling all the visa applications from India. The second is that a background check will be done for all your criminal records, anti-money laundering compliance, and also they will check your social media presence to check what kind of personality do you maintain out there. And the step 3 of is that the assessment of how the applicant might contribute to UAE's economy or society through culture, finance, trade, science, or professional views. So they're basically going to check how you contribute to their economy. And the fourth one is once all of this is done, the application will be sent to the government, and then the government of the UAE will approve your visa.
Okay, interesting. Thank you for all of those details, Malika Mishra there. So, Harsh, have you done all the preparation for your application for a golden visa?
Do you want me to apply for a golden?
Do you think it's worth it?
Yes. So for those residing in the UAE and for those really interested in being part of or making income from that particular country, yes, it makes sense.
But so many market participants and prominent
Yes.
traders and investors are already sitting in the UAE.
Correct. So for them, it makes real good sense, right? Because
Yeah.
they don't have to invest a chunky 4 crore rupees and lock that in. Or maybe it's not chunky for them.
Yeah, but 23 lakhs is definitely cheaper than 4 crores. Dharmesh, I wonder what you think. Are those, is this all the buzz? Is that application ready for you?
No, Tamanna, I love my country, and I think there's enough opportunity here in India to make good wealth and be a good contributor to your own country's income rather than contributing to somebody else's country's wealth.
Yeah, so interesting. All right, Hemen, as we get to that leg of the show, let's get in your BTST ideas, and of course, if you have any quip or observation on the golden visa story, you're most welcome.
Sounds very tempting, Tamanna. Overtaxed country, crumbling infrastructure. No, but like Dharmesh said, I'm an Indian, no matter what.
No, that is true. But the fact that they have reduced the rates so much of people coming in, I thought that was astonishing. I mean, it's actually right now a global talent hunt going on.
I think it's phenomenal. If I was younger, I would have definitely gone for it because it opens up a plethora of opportunities. Thing is, family, there are kids here, so too late. But sounds fabulous. Younger would definitely go for it.
Okay.
Stock that you mentioned, BTST, is Britannia, Tamanna. It's breaking out of a 6-day consolidation phase. It's a BTST, but it can be slightly longer than BTST also, Tamanna. One can buy at 50 at 70, stop loss of 50 at 50, target of 59.10, risk reward ratio 1:2.
So Britannia is the only call today?
Yep, I think Britannia is the BTST. Okay. The earlier positional calls were there, but this is the BTST.
BTST is Britannia. All right, JP Power. JP Power is a stock in focus this afternoon. It's zooming in trade. It's a subsidiary of the troubled JP Associates, for which Adani Group has emerged as a top bidder. This is something that we reported on Friday. Vishwanath Nair joins in with more details.
Right, so as we can see, about 20% up nearly in trade for JP Power. It's given a lot of stellar returns, about 1,000% up in the past 5 years alone. primary sort of mover for the stock at this point in time is a meeting that is happening of the Committee of Creditors for Jayaprakash Associates, which is a parent company which is under insolvency at this point in time. The lenders are actually discussing all the resolution plans that they received. They received 5 resolution plans, of which, of course, Adani Group is the leader of that pack, with about a 14,000 crore offer for the entire assets that Jayaprakash Associates owns. The second in that list is Dalmia Bharat with 11,000 crore offer. So it's clearly showing up as good value for the assets that it owns. And one of the assets that it owns is 24% in Jayaprakash Power Ventures, which is a subsidiary company. And therefore, there is some amount of interest among the investors of this company as well to see how exactly Jayaprakash Associates insolvency proceedings go, who actually ends up owning this company, and thereby the impact that will have on JP Power, where you will likely see some amount of either they will sell it to somebody or they will continue owning the company and make further investments if necessary.
All right, so that's why JP Power is in focus. I mean, I don't know, Dharmesh, would you look at this as a momentum trade at all?
Yeah, Tamina, definitely this is a momentum trade, and till the time the deal is inked, this trade will continue. But post that, it will be more back to the normal business, how the revival happens, and how the businesses which are stuck can be again brought back to on the floor. So to my mind, if I have to buy, I would buy rather Adani Enterprises and for a long-term haul. So when I say Adani Enterprises, it has to be 5 to 10 year kind of a perspective, because it's more of an incubator kind of a company for many of the businesses. So that is more attractive to me rather than from a fundamental long-term perspective, rather than buying a JP Power or a JP Associate. But yeah, definitely a momentum trade is on whenever such kind of a deal happens.
Okay. Himen, on the charts, I mean, already huge run up. If you're holding, is this a time to exit?
I'd exit after a day or two because we are coming close to its swing high. But I believe it can go up to 28, but I'll book some tomorrow.
28. So is there a short-term trade here?
No, if the stock moves from Tamanna 13 to 24 in 3 weeks and a multi-week resistance at 24, no, it's not a fresh buy.
It's a hold, if at all, and not a sell either. That's the buzz on JP Power meanwhile. But, what's interesting is what's happening with the index as well. I mean, if you look at the range for the Nifty today, it's barely moved. Is this also an opportune time perhaps to build positions for whatever's coming in the next 2 or 3 days or for the rest of the week?
I think so. I think it's a lull before the storm. If you look at some of the mid caps on the small cap sectoral indices, everything seems to point towards an impending upside. Whether it takes some more time, is there a shakeout before that? I don't know. But once again, I repeat, I'd be more bullish than bearish. Things are shaping up, and yeah, it is a build up towards a higher move, I believe, Tamanna.
Okay. Want to take a couple of stocks which are really buzzing, and one of them we in fact spoke with as well, Puravankara. Himen, do you have a view with regard to Puravankara? Perked up 4% on the back of a new project that they are planning to launch.
Okay. I don't track Puravankara very closely, but having said that, medium-term base in place, good about 300, downside limited, worst is over. I'd be more bullish than bearish, stop loss 275. I believe a recovery is underway. As of now, it's a recovery, not a rally, but it still has not run its course. Simply put, further upside.
Okay, and Dharmesh, do you have a view with regard to real estate?
Yeah, Harsh, I mean, we did have a view where we were recommending buy on all the real estate companies, but the run-up which we have seen in most of the companies, I think it's time to take profits off the table. To my mind, for next 6 months to 1 year kind of a time frame, they will go into more of a sideways, time-wise consolidation rather than a continuity of the trend which we have seen. So it's time to take your profits away from real estate counters.
HUL was the other big gainer in trade today, Tamanna. It's 3% higher. It's the top gainer on the Nifty 50. Himen, do you have a view with regard to any HUL in particular? I know I've taken FMCG from you, but HUL in particular.
Well, big daddy of FMCG, playing catch-up, good about 24.20, nothing to lose. Further upside seems like a cinch.
nothing to lose. Sorry, so 24.20 or nothing to lose at this point either. So you go buy right now, Himen?
Yeah, it's spent 8 weeks. So 24.20 is expected to be taken out this week or the next.
HUL, the big daddy, has woken up as far as it goes, and UBS has an interesting note on it. In fact, that was our big brokerage call of the morning, because a positive note after quite a while coming in from UBS on an HUL. But another space that we should look at is India's fast growing EMS, that's electronics manufacturing sector, which is facing a new hurdle. The government has imposed import restrictions on gold compounds. That's a key raw material that is essential for the manufacture of critical electronic components like semiconductors and motherboards. Puneet is joining in to tell us why this could be a pain point.
Well, thank you for that. So definitely it's a big restriction coming in from China, and that's largely actually bound by India, because the DGFT, which is the Director General of Foreign Trade, has actually restricted the import of gold compounding. Now the restriction is coming in the fact that it was earlier a free, that was the tag put for importing this particular component. Now that has been now moved from a free component to a restrictive component, which essentially means that they will have to go back to the government and the DGFT and ask for special permission to import gold compounding. Now that's, as you mentioned, it's largely used in electronics as a stabilizer component, and hence it's critical in functions such as laptops, TVs, amongst others. So we could see some potential impact of that on players like Dixon Tech, Keynes Tech, as well as Amber Enterprises, and something like a Sirma as well, which are part of the television space, as well as mainly in the mobiles as well as the laptop space. So those three segments could get impacted because of this. Today we are seeing some positive move on Dixon, and that's largely led by a brokerage call from BNK, but this could be a long issue for all these EMS companies, and the likes of Dixon amongst others could be impacted because of this.
Thank you so much for that, Puneet. And Himen, Dharmesh, thank you so much for coming in, giving us those views as well. We'll let all of you go on that note. A minute and a half from close. Let's quickly zoom in. It's been a very, very range-bound day of trade, at least on the Nifty 50 index. We've been in a tight range of around 80 odd points. The Bank Nifty too, quite muted in trade this Monday. Let's look at it intraday as well on the Nifty, and that'll give us perspective. Just look at the day's high to the day's low. Quite a tight band that we've played in today. Let's look at the heat map, and within that, consumer stocks, of course, leading from the front today, and HUL within that consumer pack doing the best, 3% higher on HUL, but a Kotak Mahindra Bank also there. Asian Paints, ITC, so largely consumer. When you're looking at the losers, well, it was defense and IT under some bit of pressure. Also, you're seeing some pressure on auto. Maruti is sitting there. Hero also sitting in the red among those. Let's look at sectors, and within sectors, you'll likely see the same kind of trend playing out. FMCG, consumption were the two baskets which did the best in trade today, 1.7% higher on the Nifty FMCG. Defense, IT were the two top laggards outside of media. Metals too seeing some bit of pressure. Let's look at the broader markets, and before we look at broader markets, let's look at the advanced decline on the index. 1/3% low on the Nifty mid cap. Very similar kind of number on the Nifty small cap as well. Again, the band was quite tight, around 120 to 130 points is what the Nifty small cap has traded in. So quite range bound in that sense. But let's look at the advanced decline and the breadth as well. And the breadth clearly worsened as the day progressed. We've closed also in a tough kind of breadth environment. That's at least what at close, it's at 1450 declines to just about 850 advances. So the breadth was quite difficult at close. Let's look now at the BSE 500, the top gainers, top losers. Those are some names for you. A Relaxo standing right up there on top, 9% higher. Some of the amine counters were in focus. Alkyl, Balaji, Godrej Consumer, we spoke about that one. Metropolis Health was up 5% as well. And AkzoNobel also doing fairly well for itself. Borosil Renewables also up 4%. There was an announcement there. Deepak Fert, Equitas on the back of their quarterly updates, stock down nearly 6%. And then there was Jubilant Foods as well, down 4% on the back of the quarterly update. But what I'm going to do is quickly look at what are the cues to look out for tomorrow. That's the Russia foreign exchange reserves. Not much of an impact on where India markets is concerned. but those are some names for you in terms of dividend adjustments on Indian companies. The solar industry is also there, Titan, JSW Steel. But believe nothing else outside of that in terms of corporate action. I want to also quickly highlight that we spoke with TFS earlier today. The IPO opens today, so that's one piece you want to know. But let's leave you with a conversation from Travel Food Services, which is TFS, which we had with the company's management today. And with that, out of time as well on this edition of India Market Close. But that conversation.
In terms of growth, we have seen the last 2 years, coming out even out of COVID during a challenging period. No doubt the aviation industry has truly, even before that and now more so, embarked on real growth. See actually consumers, the way passenger growth is very strong. So our numbers, as you'd seen, been around last 2 years, approximately a bit over 25% growth in terms of revenue. And just probably while, talking a bit about our numbers, but just maybe the industry as a whole, looking at that, we see the growth over the next 10 years of passenger growth as an underlying element expected to be about 9 to 10% over the next few years. Coupled with that, the airport travel, QSR and lounge industry particularly is expected to go about 20%, just the industry itself. And that's the opportunity ahead of us, aside from obviously gaining market share in those areas which we would focus on business. In the industry itself, over the next 10 years, is expected to have a 20% CAGR. So I think we're in very fast-growing industry and in a superb country, as we all believe very aggressively here, that it's the right place to be in, no doubt. So I think all of that coming together surely puts us, hopefully, a great runway ahead.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across.
Hello and welcome. You're watching Market Express and I'm your host Samakshi Bahugna. Now let's get straight into the show. Viewers, Indian equity indices traded in a narrow range to end on a flat note with Nifty at 25,450 levels. Sensex also ended the day little changed around 83,400 levels. Most sectors ended the day in the red. Defense, media and IT were the top laggards. FMCG consumption remained resilient. 8 oil-producing nations of the OPEC Plus alliance agreed to increase their collective crude production by 548,000 barrels per day. Now, oil prices slipped after this announcement. Brent crude futures fell 0.4%, while US West Texas Intermediate crude, that is the WTI crude, was down 1%. So these countries have been unwinding 2.2 million barrels per day of voluntary production cuts, which are separate from the wider OPEC Plus strategy. Meanwhile, Goldman Sachs said that it expects OPEC Plus to lift oil production quotas by 550,000 barrels per day in September. This is as they look to normalize spare capacity amid resilient global oil demand. Godrej Consumer Products expects a robust Q1, with its standalone business set to deliver high single-digit value growth. Now, the home care segment is poised for double-digit value and volume growth, while personal care sees low single-digit growth. Consolidated revenue is also projected to rise double digits with high single-digit volume growth. On to the brokerage verdict now. Macquarie maintains a neutral rating on Godrej Consumers with a target price of 1,200 rupees. Ahead of Q1 of FY26, the brokerage highlights a healthy domestic volume performance, projecting a 5% volume growth and a 10% rise in consolidated sales. So EBITDA is expected to grow 7% year-on-year, though margins will likely remain under pressure. Dabur reports improving volume growth in Q1, supported by strong urban demand and sequential recovery. However, beverages segment faced challenges due to unseasonal rains and a shorter summer season. The company expects consolidated revenue to grow in low single digits, with profit growth slightly lagging behind. Home and personal care categories, including oral, home and skin care, are set to perform well. Healthcare and juices are projected to deliver double-digit growth, with Dabur Honitus expected to grow over 40%. Also, Dabur's international business is poised for double-digit growth on a constant currency basis. Metropolis reports a strong start to the year, with Q1 revenue soaring 23% year-on-year. The company's specialty segments showed impressive growth, climbing 15%, while the True Health Wellness surged ahead by 20%. So business-to-consumer revenues also rose by 15%, reflecting robust demand. Notably, specialty revenues led the charge with a remarkable 35% increase. Overall, Metropolis' consolidated revenue growth of 23% underscores its expanding market presence and solid performance in the first quarter. The Shipping Corporation of India has signed a memorandum of agreement to acquire two second-hand very large gas carriers, or the VLGCs, each with a cargo capacity of approximately 82,000 cubic meters. So these vessels are expected to join SCI's fleet in the second quarter of the financial year of 25-26. So this strategic acquisition aims to expand SCI's tonnage and strengthen its position in the growing liquefied petroleum gas, or the LPG transportation market. So the addition of these VLGCs will enhance SCI's capability to actually meet the rising global demand for cleaner fuel alternatives, boosting its LPG carrying capacity significantly. So the deal is valued around $127 million and is projected to add about 260 crore rupees in the annual revenue at current charter rates. Shah Metallics reports a mixed performance in Q1 sales, with overall sales declining between 9 to 18%. So stainless steel sales saw a significant drop of 18%, totaling 19,813 metric tons. On the brighter side, sponge iron sales rose by 5%, reaching 2.56 lakh metric tons. However, carbon steel sales fell by 9% to 4.1 lakh metric tons. Notably, carbon steel remains a key revenue driver, accounting for nearly half, 49% of the company's revenue in fiscal year of 2025. So the company faces challenges in stainless and carbon steel segments, while sponge iron shows modest growth. Senco Gold shines in Q1 of FY26 with total revenue jumping 28% year-on-year, driven by a 24% rise in the retail sales. So the company's same-store sales grew 19%, supported by strong festive demand across the key regions. Diamond jewelry sales surged 35%, while old gold exchange contributed a significant 40% to total sales. So gold prices increased 5% quarter-on-quarter and 32% year-on-year, yet consumer demand remained robust, especially for 14,000 and 18,000 jewelry. So Senco also expanded its footprint by adding 9 new showrooms, taking the total to 179 outlets nationwide. Development reports a robust order book of 1,261 crore rupees as of June 30th for Q1 of FY26. During the quarter, the company secured cumulative new orders worth 264 crore rupees while successfully executing orders valued at 231 crore rupees. So the closing order book reflects a strong pipeline, largely driven by orders from the oil and gas sector. This solid order inflow and execution underline development's steady growth and continued focus on key industry segments. Tata Steel has received a demand letter from the Deputy Director of Mines, Jaipur, seeking compensation of 1,903 crore rupees. So the notice covers the period from July 2023 to July 2024 and alleges a shortfall in dispatches from the Sukinda chromite block. Tata Steel, however, disputes the claim, stating that the demand lacks any legal justification. The company has announced plans to challenge the government's claim through appropriate legal channels. Jubilant FoodWorks reports a strong performance with consolidated revenue rising 17% year-on-year to 2,261 crore rupees. The company added 73 new stores during the quarter, expanding its total network to 3,389 outlets. Domino's India same-store sales growth stood at an impressive 11.6%, while Domino's Turkey posted a modest 2.2% growth. Mahindra Lifespace launches a new 2,500 crore project in Pune and unveils a new tower at Mahindra Citadel, offering premium 1 BHK homes. So this launch marks the latest phase in their flagship development, continuing the momentum from earlier successful phases. RVNL receives a letter of acceptance from Southern Railways for upgrading the electric traction system. The 143 crore project is set to be executed over a period of 2 years, marking another strategic win in RVNL's growing portfolio of infrastructure work. Cochin Shipyard signs a memorandum of understanding with HD Korea Shipbuilding and Offshore Engineering. So the partnership focuses on long-term cooperation in shipbuilding and maritime development. With KSOE's expertise in the commercial and naval platforms, the alliance supports India's Maritime Vision 2030 and Amrit Kal Vision 2047, underpinned by a $250 billion Maritime Development Fund. UBS remains bullish on HUL, maintains a buy with 2,800 target. Now, the brokerage firm sees a compelling risk-reward setup for Hindustan Unilever, expecting a strong rebound in H2 of FY26 and continued earnings momentum into FY27. So, UBS says that while parts of the company portfolio need fixing, HUL's dominant scale and improving growth outlook support the valuation. Jefferies maintains buy on IndusInd Bank with 920 rupees of target despite a 3% quarter-on-quarter dip in the deposits and a contraction in loans. Jefferies remains optimistic. So brokerage highlights limited deposit outflows and the removal of the negative credit rating watch as positives that could support investor sentiment. On the other hand, Morgan Stanley stays underweight on IndusInd Bank with a target price of 750 rupees. The company's Q1 was muted. With loan growth under pressure, Morgan Stanley expects a gradual earning recovery from Q2 but flags concerns over the shrinking share of high-margin loans and uncertainty around the new CEO. Morgan Stanley stays overweight on Jubilant Food. Target price at 781 rupees. The company's Q1 performance meets expectations with 11.6% like-for-like growth, marking the third straight quarter of double-digit gains. So the top line is driven by strong same-store sales and a 10% year-on-year rise in the store count, reinforcing confidence in the growth trajectory. Morgan Stanley maintains overweight on Nykaa with the target price of 225 rupees. The company's Q1 performance is in line with beauty growth holding strong and fashion showing sequential improvement there. So net revenue is expected to rise in the mid 20% range, driven by robust performance across businesses, including House of Nykaa brands. Eternal, Zomato's parent company, has announced a leadership change in its food delivery business. Rakesh Ranjan has stepped down as the CEO after a 2-year tenure effective July 6. Aditya Mangla, currently head of products for food ordering and delivery, has been appointed as a new CEO for a 2-year term. Following board approval, this transition aligns with earlier reports of Ranjan's planned exit. B&K Securities has initiated coverage on Dixon Tech with a buy rating and a target price of 18,946 rupees, signaling strong growth potential. So the brokerage highlights Dixon's unique position to capitalize on the electronics outsourcing trend, driven by new customer additions and component manufacturing. B&K projects a robust 42% revenue CAGR and 69% of PAT CAGR over FY25 to 27, fueled by Dixon's scaling operations and strategic expansion. Prestige Estates has strengthened its control over 2 subsidiaries through recent acquisitions. So the company's arm acquired a 49% stake in Prestige Notting Hill for 300 crore rupees, bringing its ownership to 100%. Also, it purchased a 48.99% stake, which is close to 49% stake in Prestige AAA Investments for 25.6 crore rupees, increasing its stake to 99.99%. US-India trade talks are stuck with no more rounds left for a small deal. So an interim agreement might cut tariffs on some goods with reciprocal exemptions possible. India won't budge on agriculture or dairy. Tariffs could revert to earlier levels if no deals is reached, extending talks. So India pushes for labor-intensive sector benefits, but sectoral tariff exemptions are unlikely in a mini deal. Both sides hope for a bigger trade agreement later. The Securities and Exchange Board of India proposed new governance rules for market infrastructure institutions like stock exchanges, but faced objections. SEBI suggested appointing 2 executive directors as key personnel reporting to both MII boards and SEBI. So stock exchanges argue that this dual reporting could weaken the managing director's authority and create confusion. The lack of clear roles for these directors raises concerns about the accountability. SEBI aims to strengthen oversight due to past governance issues, but exchanges worry about the disrupted leadership. Public comments are due soon, and SEBI may revise the plan. Puravankara is set to redevelop 8 societies in Mumbai's Chembur with a gross development value of 2,100 crore rupees and a potential of over 1.2 million square feet. So in its FY25 business update, the company reported a 15.3% decline in the pre-sales to 5,006 crore rupees from 5,914 crore rupees year-on-year. However, collections rose 9% to 3,937 crore rupees from 3,609 crore, and average price realization increased 10% to 8,830 per square foot. Borosil Renewables stock surged 4% today, following news that its German subsidiary GmbH Glass manufacturer Brandberg GmbH filed for insolvency due to deteriorating European solar market conditions. So the filing, prompted by Chinese solar module dumping, ends monthly losses for 9 crore rupees with a total exposure of 35.30 million euro as of March 2025. So the company will now prioritize expansion in India's booming solar glass market. DCX Systems has received a 15-year industrial license from the Karnataka CES office, enabling production, assembly and testing of the radar and electronic warfare systems, along with avionics and defense electronic equipment. So the license granted under the Ministry of Commerce and Industry allows manufacturing of Category A classified items as per the Ministry of Defense. So with an order book of 2,855 crore rupees as of March 2025 and a book-to-bill ratio of 2.63 times of FY25 revenue, DCX strengthens its position in India's defense sector. Info Edge posted robust growth in Q1 of FY26. Standalone billings rose 11% year-on-year to 644 crore rupees. The recruitment solutions segment, including Naukri.com, grew 9% to 470 crore rupees, while the 99 acres real estate platform saw a 16.5% surge to 94.4 crore rupees, reflecting strong performance across the key verticals. French IT giant Capgemini will buy India-based WNS for $33.3 billion in cash to boost its AI capabilities. So the deal at $76.5 per share offers 17% premium. So it aims to strengthen Capgemini's AI-driven targeting growth in the US market. WNS is a global business process management company based in India, offering digital transformation services to over 600 clients, including Coca-Cola and T-Mobile. So the acquisition is expected to increase Capgemini's earnings by 4% in 2026 and 7% in 2027. Both boards have approved the deal, set to close by year-end, pending approvals. Tahavvur Hussain Rana, a key conspirator in the 2008 Mumbai attacks, has confessed to being a trusted agent of the Pakistan Army and ISI during NIA interrogations. So extradited from the US in April 2025, Tahavvur Rana admitted to being in Mumbai during the 26/11 attacks, providing logistical support to Lashkar-e-Taiba's David Headley. So his revelations implicate ISI officers Major Samir and Major Iqbal, hinting at a broader conspiracy involving Pakistan's intelligence network. Harpreet Singh alias Happy Passia, a wanted Khalistani terrorist linked to 14 to 16 grenade attacks in Punjab, is set to be extradited from the US to India. So arrested in Sacramento on April 17th of 2025 by the FBI and ICE, Passia faces charges under the UAPA for orchestrating terror attacks. The NIA, which had 5 lakh bounty on him, and Punjab police are coordinating his extradition, expected soon under tight scrutiny. Monsoon fury has claimed 78 lives in Himachal Pradesh since June 20th, with flash floods, landslides and cloudbursts devastating Mandi, Kangra and Chamba. Infrastructure damage exceeds 400 crore rupees, with 269 roads closed and hundreds of homes destroyed. In Uttarakhand, 4 districts, Tiri, Uttarkashi, Rudraprayag and Chamoli are on the high alert for landslides due to heavy rain forecast. So rescue operations are underway, with authorities urging caution. BRICS condemns Pahalgam terror attack, unilateral tariffs and strikes on Iran. In its Rio declaration, the BRICS bloc strongly denounces the Pahalgam terror attack and calls for zero tolerance on terrorism. The group also criticizes unilateral tariffs and military strikes on Iran, while notably avoiding direct mention of the US President Donald Trump. The declaration targets Israel's actions in the Middle East but steers clear of censuring member nation Russia. US President Donald Trump issues a sharp warning declaring that any country aligning with the anti-American policies of the BRICS bloc will face an additional 10% tariff with no exceptions. So the statement posted on his Truth Social account follows BRICS condemnation of unilateral tariffs and military actions. So while Trump doesn't specify which policies he deems anti-American, the move signals a hardline stance as global trade tensions escalate. China has announced that the BRICS grouping is not seeking confrontation. The statement comes as a direct response to President Donald Trump's threat of imposing an additional 10% tariff on nations aligning with what he calls the bloc's anti-America policies. The Chinese Foreign Ministry spokeswoman Mao Ning reiterated that trade and tariff wars have no winners and protectionism offers no way forward. Hopes for a Gaza ceasefire rise as Israeli PM Benjamin Netanyahu meets US President Donald Trump in Washington to discuss a 60-day truce and hostage release deal. So indirect talks resumed in Qatar, but challenges remain. Palestinians fear renewed conflict while hostage families demand a full agreement. Trump pushes for progress leveraging recent Iran strikes. Netanyahu, bolstered by domestic support, may have room to negotiate despite far-right opposition. Hamas, weakened by Iran's losses, could make concessions. Trump seeks to advance broader Middle East peace efforts, including Israel-Syria and Israel-Saudi talks. Well, with that, viewers, it's a wrap on Market Express, but please stay tuned to NDTV Profit.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Nifty and Sensex closed higher for the second consecutive day. Benchmark indices closed flat for the day. US Commerce Secretary Howard Lutnick confirms they will reimpose tariffs on imports from major trading partners starting August 1st. So far, the Trump administration has struck deals with the UK and Vietnam. Rupee closes 46 paise weaker against US dollar at 85.86, making it the lowest close level since a month. Sources say SEBI is reconsidering terms of its proposed governance norms for market infrastructure institutions after key stock exchanges reportedly expressed apprehensions about the plan. The two main securities depositors in India, CDSL and NSDL, launched a new feature in their investor apps that makes it easier for shareholders to make informed decisions when voting on important company matters. The UAE makes its residency program more accessible to professionals across sectors as it introduces a new type of golden visa based on nomination with some conditions, unlike the current practice of investing large amounts in either property or business in the country. Aditya Mangla appointed as CEO of food ordering and delivery business at Eternal, formerly known as Zomato. Prime Minister Narendra Modi at the BRICS summit says there should be no hesitation in imposing sanctions against terrorists and that victims and supporters of terrorism cannot be weighed on the same scale. Hello and welcome. Good afternoon. You're watching Profit 360 and this is Malika Mishra. Along the next half an hour, we will bring you the latest on markets as well as national and international news. To begin with, the Nifty and the Sensex closed higher for the second consecutive day with benchmark indices closing flat. Hindustan Unilever and Tata Consumer Products were the top gainers in Nifty, while Nifty Media became the top losing sector for the day. For more on the markets, let me quickly go across to my colleague Harsh.
Well, the Nifty 50, another day of consolidation and markets as flat as it can get. But one set of stocks really stood out in trade today. You had the consumption names led by HUL, Tata Consumer. Pretty much all of the top 10 or nearly a majority of the top 10 were consumption names in trade today on the Nifty 50. What didn't do well, it was IT to a certain extent and defense. A BEL was down 2.5%, was the top laggard on the Nifty 50 in trade today. Now let me talk about sectors as well, and broadly that's how the theme played out. Nifty India Defense was one of those laggards, metals, IT, even auto to a certain extent didn't do as well, but what's done really well is FMCG and consumption. So both of those doing really well for themselves, and the index, the FMCG index was up 1.5%, the top sectoral gainer on an otherwise very, very flat day on the Nifty 50 index. It was also a very range-bound day of trade. The Nifty 50 traded in just an 80-point band. The advanced decline steadily worsened as the day progressed. So you saw some bit of pressure on both the Nifty mid-cap and small-cap indices, which both closed around 1/3% lower. But they too traded in a decently tight band. Less than 1% is the band that they traded in. And therefore, that's how the overall and the broader market also played out. But we did see the advance decline, 1,450 declines to just about 850 advances. So that was one piece that stood out. In terms of some of the gainers, some of the amine stocks did really well in trade. Relaxo was one which was flying. FMCG largely on the back of some positive updates, especially from a Godrej consumer. So some bit of a push given to that end of the market. You also saw some of the financials come out with their numbers. Something like an Equitas was down 6% on the back of that. So those were some names within the broader BSE 500 basket, which were the top gainers and top losers for the day.
Right, thank you so much for that, Harsh. And now Indian markets have done well over the past 5 years and investors should seek to diversify. This is a word coming in from Saurabh Mukherjee from Marcellus Investment Managers. Let's listen in.
One of the things I've been telling all our clients to do over the last year or so is diversify away from the Indian market. I think the Indian market has done extremely well over the last 5 years. It's one of the best performing markets in the world over the last 5 years. But it is expensive and the economy is slowing down. And I think the chances of the rupee depreciating over the next couple of years are pretty high. Given that we are signing FTAs with developed markets like the UK, most likely America in the next few hours, given that we are signing these FTAs, I think the currency will have to depreciate to maintain India's competitiveness. Remember, China is constantly devaluing its currency. Given that China is constantly devaluing its currency, I think the chances of the rupee having to devalue are going up by the passing day. In that context, given that valuations are rich in India, given that the economy has slowed down, I think it makes a great deal of sense to diversify away from India.
Right, and speaking of the Indian currency, the rupee closed 46 paise weaker against the US dollar, setting at 85.86. This marks the lowest closing level since June of 25. And on the previous trading session, the rupee had closed at 85.4 per US dollar. US President Donald Trump is ratcheting up the pressure on global trade partners. He promised a fresh barrage of tariffs, initially targeting deals or letters with most countries by July 9th. However, a new timeline has now emerged. US Commerce Secretary Howard Lutnick has confirmed that these tariffs will indeed kick in, but on August 1st. President Trump, he says, is actively setting the rates and negotiating new deals even as we speak. Let's take a look at the announcements coming in from Washington.
They're going to be tariffs. The tariffs are going to be the tariffs. I think we'll have most countries done by July 9th, yeah. Either a letter or a deal.
I think what's happened is there's a lot of congestion going into the home stretch. And as part of the trade team, what's great about having President Trump on side is he's created maximum leverage. So by telling our trading partners that they could boomerang back to the April 2nd date, I think it's really going to move things along the next couple of days and weeks.
One of the most anticipated news developments expected over the weekend was the India-US trade deal. That has now hit a speed bump as the India delegation has come back and an announcement is yet to be made. What are the possibilities now? Well, my colleague Rishabh, who has been following this very closely, is joining us. Rishabh, what are you hearing from your sources at the moment?
Right, what we're picking up on this India-US trade deal is, of course, there are two scenarios that are brewing. One is that if India manages to get a deal before this July 9 deadline, what we're picking up is, of course, that there will be tariff exemptions for India. India will be batting to reduce that 26% reciprocal tariff that was imposed by the Trump administration. That is want number one. If a deal is to go through, the deal will be a mini deal or an interim trade deal, and it will only cover goods and certain tariff reductions. It will not cover services, visas, none of that. It will only cover purely goods in this initial interim phase of this full trade of this free trade agreement that we're seeing that is underway between India and the US. What we're also seeing is that sectoral tariff exemption that India was batting for of steel, of aluminium, as well as auto components, that is something that could be left untouched. In fact, that is something that the Trump administration is very, very pointed on and does not seem to budge on that. On the other hand, India is very pointed towards keeping its red lines drawn on agriculture as well as dairy. Those are two very, very sensitive sectors when it comes to India, and that is something that will not be touched by the US as part of this interim trade deal, at least. What we're also seeing is that Trump has announced that trade tariff letters or deals is what he said. So it could be either or a combination of the both. Both will be announced tonight, 9:30 p.m. IST. Letters will be sent out to about 12 to 15 countries, and that is something that we will look forward to. He also said that BRICS, which is a grouping of countries, namely Brazil, Russia, China, India, and South Africa, many countries have also become a part of this grouping lately. He has claimed a BRICS meet is also on in Brazil as we speak, July 6th to 7th. Trump has claimed that BRICS' policies are anti-American, and any countries found aligning with those policies, an additional tariff of 10% might be levied on those countries. So that is a new sort of spanner in the works thrown in by the Trump administration ahead of this July 9 deadline. We'll keep our eyes peeled for any updates.
Right, Rishabh, thank you for giving us some clarity. And in an exclusive interview, CII's President Rajiv Memani also told us that India is getting up for both a trade deal with the US or no trade deal at all. Meanwhile, companies are making short-term adjustments and long-term structural changes. Listen in.
I think people do their own scenario planning, and some of the things are more shorter term things, tactical things that companies do, and I think I'm sure quite a few of them are preparing for that. And some are more longer term structural changes that happen. And that I think people will want to find out what actually plays out. As far as the short term fixes are concerned, definitely people are involved. I think a lot of people have also understood what the opportunities are. They've also understood what the competitive landscape is. So to that extent, definitely there is work that's going on. And there's also a reverse side of it where, US companies would be looking at trading more with India, investing more in India. And there are some sectors where the competitiveness of Indian companies may not be as much because of some natural advantages as US. So to that extent also, those companies also, if the trade deal were to be signed, will have to be prepared for how they deal with a situation where tariffs suddenly come down by 15-20%.
In a significant development for India's financial markets, the Securities and Exchange Board of India, or SEBI, may be rethinking key elements of its new governance plan for market infrastructure institutions. Now, this comes after strong pushback from major stock exchanges, clearing corporations and depositories, collectively known as MIIs. The core of their concern is a proposed dual reporting structure for executive directors. SEBI's consultation paper, which was released in June, suggested that 2 executive directors holding ranks equivalent to the managing director would report not only to the MII's own board, but also directly to SEBI. Stock exchanges are expected to formalize these objections by July 15th deadline for public comments. All eyes are now on SEBI to see how they will respond to this industry-wide apprehension. And moving on, Eternal is in focus as the company has announced a CEO change for its food delivery business. How's the street taking this? Mahima joins us with that and more on the new CEO.
It's a part of their business strategy as to appoint CEO only for 2 years. So the past CEO, that is Rakesh Rajna, stepped down because his 2-year tenure ended on 6th of July, and Aditya Mangla is now appointed as the new CEO for the food and delivery business for 2 odd years. But to your question, basically Aditya Mangla has been working with this company since March 2021. So I think 2 years, he already knows the business well, and maybe 2 years he can bring change in the entire food delivery space. Now, why the churn? The announcement follows earlier reports of Ranjan's planned exit, and plus the tenure got ended on 6th of July. And Aditya Mangla, just a brief about him, he's currently the head of product of food ordering and delivering already. So it's a step up for him, and he's been with Eternal since 2021. So before Eternal, he also has had multiple product and marketing roles across startups and tech-driven companies. Now, just to give you as a perspective of food delivery business, that's almost 45% of the total revenue for food for Zomato. The 3-year CAGR has been around 30% growth, and food delivery business currently generates around 1,700 crore of adjusted EBITDA on an annualized basis as well. In terms of what brokerages are saying about this leadership change, interesting note by Morgan Stanley. They say they've of course maintained overweight with a target price of 320 for Eternal. They're saying that leadership changes at senior level could have a mixed effect on sentiment. Zomato has continued to gain market share despite of multiple changes in their top management and leadership roles, and management changes at senior levels are usually met with mixed emotions. Pessimists may raise concern around multiple leadership changes, but optimists may look at it as a change of strong culture, and of course high performers will get a chance to grow the business as well. And lastly, they've also said that there has been stability at the founder level, and that's what counts actually. So this is the overall view of what's happening with it on now.
Thanks for that, Mahima. And NDTV Profit got an exclusive peek into Hindustan Copper's Malanchkhand mine in Madhya Pradesh. Our correspondent Aishwarya Patil went 450 meters underground to bring you the inner workings of a copper mine and how copper is extracted. Here's a slice of that conversation.
Talk about this open pit, and it's a great view from here, but tell us a little bit about Malanchkhand. It's your flagship pit here, and among the properties that Hindustan Copper owns, this one is the flagship and the largest copper mine that India has also.
Thank you, ma'am. In fact, I'm thankful to you that you have visited the mine, and you were down 400 meters below the surface just now, and just now we have come up. This mine was started in 1982. And now this has produced roughly more than 82 million tons of copper ore. And now this open cast has been stopped, and we have converted this into an underground mine. And the underground production last year was about 2.73 million tons, which was the largest from a mine. And we have got 3 mining sites: Khetri in Rajasthan, Malanchkhand in district Balaghat in Madhya Pradesh, then Ghatshila mines in Jharkhand. The best thing of this Malanchkhand is, although it is remotely located, but the engineers, the mining, the team at Malanchkhand has done a wonderful job in converting this. They call it as a seamless transition from open cast to underground. That is a big achievement for Team HCL, basically the team Malanchkhand, I should say. And copper, as I always say that it is a divine metal, and the metal which you use in EVs, artificial intelligence, cables, wires, it comes from a depth of more than 400 meters down the earth, which we have just witnessed.
What is the life of Malanchkhand? Because it's your flagship, we would like to know how many more years do we have until you can fully mine at full capacity?
The reserves and resource which we have will have, as of now, gives us a life of more than 50 years. With this rate of production, say 5 million tons, more than 50 years. And we are continuously drilling. There are 2 types of drilling operations. One is depth drilling, another is definition drilling, which we do inside. That also adds to our resource and reserves. So Malanchkhand mine has got a life of more than 50 years.
Let's now look at an update from the auto sector. Overall automobile sales in India grew by 4.84% to over 20 lakh vehicles in June versus last year, according to the data from Federation of Automobile Dealers Association. The demand was mainly driven by festival and marriage season. While all segments registered growth with June, financing constraints and shortages of different variants moderated two-wheeler retail sales. According to FADA, the passenger vehicles inventory remains elevated at 53 days. Meanwhile, truck volumes tempered on the back of muted infrastructure demand and new taxation norms. Factors such as rare earth shortages, geopolitical tensions and US tariff spillovers demanded vigilance. FADA President C.S. Vigneshwar said, while there are no supply disruptions on account of rare earth shortage, but the government must move fast to find ways to work with our current major supplier of rare earths.
We haven't seen restrictions as yet from manufacturers. They haven't stopped any supply to dealers. But if these things continue, obviously they are looking at a part bin, which is depleting, which is not great. So the Manufacturers Association, the government probably needs to move fast, find in the near term, find ways to work with our current major supplier. And try building reserves in the medium term and become independent of one particular country in the long term.
The United Arab Emirates has introduced a major policy change to its Golden Visa program, making it much easier and more affordable for Indian professionals to secure lifetime residency. This shift is designed to attract top talent and strengthen economic and cultural ties between the UAE and India, especially following the Comprehensive Economic Partnership agreement signed in 2022. Over 5,000 Indian applicants are expected in the first 3 months of this program. Therefore, to give you a summary of what this entails, how much does it cost, let's begin with understanding what this UAE Golden Visa is. First of all, the UAE Golden Visa is a long-term residency visa, allowing foreign nationals to live in UAE for about 5 to 10 years, but before the nomination, before the nomination-based scheme came into the picture. And this is renewable under certain conditions. The second purpose, the second slide will have the purpose of the UAE Golden Visa, and it's strictly about it encourages foreign investment, it strengthens a skilled workforce, it also supports sectors like real estate, business, culture, and innovation. Now, let's talk about the differences in the traditional Golden Visa and this new nomination-based Golden Visa. The first one is the money that is required. In order to gain the old property-based Golden Visa, you'd had to invest about 4.66 crore in a real estate in UAE. But that changes to 23.3 lakh, just a fee payment that you have to make, and you get no property, you get a visa without any property investment. The second difference is that while the old visa had, was more tailored towards high net worth individuals and, these big investors, this is more grounded. It opens the floor to professionals, educators, YouTubers, and other skilled individuals like you and me. The third one is about the validity, right? When the old visa was just valid for 5 to 10 years and you would be required to renew it based on certain conditions. But this one, once you buy this visa, you can utilize this and you have this valid with you for an entire lifetime. And the fourth one is that the visa ends if property is sold or divided, and this was the old condition. But in this one, you are not required to maintain any asset to continue the validity of your visa. So therefore, let's now talk about the processes involved. And there are 4 key steps. The first step is the fact that Indians can file their applications remotely through One Vasco centers, registered and this or by the registered Rayad Group. This is a consultancy firm that is responsible for your visa applications, and you can also visit their official online portals. The second one is they're going to screen for criminal records. They're going to do a background check into anti-money laundering compliance. They're also going to check your social media presence, and they're going to see how you really maintain your social image. Plus, step 3 would be the assessment of how the applicant might contribute to the economy of UAE, especially through culture, finance, trade, science, or professional services. And the fourth and the last step is basically the fact that applications checked and once approved by the UAE government will, result into you having this visa with you. Moving on. Let's take a look. In a setback for Turkish firm Celebi, the Delhi High Court has junked the company's plea against the revocation of security clearance. Let's go across to my colleague Nupur Dogra for more on this. Nupur, over to you.
Well, yes, in a big setback to the Turkish firm Celebi, the Delhi High Court today has rejected its petition that has in fact challenged the BCAS order that had taken back the security clearances, citing national importance of national security and probable security threat. After there was, remember, there was a Pahalgam attack, and there was, which was followed by India's anti-terror operations, Operation Sindoor. In the wake of Operation Sindoor, the Turkish government had taken certain kind of stand, and citing that particular stand, there was a wide backlash. Remember, there was a wide backlash from across the country against the stance taken by Turkey, and in fact, there were, if you remember, people were also demanding boycott of Turkish services. Now, Celebi is a Turkish firm, and it provides airport services across at least 9 airports in the country. It has moved the High Court saying that this particular order, which had banned it from operating in India, citing as national security threat, were in fact against the principle of natural justice, and they were not given a fair hearing. However, the central government had defended this ban by BCAS and had in fact said that It was, in fact, a precautionary measure given the circumstances of that situation, and it had held its ground that the Solicitor General Tushar Mehta, appearing for centre, had in fact said that better be cautious than be sorry later on, and citing all these intelligence. In fact, they had also cited an intelligence input which had contributed to this ban. Now, the Delhi High Court that had reserved this order in May has today pronounced it, and has now, in a big setback to Turkish firm, has upheld the BCAS decision of banning the Turkish airport services company for some time.
Thank you so much for that, Nupur. And moving on, as the BRICS summit kicks off in Brazil on the 6th of July, US President Trump threatens to impose additional 10% tariffs on this group of developing nations. He says that any country that aligns themselves with the anti-American policies will be met with these additional tariffs. On the other hand, the joint statement from the opening of the BRICS summit condemned the increase in tariffs and attacks on Iran, but refrained from naming US President Donald Trump himself. Last year, the list of BRICS members expanded beyond Brazil, Russia, India, China, and South Africa to include Egypt, Ethiopia, Indonesia, Iran, Saudi Arabia, and the United Arab Emirates. And the countries in the bloc account for more than half of the world's population. The main theme for this year's BRICS summit is strengthening global South cooperation for more inclusive and sustainable governance. Now, to give us an overview on this year's BRICS summit and their joint stance on various geopolitical issues and global trade, let's go across to Anastasia, correspondent RT, who is reporting from Rio in Brazil.
It's only day one of the 17th BRICS summit, and the final joint declaration has been released. And of course, in light of the recent escalation between Iran and Israel, the final declaration condemns Israel's attacks on Iran and calls them a violation of international law. Of course, this is not the only conflict in the Middle East. Israel's war against Hamas has also been touched upon, with joint declarations stating that BRICS condemns Israeli attacks on Gaza and called for an immediate ceasefire and full humanitarian access. Plus, the declaration states that Gaza is an inseparable part of the Palestinian territory, reaffirming the Palestinian people have the right for self-determination. BRICS also strongly condemns all terrorism, including the terrorist attacks in India's Jammu and Kashmir earlier in April of this year, and urges justice for those responsible without linking terrorism to any religion group. BRICS also welcomes the Lebanon ceasefire and calls for sovereignty of Lebanon and Syria, and of course urges Israel to withdraw its forces from the Syrian territory. With
that, viewers, that's all the time we had on this edition of Profit 360, but do stay tuned to NDTV Profit for more news and updates.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़, और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India,
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
We're in the heart of the Kanha National Forest in Madhya Pradesh, and NDTV Profit is headed to India's largest copper mine. Here's a sneak peek. I think it's about time my copper bottle finds its origin. The ore extracted from the Malanjkhand copper mine is brought to the crushing unit, where of course over 7,500 tons is processed per day, from that coarse ore to fine copper concentrate. We've reached about 410 meters inside the mine. It's now time to get off and take a look at what's happening here as well. We're over 400 meters inside the Malanjkhand copper mines. So you were showing us something which is very interesting, and how everything is excavated. So if you could identify.
I just wanted to mention you, see how the copper is shining and this shine makes it called as a fool's gold. And this comes in these white rocks which you are seeing is quartz. It's very hard and it consumes lot of energy in crushing, milling and beneficiation to segregate this thin seams, very thin veins of copper from this hard rock, and that's why we call it as a hard rock mining also. So these operations are very difficult. As you have rightly mentioned, we are below more than 400 meters, around 450 meters from the surface. So the extraction mining operations are one of the most difficult. With these geomining conditions, you are seeing the water seepage, you are seeing this, and with these geomining conditions, my people, SCL team is mining copper from this mine.
Talk about this open pit, and it's a great view from here, but tell us a little bit about Malanjkhand. It's your flagship pit here, and among the properties that Hindustan Copper owns, this one is the flagship and the largest copper mine that India has also.
Thank you, ma'am. In fact, I'm thankful to you that you have visited the mine, and you were down 400 meters below the surface just now, and just now we have come up. This mine was started in 1982, and now this has produced roughly more than 82 million tons of copper ore, and now this open cast has been stopped and we have converted this into an underground mine. And the underground production last year was about 2.73 million tons, which was the largest from a mine. And we have got 3 mining sites: Khetri in Rajasthan, Malanjkhand in district Balaghat in Madhya Pradesh, then Ghatshila mines in Jharkhand. The best thing of this Malanjkhand is, although it is remotely located, but the engineers, the mining, the team at Malanjkhand has done a wonderful job in converting this. They call it as a seamless transition from open cast to underground. That is a big achievement for Team SCL, basically the team Malanjkhand, I should say. And copper, as I always say that it is a divine metal, and the metal which you use in EVs, artificial intelligence, cables, wires, it comes from a depth of more than 400 meters down the earth, which we have just witnessed.
What is the life of Malanjkhand? Because it's your flagship, we would like to know how many more years do we have until you can fully mine at full capacity?
The reserves and resource which we have will have, as of now, gives us a life of more than 50 years. With this rate of production, say 5 million tons, more than 50 years. And we are continuously drilling. There are two types of drilling operations. One is depth drilling, another is definition drilling, which we do inside. That also adds to our resource and reserves. So Malanjkhand mine has got a life of more than 50 years.
So we did have an opportunity to look at your 2030 target and milestone as well. If you could talk about along with that target that you have for Malanjkhand, which is about 5 MTPA, right?
5 million.
Yes. So if that is your target in terms of revenue, capex, what are you aiming at until 2030? Where do you think you will stand at? And how are you looking at funding this capex also across the board for HCL?
See, the capex which we have planned for coming 5 years is 2,000 crores for overall HCL. Overall HCL, and majority of that 70-75% will come down to Malanjkhand, roughly. And as far as production targets, as I mentioned, it will be roughly about 5 million tons, say from 30-31.
Only from Malanjkhand?
Only from Malanjkhand.
And overall HCL would be?
It will be about 12 million tons because we are going to start our closed mines in Ghatshila. That will add to our kitty. Then Malanjkhand itself is expanding. Khetri is also expanding. So if you, in totality, if you join all these three, capacity expansion as well as reopening of closed mines will be about 12 million tons in 30-31.
So, in terms of revenue, do you have a target for 2030 overall for HCL?
No, that's difficult to take
because
because see, my revenues, they depend on the copper prices, which are quite volatile in nature, and that I will not comment on that.
Right, but we are looking at the Maharatna status, which is why I asked that question.
We are going to vie for Navaratna first of all. My all team members who are here, whom you have met, have got only one thing in focus. We have to become Navaratna as early as possible. Next year, most probably, we'll be applying for that, and we qualify for all parameters. The only one parameter, that is the salary and wages part, is slightly alarming. We'll take, see, because if we enhance the production with the same manpower, your cost per tonne comes down. So we are focusing on that.
In terms of expansion, sir, any contracts that you have signed with any other companies that you have already partnered with? 2030 expansion ke liye, what kind of partnerships have you made?
All my contracts as far as running a mine is concerned, they are in place. They are already, and even if they expire within this, say between 5 to 6 years, within the period, we'll plan it accordingly. Normally, we plan 1 year in advance when our contract is going to finish.
As far as the deal pipeline or say not deal pipeline per se, but bid pipeline is concerned, Rajasthan, you're looking at few of the bids as well. So if you could talk a little bit about that.
We are not looking only at Rajasthan. Any blocks which are coming from Ministry of Mines also and respective states, Rajasthan, MP or Odisha, not only copper but even of critical minerals, we are going to vouch for them. We'll participate in the auctions.
So you're looking at producing beyond copper also?
Yes, ma'am. It's copper and critical minerals.
Since you're speaking of critical minerals, considering what's happening with China and the rare earth mineral situation, how do you look at this whole situation, and how is India poised to benefit from this?
In fact, our government is taking sufficient actions on this. The roadmap is being prepared. All the companies are in search of this rare earth and critical minerals. We are even searching in new proposals also. GSI is drilling quite fast, bringing up some blocks of rare earth and all that. So we are moving ahead. The government is taking good actions on this.
So just on timelines for Navaratna status, when do you expect to achieve that?
See, exact timeline I can't mention, but now we are ready for that. That's a big thing. Na? See, if you are ready for applying that itself is the first step. The second step is that you have to maintain the continuity of what you are doing, isn't it? You have to maintain your status, excellent or very good at least, and then all the parameters which are there in the revenue operations and all that, whatever parameters have been assigned by the government of India, you have to maintain. Then automatically things will move in a positive direction. So at least we should start that. Rather, we have started. If you ask any employee of Hindustan Copper, they will say now we are trying for Navratna.
Wishing the team all the best for that. Moving on, if you could talk a little bit about India's import dependence on copper. Although we are sourcing about 70 to 80% from Hindustan Copper itself, and Malanj Khand being the flagship one, there are certain gaps. How do you aim to address that and ramp up further from here?
See, as you might be aware, we have got only 2% of the global reserves in India. Obviously, Malanj Khand produces 70% of our production, but thing is that we are able to fulfill only 5% of the country's need. Rest is being imported. So the only option left with us is to ramp up the production as fast as possible, so that this 5% can enhance to 6%, can become 7%. And we are moving in that direction. You have seen it with your own eyes. You have seen the things are in places, and we are moving ahead in that direction.
So by 2030, import dependence should come down to how much?
See how much it can come, because your demand will also increase. It's not that the demand remains constant. Maybe that we are still 5%, or maybe we become 4% also if your demand increases sharply. It all depends on the demand of the country's need.
So partnerships, recent ones if we speak about, and the MOU that you've signed with Codelco, if you could talk a little bit about that. We did have the opportunity, thanks to you, to meet the leadership team as well yesterday. Knowledge sharing and manpower is what you have spoken of. Talk to us a little bit about what's happening there.
In fact, I'll just like to explain more on that. This MOU with Codelco has happened with the full support of my ministry, particularly my secretary, my Ministry of Mines. They have backed Hindustan Copper like anything. In fact, in reopening of all the mines, the support which we need from the government we are getting. So I'm thankful to the government of India. They're pushing it up, and these MOUs, in the morning I said, they are divine alliances for Hindustan Copper, because copper is a divine metal, number one. With this, we will explore more and more copper within our leases beyond a depth of 1 kilometer. Codelco is going to help us in that depth exploration. Secondly, they are going to train our people, bring in global practices. That will start within a month or so. And then the third one, which I mentioned about the MOU part, will form a joint venture company and all that. That is a little bit not very clear. That will be clear only when we have further discussions with Codelco.
Yeah. But our teams from India will also be visiting Codelco in the future, and there are few more mines that you will review. So what's the expectation through?
Presently, we have visited there only one mine, that is El Tenete, about 100 kilometers down of Santiago. They have got many mines in Chile. So yesterday evening they had already made a request that they will send it. We'll chalk the program. We'll discuss with the ministry also. We'll prepare a roadmap for that.
So you spoke about the demand picture. If you could, at this point and at this juncture, manufacturing, EVs, semiconductors, a whole lot of things, and you also mentioned AI, that copper will play a critical role in this kind of development that India is looking at, especially making in India. What's the demand picture looking like?
See, exact demand, I won't be able to say, but you see, whatever the demand is of the country, we are able to fulfill only that 4-5%, which I mentioned earlier also. But this AI, the enhancement of AI, coming off of data centers, they have suddenly increased the demand of copper to a greater extent.
So when you mean we will look at other rare earth expanding in other areas beyond copper, what other rare earth or minerals are we talking about?
See, rare earth minerals are a group of minerals which have already been classified. It can be...
but specific?
No, nothing specific. Whatever we may get, we'll mine it out. Because that is a strategic mineral, so it doesn't depend on the return or anything. We have to mine it out at any cost. In fact, I would like to tell you, these OB dumps which you are seeing here, we have tested them also, whether there is anything in that also. In fact, we tested them and whether there is any other mineral other than copper also. My unit did it last year itself, and now every quarterly we are testing these OB dumps and my places of working, my tailings. We are continuously testing if we get anything else apart from copper.
So since NDTV Profit is a market-driven channel, one question that most investors want to know also is that HCL has been kind of delaying its target over the years, last couple of years. That's been a concern for shareholders and those who have invested in the market. What's your response to that?
See, the reason was that we could not reopen the mines. Now the clearances are coming. You know very well, Jharkhand government is supporting us. They have given the lease deed extension for those 2 mines. The second step to get the clearance from Forest Department. Third one is EC, and the fourth one is lease deed. These are all moving in. Right. Earlier, we could not get the statutory clearances. Now we are on the path of getting these statutory clearances. This you know from the media also, from my statements also. The government, the Ministry of Mines is helping us like anything. They are pursuing it at MOEF level, state level, everywhere the Ministry of Mines is with us. So things are now moving. That's why I can say, see, if these mines could have been reopened in time, we could have added. Because opening up of a new copper mine takes 10 to 12 years. But if you reopen a closed mine, immediately you can get the production from that. That's why we are betting big on the Jharkhand mines.
Hope the message reaches the shareholders. So one final question. Private players for a very long time have been eyeing HCL, even Vedanta for that matter. A lot of times they have hinted at looking at HCL as probably a stake or an acquisition as well. What has been your view on that, and have there been such talks in the past for private players to step in, such as Vedanta?
Ma'am, as I said, copper is a divine metal. Government is supporting us at all steps, I should say, from statutory clearances till start of mining operations. And as far as those things, I'm not fully aware of that.
Copper concentrate of 27% is the star ingredient that goes into the final product, the illustrious metal of copper. This is Aishwarya Patil from the Malanchkhand copper mines in Madhya Pradesh with our VJ Vishal.
Saurabh Mukherjee joins in. He's founder and CIO of Marcellus Investment Managers. Saurabh, great to have you back on after a while. So good to speak to you once again on NDTV Profit. I mean, what do you make of this trade deal? No trade. Are you going to be staying up later tonight to see if India's got a letter, or is that not something that you don't think matters too much in the larger scheme of things?
I'm pretty confident we will get a trade deal. There will be an India-America FTA, I'm sure.
Yeah. Yeah. As a factor for the market, how crucial do you think it is?
I think by and large the market has baked in the fact that there will be an FTA. If there isn't an FTA for some reason, and as I said, I expect the FTA to happen. In case the free trade agreement doesn't fructify, you'd expect to see a pullback in the market. But everybody I've spoken to in India over the last month, everybody fully expects the FTA to kick in, and rightly so.
So once the FTA kicks in, if that is the expectation, what should your portfolio then look like? What would you advise investors to do at this current juncture, taking a trade deal into consideration?
So one of the things I've been telling all our clients to do over the last year or so is diversify away from the Indian market. I think the Indian market has done extremely well over the last 5 years. It's one of the best performing markets in the world over the last 5 years. But it is expensive and the economy is slowing down. And I think the chances of the rupee depreciating over the next couple of years are pretty high. Given that we are signing FTAs with developed markets like the UK, most likely America in the next few hours, given that we are signing these FTAs, I think the currency will have to depreciate appreciate to maintain India's competitiveness. Remember, China is constantly devaluing its currency. Given that China is constantly devaluing its currency, I think the chances of the rupee having to devalue are going up by the passing day. In that context, given that valuations are rich in India, given that the economy has slowed down, I think it makes a great deal of sense to diversify away from India. And with that in mind, 3 years ago, we launched our global compounders product. Thankfully, it's compounded at 25%. But given that the FTA is around the corner, given that the chances of rupee depreciation are growing, I would think diversifying away from India makes a lot of sense, especially in light of this FTA.
Okay, so if you're saying diversify away from India, where would your bets be? Because this has to be taken into consideration sort of from a retail investor's perspective as well,
Absolutely.
right? So when you talk about a non-Indian portfolio, that becomes slightly tricky when you're talking to a retail guy.
So a lot of credit to all our brokers. I think almost all the brokers in our country have actually made it very easy for the Indian retail investor to access global markets, especially the US market. I'm pretty sure every single brokerage app on your viewers' phones now has access to the global markets embedded in the phone. It's become pretty easy to access global markets, and also credit to our regulators. I think the regulatory ecosystem has also made global access cheap, cost efficient. Now, where should an investor go? Where should a retail investor or a family office in India go? The logical place to go, I think, is European and American small and mid caps. American large caps, global large caps are still pretty expensive. Stocks like Nvidia are still pretty expensive, but small caps in the Western world, especially small caps in America, are trading at their deepest discount to large caps in a quarter of a century. So the contrast is enormous. Indian small caps trading at the richest valuations in this century. American small caps growing earnings twice as fast, but trading at their biggest discount to American large caps in a quarter of a century. And I think that's a straightforward trade. Switch out of Indian small caps, switch into American small caps. And as I said, the infrastructure is there. Everybody who's watching this, look at your broking apps. I'm sure you'll find access to the American market embedded in your broking app.
Oh, the access is there, Saurabh. Just, curious to know what the thought behind is, because it's contrarian to what we're hearing from everyone else. And the large conversation is India bright spot, relatively
That's
unscathed.
Not see, most Indian fund managers have rung the alarm bell on small caps over the last year, right? Every Indian fund manager I speak to has rung the alarm bell on Indian small caps a long time ago, right? Honestly, you don't have to be an institutional investor or a fund manager to see the risks in Indian small caps. As I said, valuations are rich in Indian small caps, some of the highest valuations ever seen in small cap in our country. The economic slowdown is in front of everybody. The earnings slowdown, more importantly, the earnings slowdown is in front of everybody. Therefore, the risks are elevated, right? You've got rich valuations and you've got a small cap earnings slowdown. So I think several fund managers have rung the alarm bell. The question, the extra point I'm making is, rather than selling Indian small caps and going into cash, diversify into the market with which India has the lowest correlation. So India and America, amongst the world's big markets, India and America have the lowest correlation. Other than exigencies like COVID and Lehman Brothers, other than exigencies like that, global catastrophes, the correlation between the two markets is low because their political cycle, their financial cycle is different from ours. And therefore, if you diversify out of a richly valued market, Indian small caps, into a less richly valued market, US small caps, you stand to benefit.
Okay, I got that. Come out of small caps. As themes, what are you liking right now, Saurabh? We're having an interesting day where, there is a wait and watch on trade deal, consumer stocks are doing well. But frankly, the big theme right now is IPOs and the primary markets are buzzing. Is there anything interesting there that you see that is worth biting into from the perspective of our viewers? Or are you looking at all of this influx of paper with a hint of suspicion?
So IPOs and retail investors is not a particularly happy combination in any country, right? It's not just India. There's massive information asymmetry. The company has all the information. The company is using its information to issue shares at the top of a bull market, and the retail investor hardly has any information, right? So it's information asymmetry of a high sort. And I think the data is pretty clear. In this bull run, in the last 5 years, retail investors would have barely made money from, say, 1 in 5 IPOs, the long-term track record is even worse. At least in this bull run, retail investors would have made money from 1 in 5 IPOs. I think the 20, 30-year track record would be 1 in 20 IPOs, right? And that's pretty evident. That's exactly how it should be. Since the company is going public, they hold all the cards, they hold all the aces. The retail investor is someone who's relatively uninformed. From that perspective, if someone's insistent that I want to invest in the Indian market, then look at large cap quality. Large cap quality is at an awful 5 years. I know because I invest in large cap quality. Large cap quality is an awful 5 years. But as the economy is slowing down in our country, large cap quality is resurfacing, right? An example being HDFC Bank. So I must have spent many years on your programs justifying our investment in HDFC Bank. We hardly made any money on it through 2021, 22, 23. It's only in the last 12 months that our HDFC Bank investment has borne fruit. And that's exactly as you'd expect. As the economy slows down, investors are migrating from lower quality financials, lower quality banks towards the champion play in the sector. And this sort of phenomenon, I think, will carry on over the next couple of years. As the economy slows down, champion franchises, large cap quality will come to the fore. So if you want to invest in India, then focus on large cap quality. And I make it very clear that I have been invested pretty much all my life in large quality. So have my parents and so have our clients. That's the theme I think I can see working. It'll protect your capital. It'll also give you, I think, decent returns over the next 2-3 years.
जनता के पास सवाल ही सवाल है। जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, quite a bit of this conversation has to do with planning for the future, and sometimes that becomes hard to do. If you don't know exactly what you're saving towards, then how do you know how much to save? For example, if you're a young couple with a 3-year-old child, you don't know what that child is going to do eventually. They could be the next great painter, or they could be an astronaut, or they might want to study finance. Who knows? And so how do you determine how to go about your major goals? We're going to talk about this in a scenario building exercise today on Your Money Matters. My guest today is Abhishek Dev, the co-founder and Chief Executive Officer of Epsilon Money. Thanks so much, Abhishek, for taking the time. Let's start by talking about this concept, right? Because a lot of people say you must save towards goals, but equally, there are other people that say if you don't know what your goals are going to be, you don't know what tomorrow is going to bring, shouldn't the objective be to save as much as you can while you can, and then worry about the individual goals down the road?
Sure. Thanks, Alex, for having me. Thank you for that. Look, there are different school of thoughts on this. You know, the traditional thinking has been save as much as you can. And you know, see how it goes. In India, we have a very strong savings mentality traditionally. For ages, we have saved 30 to 50% of our income. That's going down now with changing times. The consumption is taking over, but still we save quite a bit compared to, let's say, developed markets. Now, what happens if you don't plan as an investment advisor? We focus a lot on goal-based planning. And why is that? Because what happens if you don't plan and you leave things to chance, you may end up overspending on goals which come first, which invariably means that for a very important goal which comes last, which is your retirement, we are most unprepared, and that's what is happening with our society today. If you see, you know, the working class, people like us, if we don't plan separately for retirement, the goal which comes last in our planning, and you end up, you know, let's say, overspending on your child's marriage, education. They are very emotional goals. You end up overspending, you know, as the kind of people we are. You don't have enough money for retirement, which means you end up working much longer than you want to, and assuming that you still have a job, else you'll have a very uncomfortable retirement.
So I just want to get into a scenario where, and I started the conversation with that. Let's assume that we're talking about a 35-year-old couple with a 3-year-old child, which I think is a pretty average household. And for the purposes of this conversation and the scenario that you've built out, you've talked about an income of 3 lakh rupees cumulatively. You're talking about monthly expenses of about 1.5 lakh rupees. So you're talking about a couple that is in a metro city. And of course, by the way, if these numbers sound a little high to you, then bear in mind that this is just an example, and you work out where you fit in the scale. You might actually be earning more than this, or you might be earning less. But you can work out over the course of this conversation what the calculation comes to. So we're talking about goals that they have in mind. So they've planned for 3 goals. They've talked about their child's education 15 years down the line. They've talked about retirement 25 years down the line, because they're 35 right now. Right. And they talked about buying a house, which they don't currently have. So that 1.5 lakhs actually includes a pretty substantial amount of rent, which could go away 10 years down the line. So how do we work out a scenario here?
Sure. So look at this couple, 35-year-old, have been working for about 10 years. Double income, 1 kid, 3-year-old. A very major goal for them is to give their child the best chance of success, right? Which means they want to get the best education for their child. Being in a metro city, let's say they are able to send their child to a good school. They have thought of 1 crore for the higher education for the child.
Right now?
Right now, on today's price for a 4-year education.
Sure.
Right? So that's one goal that they have. They need to allocate towards that. They want to buy a house. They want to avoid taking a loan, if possible, 10 years down the line. They're not in a hurry to buy. But 10 years down the line, they want to have their own house well before they retire. So the retirement doesn't have to be worried about the rent, right? And the third goal that they have, very important, I keep saying this is the most important goal anyone can have, is a comfortable retirement. Because that's what you work towards all your life, right? And as the families become micro, that whole system of, you know, a big household supporting an individual is kind of evaporating.
Yes.
So you need to plan your own retirement, right?
And how much have we estimated that they need based on that 1.5 lakh expenses?
1.5, yeah. So they want to maintain their current lifestyle. They spend about 1.5 today. The rental cost will go down, medical cost will go up, etc., etc.
Yeah.
So
and they'll live in their own home, hopefully.
Exactly. So give or take, let's say they want to spend that 1.5, they'll travel more.
Yeah.
Right? So that 1.5 has to be maintained. Now 1.5 today is not 1.5 25 years down the line. So if you do a very simple 6% inflation, that 1.5 per month becomes 6.4 lakh per month. Right? So they need to plan accordingly. Before we get into any planning, the most important thing is working couple. Life is full of uncertainty, right? You keep something aside
for your emergencies.
For your emergency need. So they've got about 1 crore saved up, plus whatever they got from their families, from the parents. So about 1 crore is there. The first thing you do is take out 6 months of your expenses, keep it in a safe place.
Sure.
A fixed deposit, a liquid fund, wherever you can keep it, right? So that's about 18 lakh. We allocate it first.
Yeah.
Then you start planning for your child's education. Now you spend 1.5, you also save 1.5. Now for the child's education, which is 15 years down the line, the child is 3-year-old now, will go to the higher education at 18. You do it in 2 stages because your risk profile changes over time. The longer the goal, the more risk you can take. As you get closer to the goal, your risk-taking ability reduces because you want to preserve what you have earned. And then your portfolio kind of changes, your expected return changes, right?
So you do a 10-year, first you do a 10-year
10-year
SIP,
plan.
and then you switch it out. And how do you construct this 10-year SIP?
So what we do, we are assuming that they grow their income by about 8% per year.
Or 5% per year.
5%, let's say.
And so you increment the SIP as well, right?
Increment the SIP. Let's say you increment by 3%.
Which is a safe assumption to make. So even if you grow at 5%, you're going to be able to increment by 3%.
By about 3%, right? So every month, every year you increase your SIP amount by 3%.
Yeah.
Now what do you do? Out of the 1 crore saved up, you put 15 lakh as a lump sum investment for the child's goal, child's education. Then you start a SIP of about 42,000 per month, which every year goes up by 3%.
Sure.
This, and we run our mean variance optimization based model portfolio, moderately aggressive risk profile. We start with about 70-30 kind of portfolio.
70 towards equity, 30 towards
fixed income and commodities.
Right?
We achieve it through funds, which we'll talk about later.
And we'll talk about that, yeah. So how much does that net you in 10 years?
So that in 10 years takes you to an amount of about 1.5-ish crore. And then you moderate the portfolio, your SIP continues now.
And you flip it.
And you flip it. So now your SIP becomes 56,400 because you started at 42, is growing at 3% every year. Now you're investing 56,000, which continues to go up every year for the next 5 years, right? And your lump sum amount, the SIP that we have saved so far, becomes your lump sum today. So that remains invested. Now you change your portfolio to more conservative. Let's say about a 70-30 on the other side.
Sure.
More fixed income, less equities. And you continue to invest through that. That nets you about close to 3 crore, 2.95 crore all in.
Which is how much, which is more than you would need.
Which is more than you need. So even if you take 1 crore today, take a 6% inflation. Now, inflation is something, we have different opinion. But let's assume 6%. You need 2.4 crore at the end of 15 years.
So it's a sizable buffer, 60 lakhs.
Buffer, 50-60 lakh of buffer that you create by doing this. And you're assuming a 12% return at the beginning for 10 years. You're assuming a 10%. Given the rate of returns we have been generating in our economy, this is a
conservative estimate.
Conservative, reasonable estimate.
What about the house?
Then you come to the house, right? Now you used your 15 lakh out of your savings towards the child's education lump sum. You have kept aside 18 lakh so that your emergency needs are met just in case. Now you take out about, let's say, 48 lakh. You need the house in 10 years. You don't want to, the house cost you about, let's say, 1.5 crore today. Right? Now that house at 6% will cost you close to 3 crore, 2.7 crore, give or take, right? You take this 48 lakh, put it down, invest in a model portfolio that we will talk about. And this is a 10-year goal. It's a bullet payment. There is no, systematic or slow withdrawals you'll do, right? And then you do a SIP of about 44,000 per month. Again, you grow it by 3% per year because that's your ability to grow, right? This will take you to about 2.7 crore, very close to the goal, that you have in mind. So 1.5 crore
And that's also
house,
at 12%.
That's also at 12%. Assuming a 12% growth, you get there. Now the third and the most important goal is your
retirement, right?
Out of the savings you had so far, you've got about 20 lakh left. You allocate it in a different portfolio, which is for your retirement.
Sure,
It's
and
a
that's
retirement
25 years.
portfolio. Yeah. Then you add an SIP of about 52,500 per month.
Okay,
right?
and so that takes your total amount to about 1.4 lakhs.
1.4 lakhs, right? You spend 1.5, keep 10,000 as a, you unforeseen expenses per month. That happens, right? About 1.4 lakh you use for the SIP. So 52,500. Again, it grows at 3% per year. So the SIP amount grows. What you need at 1.5 lakh rupees expenses, 25 years down the line.
6.4 lakhs.
Is about 6.4 lakh per month at the start of your retirement. It continues to grow. Now, if you do a full calculation, you assume that you live till 80, and you can argue we want to live till 100, let's say, but let's, for this calculation, assume we are living till 80. In those 20 years, with this kind of inflation, you will end up using about 15 crore. What you need is for those 20 years is about 15 crore, starting with 6.5 lakh and growing. Now, by doing this, you actually achieve about 15.7 crore.
Nice. So you're more than and the allocation of this equity fixed income over 25 years?
We start with about 75-25. When you get into retirement, you flip it to about 21-22% equity, because now your goal is income. Now, don't forget, you created a corpus. When I say you need 15 crore, it's not that you're using up everything. You've created a corpus, you're using money from that, but whatever is there is still growing. Let's say it's growing at 8%.
Sure.
Your inflation is still 6%. You still make 2% net returns on the corpus you have created, minus any money that you take out at a much higher.
And we're making assumptions at this stage. One can assume that in 20 years the inflation rate might be different, and so you can readjust at that point.
You need to.
But having said that, let's get into the nitty-gritties of how you would allocate the SIPs that we've talked about, because at this stage you've said, at this moment, assuming that you have 1.4 lakhs that you need to invest starting next month.
Right.
How many SIPs do you need? How many schemes do you look at?
So look, asset allocation and diversification is a very interesting topic. We can, use up a whole hour for that, maybe in a different meeting. As I said, we use the strategic asset allocation model that we have, and we overlay with tactical. So let's start with the child's education. We start with an asset allocation of 71-29. 71 equities, mostly large cap to start with. Our ending allocation, when we become more conservative, is about 30% equity and balance into debt and cash. Now, to fulfill this, we get into mutual funds, right? And the funds that we choose are the funds, which give us this particular allocation through a look-through. Now, we are looking at one large cap fund